Half an hour. Perfect. Thanks.
29 minutes, basically. Yeah.
Awesome.
Oh, sorry, Anka. Yeah. Okay, you should be able to record now. Okay. Okay, it's right at 10 o'clock. Are you ready to start?
I am. Let's do it.
Okay. All right, I'm gonna just double checking everything here one last time. All right, and then I'm gonna start the recording and then do a quick introduction and then turn it over to you.
Okay.
All right, I'm recording now. All right, hi everyone. Welcome to this uh, Analyze Your Trade number 227 for June 12th, 2026. We have a full day of live chart analysis for you. Um, and just a reminder, all of these presentations are for educational purposes only. Trading is not suitable for all people. And please consult a financial advisor and only trade with money you can afford to lose. All of these sessions are being recorded individually and also live streamed to YouTube. So the whole event is archived instantly, and then the individual recordings will be available as soon as I can get them processed. And they'll be on YouTube and on the Time and Research website. So to open the day for us is Matt Buckley. And Matt, I'm going to turn it over to you.
Awesome, David. I appreciate it. All right, folks, let's go ahead and throttle up and get airborne. My God, SpaceX sucking the oxygen out of the room right now. We can, well, I'll lead off with a little SpaceX, and suffice to say, don't do anything. Remember, folks, for every buyer, there's a seller. So there, a lot of people are gonna, obviously Elon Musk becomes a trillionaire this morning or noon or whenever they start trading, and a bunch of people are going to become billionaires, employee number 1 through 4, and all sorts of stuff. So good on them. I love it. Love the American dream. Wait for the dust to settle. I posted this last night in my member area. This chart is why I'm staying away from the SpaceX IPO. Five of the most hyped IPOs in the last 15 years. What happened to every single one of them after the listing? Let me just show you the chart since we're in a chart brief first. Meta, Uber, Rivian, Robinhood, Coinbase. Does anybody see a trend? It's comical. Now, leave it to Elon Musk and SpaceX to be the one that bucked the trend, but I doubt it. Uber lost 70% of its IPO price. Meta 77, Robinhood 92, Coinbase 93, Rivian 95. The hype is always priced in on day one. The people who bought the hype got crushed. Look where the real money was made at the bottom when nobody wanted these stocks. I don't know if nobody's going to want SpaceX, obviously, but it's obviously the most IPO of the decade. History tells me I don't need to be there day one. So, and oh, by the way, I'm an options trader, man. I'm waiting for them to come out with the options chain. Was it SpaceX? So I can, buy some puts. Who said that? That's a great point. Let me get the names here. Doug, great point. What about the halo effect, right? Well, yeah, there can be some halo effect and some afterglow or current glow into other names. But there's also what? A vacuum effect in some of the other names, right? NVIDIA, Broadcom, all these other high flying AI names have been taking a beating lately. Look at Broadcom from essentially $500 to 375, or Nvidia. So there has been even Bitcoin. I'm not a Bitcoin Scientologist, It's pixie dust to me. But there's been a lot of capital rotated out of some strong names, obviously to fund this SpaceX stuff. So I'm going to eat some popcorn today and enjoy it and watch it. But that's not what I want to talk about. But it's a good point about the halo effect. Let's look at a chart. And the chart that I want to look at is the S&P 500, man. So, and why? Ladies and gentlemen, what does the S&P 500 tend to do over time? Now, in a tactical sense right now, let's just laugh. It's not funny, to be honest with you. Combat, as David alluded to, I'm a former Navy fighter pilot. I flew combat sorties over Iraq, went to Top Gun. I deployed on the Abraham Lincoln. It's the boat sitting there right now. I've gone through the Strait of Hormuz. My oldest son is on active duty in the Air Force. He's deployed right now. So it's not funny. Here's what I'm getting at, though, is Trump. It's not funny at all what's going on. But if you trade, well, and I don't care if you love or hate the guy, and if you hate anybody, you got problems. But when Trump jawbones the market, bet against him at your peril. Did you not see the S&P 500 yesterday, man? It ripped up 2% after imploding. But here's what we got to talk about. So this was a True Social post the guy just sent out because I ran last night and this morning said, yeah, this is the guy's lying. There is no deal. He agreed to give everything. We can keep our nukes and run the Strait of Hormuz. And then Trump just posted this a couple minutes ago. We have to talk about this because it's impacting the market. The terms that Iran leaked out to the fake news have nothing to do with the terms that were agreed to in writing. What they said, including their weak and pathetic statement on having a deal, bears no relation to the truth. Very dishonorable people to deal with. Mr. President, are you new? Like, are you new? These are radical Islamic terrorists that have killed thousands of American servicemen and women over the past 47 years. You're just fine. These ain't Manhattan real estate developers you're negotiating with. With them, there's no such thing as dealing in good faith. Amazing. Also, they're totally rebuffed. Drone attack last night, they fired against some Indian ships. But ladies and gentlemen, I want to talk about the S&P 500. I'm going to age myself right now. I've been doing this since 1991. Okay, over 30 years doing this. What direction does because that pullback was a gift. And let me show you a 2-year chart of the S&P 500. Does anybody notice something with the S&P 500? This pullback and this pullback, and technically that one, are all what? Trump induced. Folks, this was the tariff war, right? He woke up one day and said, it's Liberation Day, Liberation Day. I'm leveling tariffs against everybody, tariffs for all my friends. We imploded. That was self-inflicted. Epic fury, the mullahs got to go. Boom. And then this stuff. What am I getting at? Folks, take out this, and markets tend to move up and to the right. Let's take a look at a 5-year chart. Man, I don't want to age myself. I can take a look at a chart since 1991. It's not a straight line. From January 1st, essentially, in Joe Biden in 2022 through October, the S&P imploded 25%, right? Yeah, everybody remember 9.1% inflation. But even that ended up being a buying opportunity. I want to show you the one chart that you should really care about because it is funny seeing all the people on social media like, uh-oh, AI, echoes of the dot-com boom or the financial crisis, and we're all going to implode and bad things are going to happen. AI bubble. I'm here to tell you they have no idea what they're talking about. This is the only chart that matters. Let's do a little history lesson. There's the dot-com boom I can't believe I'm going to say this, at the turn of the century. Ladies and gentlemen, at the turn of the century, we had a dot-com boom. Look at the blue line, ladies and gentlemen, is the Federal Reserve. $500 billion on their balance sheet. Nothing. What happened during the financial crisis? Nothing. Things were allowed to fail. I started Wiz.com. What do? Nothing. I just threw a .com after my name. Here's $1 trillion, right? It was stupid. But the Fed didn't get involved, did they? We recovered. And then, ladies and gentlemen, I was at ground zero. I was in the Chicago Board of Trade, and the CBOT, Chicago Board, or CBOE, Chicago Board Options Exchange, when that happened. What's GFC? Golden Fried Chicken? No, global financial crisis. And what happened? I was sitting at the Options News Network desk. We would shoot on the floor of the CBO and the CBOT, and I said, "What? Don't do it. Don't do what?" George Bush and Paulson, his treasury, remember his Treasury Secretary? He ran Goldman Sachs. He ran into the Oval Office and said, "Man, Mr. President, if we don't bail out Wall Street, cats and dogs living together, mass hysteria. Everything's going to fail. Banks will fail. Our country implodes." They jumped in to save capitalism. If you have to jump in to save capitalism, the government or the Fed, it ain't capitalism. What happened? TARP, Troubled Asset Relief Program. And then the markets needed more money. Then what did they do? They went back to a whiteboard and said, "Give me other cool sounding names." Quantitative easing. One. Well, no, we need more money. Oh, well, then two. And we need more. Three. Four. Ladies and gentlemen. And then what happened during the scandemic, the pandemic? Jerome Powell dropped the biggest financial nuke known to man. Ladies and gentlemen, at the peak of the Biden bear market, $9 trillion. So for all you out there, the doomers and the boomers and the oh my God.com, this ain't stop. Do any of you trade with a broker who lets you trade off the left side of a chart? Where do we make money? Off the right side, baby. And I don't care. I just left yoga. I'm going to hit the gym later today. I do 2 a days. I'm not strong enough to fight the Fed. And I mean, that's my crude drawing. Let me just show you like a legit one with all the math on it and the true names. So the red line is the Fed's balance sheet. And that line, the black line is the S&P 500. So stop with the oh my God, it's .com boom. All that type of stuff makes zero sense, ladies and gentlemen. Don't fight the Fed. So the chart I want you all to focus on today ain't SpaceX. You can go watch it and eat some popcorn and enjoy, the theater. But this is a buying opportunity of a lifetime. Okay. Now, I run a company called Top Gun Options. Big marketing arm when I started it, right? I'm a Top Gun graduate. I trade options. Here's what I want to show you. I'm going to pull up SPX. I don't trade SPY. Why? Because I get better tax treatment trading an index than I do in ETF. I'm not your tax accountant. I'm not your tax attorney. I don't play one on TV, but go talk to your broker, your accountant, and I could probably saved you a lot of money giving you a heads up. Don't ever trade SPY again. And by the way, SPX settles in what? Cash. SPY settles in shares. So if you goon up an options trade, you could wake up one morning short shares in your account or long shares in your account. I don't trade it. But look how far into the future, ladies and gentlemen, we can go in our time machine out to December of 2031. That's 5 years into the future. Okay, I'm going to select that. Let me show you another picture real quick because these are my projections. Where's SPX? I did a lot of math recently, and I'm a political science major from South Jersey, but I had smarter people than me check it. Here is my uber bullish case. Okay, write these not, or I'll give you access to this report in a couple minutes. But folks, I believe out to 2031, 2032, we could hit 22 grand on the S&P 500. What's the green line? That's my base case, like average of about a 15% return. What's the blue line, Wiz? Base 10% a year. And then my bearish is if we just kind of stay flat or have some recessions or bear markets, about 8,800 on the S&P. But folks, let's just round up. What are we at right now? 7,400. Let's just say the S&P. Do you think the S&P could double in the next 5 years? Hell yeah. That's about 16 grand. So here's what I want to do is show you some pretty cool trade. I call them bullish on America trades, right? This is what a Warren Buffett does. This is what a hedge fund manager does. And I'm going to show you something real quick. Let me bring up another chart. I want you to remember these numbers, or I'll leave the image up. Where is it? Right there. Okay. Remember this. You see these strikes? 15,000, these are S&P 500 strikes. 15,000, 16,000, 18, 20. Okay. I want you to remember these. 34, 45, 15, 390. I'll remember them for you. Don't worry about it. But just take a mental screenshot of those calls. Okay. Now I'm going to scroll down and look at them. That was 3 weeks ago. 15, 16, 18, 20. 34. Okay, that's about the same. Holy crap, Wiz. There's 500 more calls in here. Whoa. Whoa, hold on. You said there were 390 in here a couple of 3 weeks ago. 22,000 people have jumped in here at the 20,000 strike. So, ladies and gentlemen, I want to cover what I call bullish on America trades. Let's say, do you think, like I just said, you know what, Wiz, I think you're right. We could potentially double. We're at, let's round up, 7,500 right now in the next 5 years. And folks, one more time, take out the trade war stuff, take out the epic fury stuff. We should be up, we should be a hell of a lot higher than we are, to be honest with you. So I pray for peace. Let's say he gets epic fury behind us, oil implodes, inflation cools, we're going to rip. Okay. I could be completely wrong and train wreck and everything like that, but I'll make money because I know how to trade the S&P 500 and pound it into the dirt like I did last week. But let's just assume the market's going to move up and to the right. Not a straight line. We'll have some pullbacks, but ladies and gentlemen, it moves up and to the right. How about, Wiz, I'm going to go buy a 16,000 call option, right? 5 year, 4.5, 5 years in the future. That is $7,500 right now. Okay. I'm cheap though. How about we sell in 18,000 call against it? Right? This is called a bull call spread. Buying one 16,000 call and selling the 18 against it. Because I just showed you my uber bullish outlook is S&P 22,000. How much is this trade? $2,700. Ladies and gentlemen, before I analyze this trade, I want you to just sit up straight and watch this. Would you spend $2,700 right now to potentially make, somebody give me a drum roll. You ready? $200,000. Now I'm going to pause for effect. And this is E-Trade. Your broker, you obviously have some P&L diagrams that look like this. Let's say I'm wrong. Wiz, it only went up to 15 grand. Let's go up to 15,000 on the S&P 500. Oh my God, you only made $79,500. I'm sorry. Ladies and gentlemen, this is, and you can see right here, I have existing positions in here. Those are the green and the red. I have a bunch of call spreads out here, folks. I put these in my accelerated retirement model portfolio top in options. How many of you would spend $2,700 today to potentially make 200 grand? Okay. And how about you do this? Wiz, I wouldn't mind investing $10,000 today. Let's look at putting 10 grand into this S&P 500 trade. It would be about 4 contracts. Ladies and gentlemen, what would that give you? Allow me to round up, 800 grand. Again, I'm pausing for effect. I want this to sink in. Again, Wiz, you were wrong. It only went up to, 16 grand. Oh no, you only made 300. Look down there where it says P&L. Whoops. I moved. You only made 350 grand, folks. I apologize. What? Ladies and gentlemen, this is how, I helped build a hedge fund in Chicago. I'm giving you a little inside intel, folks. How about an 1820? Wiz, let's go with your uber bullish case. I think we do hit 22, whatever your spaghetti diagram showed us. Okay, I do too. That's why I have these trades on. Buying an 18 grand call, selling a 20 grand call. What's this cost? 2,100 bucks. 3, 2, 1, 200 grand. How many of you would risk 2,100 bucks today to potentially make 200,000? And again, Wiz, I got 10 grand. I'd love to invest in this trade. That's 5 contracts, almost $1,000,000. Folks, I did this trade the other day. I had about close to 15 members do 25 in these. They had, 25, what's 25 grand in risk? There you go, 25. It would be about 12 contracts, 2.4 million bucks. Again, Wiz, you were wrong. It only went up to 16,000. Folks, remember, in this call spread, it's the journey that makes you money. We don't have to hit 18 or 20 in this trade. Let me go back and look at the diagram here. Wiz, we only hit 16. You're an idiot. Oh, I'm sorry. You only made 850 grand because I'm an idiot. Isn't this effing fantastic? I love these trades. I have a bunch of have a bunch of these on. I put one on with our members right here, folks. April 27th. Why do you remember that day? It's my beautiful bride Susie's birthday. I put on a bullish on America trade. I think it was out to Dece of 29 or 30. It was a 5-year out. I think it was the Dece 30. I closed it for 20 grand. But as soon as I saw Trump moving a bunch of forces into the Middle East, I'm like, yeah, I'm going to get out of that one. So you don't have to hold these things, for 5 years. I got out of a Dece 30 bullish on America trade in 8 months at 20 grand. Doing no work, man. It was in the background cooking, but I'm like, I'm pretty sure Trump's stirring up a war in the Middle East. And got out of it. And then I reloaded with the ones you see right now. Let me show you my live account. This is one of my personal brokerage accounts. Let's show you. There's my 15-16 call spread. I'm risking 1,800 bucks today to potentially make 98 grand. What's the other one? I just showed you the 1820. The 1820. Today, if you did this trade right now, it's 2,000 bucks, and you could potentially make 200 grand. I want this to sink in. Is everybody getting what I'm laying down, man? These are gifts, ladies and gentlemen. Now, I said, David, my link. I'll tell you what. I'll just give you this report. If you like it, there's a link to join and all that type of stuff. But here it is, right here. This is called a bullish on America trade report. This is how many pages? 11, folks. Here is all and here I red team this stuff, folks. Look, here's my projections. I just kind of showed you that. But folks, I go through the bullish. Here's why this is going to work. But I'm a fighter pilot, man. I'm an options trader. Oh, and I forgot to mention this. Do you all know about Trump IRA accounts? Love or hate the guy, they have to buy the S&P 500. Do you guys understand this? It's forced buying. He just put a put underneath the S&P 500. This is free money. But like I said, I'm a fighter pilot and I'm an options trader. I give you the bearish case. Here's where I'm going to be wrong, man. Right? Warsh, the new Fed chief, and China invades Taiwan, and blah blah blah. And then I give you the 2 trades. I break them out. I design them. I build them, and all that type of stuff. Right? Okay. So. And here's my 7-step trade plan that I put these trades into. So here's worst case scenario. If I'm completely wrong, Wiz, you were wrong. For the next 5 years, the S&P didn't go up at all. Okay, I doubt that's going to happen. But if that happens, I lose 3 grand. If it moves up and to the right, like I expect it to do, it's 300,000 bucks. Best case, medium case, 100 grand. Would you risk 3 grand to make 100? Yeah, I'll answer your question in a second. So I'll give you, David put the link to buy it's called Tactical Trade Alert Service in the chat box if you'd like to buy it. It's only 97 bucks a month. But let me give you, because I don't know how to upload a report in here. I don't want to cloud their upload stuff. So there's the link just to go get that S&P 500 report. And here's what I'm going to here on this page. Guess what? I'm also you get an AI report, and this will blow you away. The psychedelic report. What you talked about psychedelics, man. I don't have enough time. Usually, I have a little bit more time. I'm the founder of the No Fallen Heroes Foundation. We're a nonprofit dedicated to trying to end veteran suicide through psychedelic assisted therapy. I went to Mexico 5 years ago. Anybody seen the movie? Oop, if I hover over that, that's me in the middle. Oop, right there. To my right is Marcus Luttrell, Navy SEAL Marcus Luttrell. To my left is an NFL veteran with horrific head trauma. If you drink Black Rifle coffee, that's JT with the Black Rifle coffee shirt on. And then all the way on the left side of that picture is JJ. He's also a Navy SEAL. He was a teammate of Marcus. I'm going to give you, I want to keep these guys on time, but I'm going to give you the cliff notes. We were forced to go to Mexico, but it was not fun. It was not recreational. I've done some challenging things in my life. This was one of the most challenging things I've ever done in my life. Why am I bringing this up? Because a month and a half ago, I went from laying on my back on a mattress in Mexico to the White House, to the Oval Office. I was in the Oval Office, Joe Rogan, RFK, my brother Navy SEALs, for the executive order signing on ibogaine, right? You came into this brief, you're like, there's no way this, I had no idea this was going to be talked about. What I'm getting at is the most explosive sector you can invest in right now is the psychedelic sector. So you'll get access to my psychedelic report with the 4 names I'm targeting. We got, what do I got? 4 minutes left. Look at these names are a steal. Compass is very close to getting FDA approval for a psychedelic psilocybin. Holy crap, nice pop out of Compass today. I'm printing money. So here's Wiz there's Friday's market close. Here's Monday, the market opened after Wiz was at the White House. So I've been in Compass since $5. It got up as high as almost 15. We're gonna rip. So I got on this tangent about psychedelics because if you go to that page to grab these reports, you're going to get access to the psychedelic report as well. You get the AI, the psychedelic, and then I think on the next page is where you get this bullish on America report. Okay, David did a good job of throwing the link in there. If you're like, man, this is awesome, I don't need to see anymore. I want access to all of them. So you can click the link that David threw in the chat box, or just click on the link I just uploaded, and you can go read this stuff on your own. We also do live trade briefs at Top Gun Options, but this service is for people like, man, I can't make it to your live trade briefs, I prefer. I'm a reader too. I fly a lot. I love printing these things out and reading them and using my highlighter. So if you're a reader like I am, you can do that. I was up at Harvard a couple months ago at Harvard Divinity School for a conference on psychedelics, man. I'm blown away by this industry. It's going to save and change lives. I'm just so blown away from this. So if you want to look, that's the ultimate win-win, right? Is making money's great. Yay, I made some money. But how about you potentially make money while helping to save and change the lives of not only veterans, but also maybe you, right? We help civilians as well in one of our churches. The other stock I'd look at in the psychedelic space is Definium, DFTX, right? This stock was 12 bucks. At the beginning of the year, we got as high as it doubled, folks, 26. And we're starting to rip on Definium. It's going to break out here. All these psychedelic names, man, are going to rip. Why are they going to rip? Go read it. I give you all the intel from me being in the White House to the publicly traded names in the psychedelic space. Right there. It's psychedelic tactical trade alert. These reports, folks, are quality that I used to crank out in Chicago at our hedge fund. Goldman Sachs, J.P. Morgan, Morgan Stanley, private clients get these type of reports. Compass I just talked about. So good stuff, man. You can either buy at the link that David just uploaded. I don't drink anymore. Thank you, psychedelics. It destroyed alcohol in my life, but I used to say $97 for this alert service is a bad bottle of wine. If you do the annual on the page that David uploaded, you get 2 months on me, man. So it's a lot better to do the annual, and I throw in a free round of Options Weapon School. It's $500 worth of our training sessions. I throw that in for free. So good stuff. I'll bet you guys weren't expecting any of that, man. The guy went from the S&P 500 to psychedelics, but that's me. That's how I target things, and I enjoy it. I'm having a blast. Trading is a form of combat, folks. Somebody's going to win, and somebody's going to get the rear end handed to them. Which side do you want to be on? And at Top Gun Options, I'm going to put you on the winning side. So have a great rest of your day. I'm going to go pop some popcorn and watch the SpaceX launch, so to speak. So have a great rest of your day. And David, thanks. And Anka, good seeing you, Anka. Have a great rest of your day, and fight's on. I'll turn it back to you guys.
All right. Thanks, Matt.
You bet, man.
Yeah.
See you next time.
Yeah, it's going to be an exciting day. And thank you for being here to open. No, that's why I'm not the presenter. um,
It's all good, man. Trust. I got you. I'll see you guys later. Cheers.
All right. Yeah. Can't talk this morning. um, yeah, Matt, thank you for being here to open the day for us for this Analyze Your Trade event. And next up is Silas. And Silas, are you there?
I am. Good morning, David. Okay, how you doing?
Hey, we're having a good day here. So, yeah, you should be able to share your screen and get set up now.
All
And
right, awesome.
just a reminder to everyone, I am recording each of the sessions individually, and we are also live streaming to YouTube today. So,
All right, good deal. Let me see here. All right, can you see the screen?
it's loading, and yes, I can now.
Okay, awesome. All right, and I think is the excuse me, is the chat box open for like questions and tickers and
Yeah.
okay.
You see the chat?
I think so, yeah. Yeah, okay.
I just put a test in there.
Yeah, okay, I got it.
Okay.
Perfect. All right. Well, thanks to David and Anka and the team for having me on here. And I believe we're going to look at some markets. So we've got a lot of volatility coming in. Of course, everybody, as Matt said, is going to get some popcorn and watch the SpaceX. Everybody's worried, talking about that. Of course, we've had the Iran Trump's taco situation going on that has been whipsawing markets around a little bit as well. I'll show you some things that just kind of run through some things that at least I'm looking at. And then if you have some tickers or symbols that you want me to view, feel free to shoot those over as well. So what I typically do, we have a weekly member session every Tuesday at 11 a.m. Eastern. We just kind of start top down. We will cover some institutional data points, what the systematic funds, the volatility control funds, CTAs, hedge funds, how are those guys positioned in terms of the leverage that they have on at the time. And then also we'll review the current COT data as well to kind of give us an idea of the positioning, or the current positioning, and then probably most importantly, or the most useful aspect is what kind of institutional position changes or did we see from the prior week. So coming into this week, we've seen hedge funds and institutions, we'll call the smart money, have been liquidating indices at a pretty large clip, and we can see that. So what this means is that we saw 54,000 contracts here added to the short side. This is based on last week's COT data. So coming into Sunday's Asia Open, coming into Monday, you see that it's 2 weeks in a row. Prior to that, they liquidated 21,680 contracts, added 10,000 shorts. So that's a bearish sign. That's a bearish. So this is dual-sided bearish conviction. So you liquidate 21,000 shorts, adding 10,000 short. So you add those together. So that's the net change of 31,725 in favor of the bear camp. Last week's data, you see 11,000 contracts added on top of 54,950 added to the short side. So you deduct 11,000 from 54. That's a net change of 43,000. So the net position here has been building as we came into the week, and we saw, we've been seeing that selling and that liquidation going on. We do this across the rates and metals and energies, grains, so on and so forth. So that had us cautious, knowing that funds and institutions have been selling. But on top of that, kind of our part of our three-pronged process here, it's not really complicated. Okay, so what's important here is that we just use data. So we're using data to help give us an edge, to help us make informed decisions. Okay, sometimes we're right, sometimes we're wrong, but the goal here is to try and be more right than wrong, but then also make sure that we are getting geared up and set up for high reward versus the risk that we put into play. So every dollar of capital we're looking to risk, we're looking to make 2, 3, 5, 10, and so on. And so knowing the seasonality, okay, so if we look at the seasonality of the S&P 500, and I want to just remind folks that we track over 4,000 instruments. So we've got all the indices, we've got all the major futures groups, we've got Forex, sectors, global ETFs, so on and so forth. But just keeping things simple here, because we always do start with the S&P 500 because it is the global market, the global benchmark. If I'm going to ask you here in the chat, or here that's in attendance, if you were coming into the first part of June, the first 5-10 days of June, would you, just based off the lines here that you see on the chart, would you want to be bullish or bearish? What do these charts tell you if we're coming into the first 5 days of June? Would you want to be buying or would you want to be selling? Pretty simple question, guys. Be buying or selling? You would be doing both. You'd be buying and selling. Maybe on a 1-minute chart, you can buy and sell. We can get to the lower time frames if there's any day traders in here. You don't want to be selling. You want to be selling, or at a minimum, locking in your risk. Okay, if you're long, you should be getting, where you should be getting long, and this is giving you a forecast called, a treasure map, a GPS into the future of where our expected turning points are. So I'm going to turn this back. I'm going to turn this year's data back on, and you can see exactly where we were coming into this first 5 days of June. Okay, look at how it's tracked. The green is this year, 2026. Look at how it's tracked its 5, 10, and 30-year averages. Okay, 5, 10, and 30-year averages. Pretty damn close, right? Now, if you go back into last year when we had the Liberation Day sell-off, we did the exact same thing. We sold off there in March, April. We found a low, and then we rebounded, and now we're just trying to follow the pattern, right? And what we say is we want to initiate these types of trades when price and time align. So what do I mean by that? Okay, so what I mean by that is price also at a peaking point. We don't know what the ultimate or final quote unquote peak is going to be, but is essentially what I'm saying is price also up here as well. If price was down here, but our seasonal peaks are up here, I probably that moves it from an A+ trade, because I don't want to necessarily be selling if the market is all the way down here. In this situation, would you say that price and time align? Would you say that price and time align? Yes, we are a little bit deviated from the mean. Our averages are right around here. We're a little extended, right? Just like we're extended here on the upside. But as we came into, say, June 1, June 2, would you agree with me that price and time align? Meaning that here we are in price, here we are in time, meaning that in terms of the calendar year. The answer is yes. Price and time align. Price and time align. We know that we shouldn't, well, I will say that if you're initiating new longs, you're adding more risk to your plate. It doesn't say that you have to liquidate everything, go to cash. It means that you darn sure better be tightening up your stops, tightening up your risk if you do have a lot of long exposure, because history says that these are the expectations. Sometimes we don't always follow. This is not a, what do we do last year in 2 years? We're using 5, 10, 15, 20, 30, 40 plus years. Sometimes we have 60 plus years of data. It doesn't matter if we're looking at Alibaba, corn, Microsoft, or live cattle. We use the same process. So price and time align. Okay, we'll pull up a chart here. Looking at SPY, if we know that June 5, based off the data here, it's not an exact date, but right around here, June 5. If we know that that is put at a seasonal top, and here we are on price, what do you think we should be doing? Okay, we should be tightening up stops, and for those that are skilled, looking to go short. That's exactly what we did. Now, we talked about the three-pronged process. So the three-pronged process is technicals, or what we call price, time, or seasonality, right? And then that third is what? That third is COT, smart money institutional data. Smart money institutional data, and we've been talking about in our weekly sessions about how narrow the breadth has been in the market, meaning that it's been focused in the tech and AI sectors. So if we come back, where are we? There we are. COT, or we'll call it institutional positioning. And that's our three-prong approach. And that's just what we try and stack together to give us an edge, right? Obviously, we don't have COT data on stocks, on individual stocks, but we start with the S&P 500 to give us some clues, and then we can kind of layer down into individual stocks. Now, speaking of individual stocks, oops, and I did misspell that. So we've got technicals and time. We don't have COT in stocks or smart money, but what we do have is a tool that we call Elite Insider. Okay, and this is our Elite Insider dashboard, where it kind of takes the place of the COT data. So this is our dashboard that tracks politician activity, insider trading activity, and Wall Street hedge funds. And so in this situation, I'll share with you a couple of ideas that I'm looking at here. We've got scanners that give us, CEO buys, CFO buys, double buys, and insider cluster buys, which is our baby, our bread and butter. Insider cluster buys meaning, not one, but maybe 2, 3, 4, 5 insiders are buying, XYZ stock, right? That shows conviction. We know that insiders can sell and do sell for various reasons. Maybe they've got tax situations. Maybe they got to pay for little Billy or little Susie's college. Maybe they're buying a $50 million house, whatever the case may be. But insiders buy for one reason, because why? Why would insiders buy? Why would you buy a stock or a futures contract or a commodity? Why do insiders buy? Because they think the price is going to go higher. And insiders know more than you and I do. So here's a director coming in, $500,000 purchase, $500,000 purchase. All right. And we can see where these insiders have been buying. And all we do is apply a little bit of technical analysis. Okay. Does that make sense? We want to buy low, sell high, right? Sell high, buy low, not the other way around. And I want to determine, are we at an area of value or discount? The way I quickly cull and screen trades is if I had an insider buy transaction, which we do, we've got, there's hundreds, if not thousands of trade ideas or transactions that hit the form, the SEC database every single day. But we've got a unique way and a proprietary scanning method that takes that down to 100, down to 50, down to 20, down to 10, and then really down to kind of our top 5. But from a technical perspective, if we had a lot of insiders loading the boat and price was up here, I'm going to ignore that. I don't like to buy new highs. Okay. I don't like to buy new highs. Now, this piques my interest. Why? Because we're at an area of what we call just institutional demand. This is an area, for whatever reason, the market has stopped the selling and bid up this particular stock. And this is the same process I do on any asset class, any market, same process I do on any time frame. So you can see all this selling pressure was finally stopped. We started buying, went up. Here had a reaction, went up, and here we are again. We're here at an area that has been a reaction point in the past, and we have an insider making a $500,000 purchase. All right. So I know that by buying here and risking below the swing lows, I set myself up for the best odds and best reward versus risk. So we're trying to target the last swing highs here. I'd say 2.5 to 1 reward versus risk. Okay. I'm not looking to buy right here because then I'd have to risk all the way down here. And these are the types of trades that we look for every single day. We've got scanners and we've got notifications that come through. As you can see here, we've got this elite. This is our Telegram room where they come in, all of our ideas, and we locate these ideas as a team. I mean, basically me, but share those with the group, and then we execute on the ones that might make sense and meet our risk reward objectives. Here's another one. This is one that we are in. We are in this one. I've issued this already. BKKT, Digital Building Financial Infrastructure, $8.35. You can see all the buying that has come in, and you can see that down here below as well. The blue dots represent hedge funds. Yellow dots represent politicians, which we don't have any right now. But look at where they've been fairly smart buyers. Would you agree with me? You can see where they bought here, maybe not so much there, but they're buying on the way down, and then they're buying right here. BKKT. Well, just do some simple technical analysis. Does it make sense? Let's take a look. I like this area. Okay, so this is where a lot of people would say the stock looks pretty sick. Looks like a sick puppy. Well, yeah, I mean, I don't necessarily disagree with you, but this is exactly where we want to buy, right? I'm not interested in buying these highs, right? I want to buy the lows. And it doesn't mean that something can't go lower, right? But these situations help us, again, reap the best reward versus risk. Simple 2 to 1 target there, targeting highs. Our next logical area, going to be back to the swing highs here. Now you're looking at 5 to 1 reward versus risk. Okay, so that is how we break down markets and analyze the markets, okay? This is where we last got into the trade back in September, and now we've issued new alerts here. Don't know if we'll see $46 again when we got long. You see that yellow line got long around 9.25, and we're long again. We're first targeting around 16.5. All right, so I'm going to take a couple of tickers here. I kind of just got excited here because I get real passionate. I've got a whole list of stocks and markets that I'm looking at right now while everybody's talking about SpaceX and Iran and this and that. So William asked me to take a look at PAHC. Is that correct? Is that the symbol PAHC? Fibro Animal Health. Is that correct? Well, so when this is the same process that we do each week, guys, is people, our students, our members, our attendees, they give me symbols. I first do a full, top down on the indices, crude, gold, bonds, currencies, where are we at? How are the institutions positioned, so on and so forth. And then I look at your symbols. So look at your tickers or symbols, whatever you want me to look at. And if we look at PAHC, which is a stock or symbol, frankly, I don't think I've ever heard of, never probably looked at it, but you can see that our levels do a lot of the heavy lifting and work for us. So this W represents a weekly level and where we would expect to have a reaction. And that's exactly what we did. We had a reaction here. First time we've been down here since August of 2025. And we've come down, we had a reaction. And then you might notice over here, I utilize what's called multiple time frame analysis. And this is where we can go down to the lower time frames and look for entry points. Okay. So here you see that we've had a bullish divergent signal here. And then what is one of the additional data points that I might go and refer to that we just covered, guys? Yep. Seasonality. Do we have any seasonality? I don't know if we have any data on this stock, but let's take a look. What is it? PAHC. There we go. PAHC. Let's look at the seasonality. And we've got data. Let's see. Our algo, our AI is telling us that it is a buy. We've only got about 12 years of data. Okay. Here, we've kind of been all over the place here. And let's hide 2026. Where are we today? June 12th. We're right around it here. Over the last 10 years or so, PHC has risen up into about late July, and then we find a seasonal high, right? We all agree on that. We all agree on that. And so, if it makes sense to us, we could consider getting long. Percent of positive months here. Let's see, we're over 60%. Average monthly performance got hammered there in May, but as we trade into June, July, pretty flat, right? It's not crazy, not crazy bearish, not really bullish, but more flat. So that might be a situation where we look to sell puts, and I don't know how liquid. I'm not sure how liquid this particular stock may be. What we could also check is, do we have any insider trading activity? That I don't know either, because we're just looking at this together. PAHC. There we go. Let's take a look. Look at that. Lo and behold. Back there on 5/29, we had a director making a $317,000 purchase. Okay. And look at all the selling. Look at the insider selling that occurred right there at the top. That's interesting to me. And now they're coming in and buying. That's pretty interesting. So there's what do you think, William? What are you, bullish or bearish? Well, based on this analysis, we've had a pretty good drop down, right? Now we're reacting at a weekly institutional zone. Seasonally, we go higher for about a month or so, and then we just had a fresh insider buy. Let's see, guys. Let's go down to excuse me. Let's go down lower time frame. See what's kicking. So we do that same process on the lower time frames. I've been trading the NASDAQ all morning. So I've been trading the NASDAQ all morning. Let's see if I can get I'm going to grab those levels here that we were looking at. So let's delete that. And these levels are published every day before the market opens. And coming into today, we were looking at 29. Any day traders in here? Any day traders in here? So coming into today, we were looking at 29,634. You can see that right there. And we had a divergent sell signal. And then our buy level was actually 29,294. This is the blue line right here, 29,294. And we had a buy signal right there. And so it's what we try to take it level to level. And here we came back, we're coming into 29,400. So a lot of people are saying this market's too dangerous, this market's too choppy, there's too much volatility. We got Iran and SpaceX and inflation and Fed and rates and blah, blah, blah. Look, our levels are the levels, guys. Our levels are the levels, and these levels thrive in volatility. They thrive in volatility because these are institutional supply and demand points. And you can see how they react. Okay, we say that if we're in the gray, stay away. If we're in the gray, stay away. We don't touch the market. We wait. We simply wait for price to come to us. We wait for price to come to us, and we wait for one of our entry confirmation tools. This is the exact same process, guys, that we use on the higher timer. Look at the reaction right here, 29,634. We're already down, gosh, 40, 50 points. Okay, that's how powerful these levels are. So kind of been all over the place, but this is essentially the process. Whether we're looking at an hourly chart, a 1 or a 15-minute, you can see our signals. There's a sell hitting target 1 to the tick. Here's another sell hitting target 1, just shy of target 2. And this is in a market that's been range bound, since yesterday's close throughout the entire session. Pretty awesome. It's pretty powerful, and getting some alerts coming in here. So Dow, excuse all the drawing mess right there. So DIA, Dow Jones. Any other tickers or symbols before we wrap up here? Any other tickers or symbols before we wrap up? But essentially, the process is this, and I'll leave it with this, is we wait for price to come to us. That's basically where it starts. Using higher time frame levels, okay? That's daily and weekly. And then we can either trade, swing trades off of the daily or higher, or we can go down into the lower time frames and start looking for entry confirmations. Okay, so I'm gonna, honestly, I'm gonna be looking for new sell signals right here. Now, keeping in mind that if there's some kind of crazy Iran-U.S. deal, or who gosh knows what could be thrown at us, right? It's what we face every day. We got Fed next week, but that's the process, and this is what we do every day, whether we're using it to put on swing trade positions all the way down here into the lower time frames. So I've got one last ticker here by Dev. Open. So if we look at open, I have no bias, no bullish, no bearish. Why? Because we are in what we call no man's land. Okay, I would be interested down here at 340 and 230, 530 and 6.5 to the upside. So this is how I can quickly qualify or remove a symbol or a ticker or any market from my list. If we're here in the gray, not interested. Okay, I'm only interested if markets are coming down here to me or up here to me where I'm looking for either buys or sells. So, David, can I post like a link if somebody were to be interested in checking us out stuff?
Oh, sure. Yeah. Yeah.
Yeah, just a
Which,
there's a mark put that in there. That's
okay.
kind of basically what we've covered, like quickly, 30 minutes. I mean, there's a lot more in what I just popped in there. But that is essentially like the foundational tools and all my methods kind of rolled into one. It starts with the levels, and then we have two simple confirmation tools that we use. You get a free little trend indicator and all this stuff for TradingView. So the methods work, guys. Check out that page, scroll down. You can see it works. We've got thousands of students that use this methodology each day. So hopefully we knock some things out. You got some clarity on some markets that were of interest to you. I want to say thanks to David and Anka and the Timing Research team for having me on today. I hope everybody has a tremendous weekend and summer. Stay safe out there, stay cool, and hopefully we'll see you in a future event. Take care.
All right. Thanks, Silas. I'll post
Thanks,
your
Dave. Have a good one.
links there again. All right. Yeah. Check out Silas's links there. All right. So next up is Anka. Anka, are you there?
Hi, David. Hi, everybody.
Hi.
Good morning.
How are you?
Good late morning.
Yeah.
Okay. Quick
Okay.
sound check.
Yeah, sounds good.
Sorry. Okay.
And are you ready to start?
Ready to start.
All right. I am recording again now.
Good morning, everyone, and welcome to this edition of Analyzing Your Trade. My name is Anka Metcalf. I am the CEO and founder of TradeOutloud.com, which is a trading education company that is specialized in educating individuals how to day trade, swing trade, and invest into the markets. I have been doing this for over 25 years. And prior to starting doing this on my own, I come with 10 plus years in investment banking. So I'm really ready for you guys whenever you are to post your ticker symbols, and let's take a look at the market, because the market is very hot right now. It is a news driven market. It's a little bit more difficult. And I would say that you have to respect your risk to reward, and you have to respect your risk and don't allocate more than you shouldn't into this market. So all right. Do you guys have any ticker symbols ready for me? If you still have a moment to think, I could do a little bit of analysis here and then we could start. Okay, here's the first ticker symbol. It's all right. Oh, okay. Cool. Cool, guys. All right, let's start with the first one. All right, this is EverQuote. And EverQuote is actually doing relatively well. Hold on just a second here. Okay. All right, because I'm trying to put the chat box somewhere where it doesn't interfere with my charting. Okay, because I'm on one screen right now. So I'm on my laptop. The other screen is dedicated for my trading room. So, okay, so let's take a look here and see where we're at. All right, so I'm going to go a little bit far out to the monthly to try to see what we have here. And definitely we do have a double bottom formation and we do have a higher low. Notice that this that we had right here back in February was a little bit of fleece to the downside, and it was a coil around the 10 EMA and also into a minor support zone created by this pivot high, and it rotated. But there is still some selling pressure that is coming in around $21. And this is what we're seeing from the monthly. From the weekly standpoint, we still have a little bit of difficulty around the $20.50 area, in the sense that we still have resistance from a declining 50 SMA, which is really important to note here, because you guys know that a lot of funds like to be in sync with the 50 SMA. And once the price action is not above the 50 SMA, then it's not going to be as seen as a positive. However, what I'm seeing here from the weekly is that we have been grinding around this support zone, this prior support zone, and it's creating right now sort of a base, and it's in sync with the 10 EMA. So it's starting to trend for the last few weeks, like 4 to 6 weeks. And it's trying to grind a little bit higher, but it's still not yet out of the woods. Like I said, the 50 SMA right here into the 2150 still has a ceiling of resistance. And from the daily standpoint, we still have resistance here from the 10 EMA. When we had the pop-up right after earnings, we had a big momentum, and then the price action came violently down, erasing almost more than half of the gains from the swing low to the swing high. I love this base over here. I love the volume surge. And again, this is because of earnings. And then we subsided into the volume. This is not really what I want to see, but the volume is still constant and still good. It doesn't show that it would have any kind of difficulty. So again, be very careful with the 200 simple moving average here. If it takes it out, and that it's all about that 2150 that is correlated from the weekly, from the monthly. So if it happens to take out that 2150, we could see a possible write-up. I would say with the first target into the $22, because we have this pivot low. And then again, back to the high here, right after the earnings, the 2450, and then we would see this pivot high right here, 2550, and we would go probably like 50-cent increments all the way into this high of about $29. So this is the ever quote. This is my bias on it. It's really trying to grind higher. If you want to start building a position in it, you could start very small here, like just have, you know, like a small lot allocated here and add as it's going your way and into the 2150 area. Palantir, that's a good one because I am still in Palantir. Okay, so Palantir has a huge base that is right here into the $120. And it has been holding this base since February, since it broke down. And you could see the effects off of the 200 simple moving average here. Now, I did take some profits here, but I'm still in because this is, you know, a part of a longer term trade for me. So it's not a swing per se. But I love the fact that it's holding the 120. I do not like the fact that it's trading below the MAs and trading very close to support. If you're into a longer term perspective, like let's say an investing perspective, it's a good idea to dab a little bit and to start building a position around 129 to 129.50. And I would actually love to see it trade above the 200 simple moving average. You see what the problem is with the 200 simple moving average. It catches the price and it forms the lid. The same concept was present in EverQuote, in the stock that I've analyzed it before. If we go back, okay, and I want to show you the importance of the 200 SMA. It could knock the price down. So this is why it's having such a hard time, because it's below this 200 SMA. And so is Palantir. Palantir has been rejected not once, but actually 3 times. It has been rejected in February, has been rejected in March, it has been rejected end of March, and it has been rejected on June 1st. So right now we're back to where we started. We had 3 days of massive momentum into it. We actually took this breakout over 139 with a stop into the 120. But again, this could set up again here. But notice that here, when we had the original breakout happen on May 28th, the price action was flirting with the 21 simple moving average. Here, the price action is actually not only below the 21 SMA, but it's below the 10 EMA. So the only way I would trade this is I would try to dab into a long-term position here, and then I would add over 140 once it clears all this moving average, and it will gain velocity most likely back into this 200 simple moving average. It's a little bit more of a complicated pattern. And if you look at the quarterly, and don't forget that, and I will tell you why it may not be a fantastic idea to dab into it just yet, and just wait for the next quarter to start, which is going to be just what, a couple of weeks away. It's July 1st. First of all, the quarterly chart here, I don't know how many of you guys just analyze the quarterly charts, but especially as we're getting into the end of the quarter, this is so important to analyze. And you can see here that we had a red quarter, right? So we had a really red last quarter here. So from March to June. The prior quarter was as well red, and this is the quarter from January to March. So it has that bearish connotation. I expect that if this 120 is not going to hold, we could push back all the way to the 10 EMA. And it responds, Palantir responds really well to the 10 EMA because we've seen some action back in 2025 in the second quarter. We've seen some nice hold in the first quarter of 2025. Also the fourth quarter of 2024, and you can see that it has been really respecting this. But there's one thing that I want to show you. It is the volume. Look at the volume that we've had all the way to the third quarter of 2025, and look at the interest. So the interest is definitely lower in Palantir, overpriced maybe, but definitely I could still see a little bit of a pullback. So if I was not in the trade right now, I would not be in a rush to get into the trade, because as we're heading into the end of the quarter, this is not going to be one of the stocks that is going to be picked up by window dressing. So you're going to be looking at potentially other types of stocks that are going to fly higher, stocks like, I don't know, UNH or Goldman Sachs, or stocks like IBM or Apple, something like that, something that has relative strength and has been really well performing within the last quarter. Those are going to be the stocks based on which these institutions are going to jump in, these high flying stocks. These stocks like Palantir, they're likely to get dumped into the end of the quarter. This is the phenomenon. This is what happens, is the window dressing effect. And as we're getting closer, especially into the last week of June, you can expect less and less activity into stocks like Palantir that has not overperformed or not performed at all, and more movement into the high flying stocks. Okay. All right, so this is my take on Palantir. The next one, William, is GCO. All right, and we have the daily right here. As you can see, this one is into the clear right now, so it's trading into the clear. It reported earnings and it's flying really, really nicely higher. But then again, we're approaching the end of the quarter. Notice how the quarter is green. This stock is likely to continue into the end of the month, and not only that, but continue into the next quarter, so July, August, September. So it has a really great possibility. The only problem that we see here, and it's not really that much of a problem, it's about management more than anything else, is that it is trading into the prior resistance right here. So once we take this resistance out, we could potentially erase and trade above the 50 SMA, which has been keeping the price under pressure since 2017. And not only that, but we have a huge level here. I'm going to show you what the level is of resistance, not only from the 50 SMA, but from pivot highs that were formed back in 2007. So there was not much progress in this stock. This is kind of like a sitting duck. It's not going to make your money work for you for the investment side. So 2017, it was basically at the same level here. If you have some long-term money parked in here, well, you're back to 2017 level. That's that's the good news, because you were way down here back in 2020 and you were way back here last year in 2025 in the second quarter. So I believe that we need to erase this resistance in order to start moving higher. And this is one of the stocks that is not going to move fast. So if you're looking for the swing trading standpoint, it is a little thin. It is a little thin, and it did have a little bit of miss here on earnings, but it's still propelling higher. But be very mindful of that 50 SMA that is coming on a higher time frame chart. And also from the monthly chart, you have the 200 SMA right here. Funds don't love when the price action is not trading above the 200 SMA. So you want to be in sync with the market, with the momentum. You want to be in sync with the institutional flow. And they're trying to prop it higher, to grind it a little bit higher. But you can see here, we have like a roller coaster around this 200 SMA, and the stock has not been able to trade above the 200 SMA since 2023. Okay, just keep that in mind. The next stock is Poet. This one comes out in my trading room very often. And we're going to start with the top down. First off, I'm going to put the quarter because we're just getting ready to close the quarter in a couple of weeks. Huge, massive candle. I would say this is the biggest quarter that it had. Poet had the biggest quarter ever, but it gave back some of the profits. So we have some selling action here. I see a lot of sellers from this high all the way to basically to where we are trading right now, into the $12.74. Now, from the monthly perspective, we have a lot of compression. Compression is good because what compression does, this basing, this hold into a certain level, it's digesting the prior pivot high. So it digests the prior resistance. So therefore, it could find a room to the upside, and then it's finding support into a prior cluster high. So that is actually very good for price. From the monthly standpoint, like I said, we still have a couple of weeks to go till the end of June. We could potentially start moving higher, although this is a very neutral candle. If within the next month, the month of July, we start trading above this month's high, we could potentially start moving higher. But if not, we're probably going to, be sideways again for a good chunk of July. And then from the weekly standpoint, it has a very bullish signal that could develop next week, not now, over $13.07. Now it depends on where it will be closing today. So take that into consideration, what the high of this week is. At this point in time, it is 11:16 a.m. Eastern. The highest point that we have is $13.07. So that means that if next week, if we close here with this high at 1307, next week, 1310 could be the trigger for a long with a target into $15, $17.50 longer term. So you would have to wait like 3 weeks or so from what I'm seeing. And that if it's not basing again. If it's basing again, going to be like probably a month, or could take even longer. From the daily standpoint, it's still grinding. I like the fact that it's holding the 50 SMA, so it's showing some technicality here. So we have the nice rotation that happened in April, a higher low, which is very important. So this could potentially be a nice trigger point above $13.10 here in Poet. All right, any other ticker symbols that you guys have ready for me? Okay, there's one more, SoFi. All right, so let's take these alerts out and let's go to the quarter, and we have a doji. So things are into an incredible indecision here. So within July, August, and September, if we top out $20, that's going to be bullish. So you have to have patience with this one. It's not going to happen right away because right now it's trading at $16.66. So within the next quarter, you will have great velocity if the price action is going to trade over $20. Okay, so $20.15, $20.20 is going to be the price that is going to ignite the price higher to $25 and $30. This is going to be a great watch. Still in sync with the 10 EMA. Now, from the monthly perspective, we have a nice support level here. It's a little bit slinky in the sense that it is trying to hold the minor support from this prior pivot high. So this is creating a minor support within an uptrend. So this is actually really good. But I still think that this $20.15, so just above $20.13, is going to be the go for SoFi, because it's going to take that out. However, if you want like an incremental entry and you want to dab into, it is fine if you dab over $19. So that's $18.80. This is the monthly high. And it depends on where it's going to close this month. However, if the price action is going to stay by the end of the month below $18.80, come July 1st, this is going to be a great buy over $19. So July, okay, or whatever the high in July is going to be at this point. From the weekly standpoint, here is our aggressive level, and this is our conservative level. So this would be the dab in level. This would be like full position size, long. We still have the 50 SMA right here. So the 50 SMA is still problematic, but at this point in time, it's going to be one of your targets. You also have a pivot low here at $23.50, which is going to represent resistance for price, and it's not far away from the 50 SMA. So you have basically the $22.70 and you have the $23.50. So this is going to be a big cluster here and a big decision point. You could potentially get a pop-up into here and then a pullback and then a reset. So that means you can add and reduce on this position. And right after that, you have a big chunk of price action to the left-hand side. This is basically like a big chop going on here, a big base into the, with the support into the $25 and resistance somewhere above $30. So the price action could have some stall into its momentum when it trades into this zone right here, into this area. So, but all in all, $27 to $30 target, even 32 for the targets. All right, one more that I have is SOXL. All right, so XOXL, I'm going to take it far out to the quarterly because I want to show you the massive quarterly gain right here. So the bottom of this candle bottom was $46, just like SanDisk. You guys seen SanDisk? So crazy, so crazy. Okay, so we had these are the types of ETFs or stocks that are semiconductors that the institutions are going to dive into, and they're not going to dive into with any kind of setup, momentum, indicators, anything else. They're just going to jump in, these high flying stocks. And that is going to be in the last week, or could potentially start, but no, not next week, because we have the quadruple witch option expiration, so it's not going to be a good time for them. All right, so huge, massive swing all the way to $46 to $284.58 for the high. So definitely this is going to be one for the list for window dressing for the last week. So watch momentum. If you're a day trader, if you're a swing trader, or an investor, you definitely want to watch the momentum on this one. Very strong month. Again, volatility super high in this one. So so far from the monthly, and like I said, we still have a couple of weeks left, but the low here is 157, and all the way the high here is 284.58. So really nice. I don't really love the doji kind of candle that we have right here, but it could strengthen because we just have the pullback this week. Super strong momentum in SOXL, and I can't believe that I'm talking about SOXL trading at $239. It is unbelievable because it was trading like what, $45. Okay, so not long ago. So huge, massive candle. This is going to be very bullish for next week. So watch wherever it closes, and that's going to be bullish above for next week. If you're a day trader, swing trader, this is something that you need to take advantage of. And then from the daily perspective, we all know that we had the chop pulled back into the market, into the Qs, into the SPYs, into the Dow. Russell, a different story because it based, but you can see here that the momentum is really catching up, right? So this is very, very strong continuation. So this was the inside candle, the trigger. You could also take advantage of the breakout here, or if you're not in, you could take advantage of the breakout over $240.40. The stop is going to be the lowest point of the pivot though, or if you want to, try to cheat a little bit on the stop, and this is something that I did today with the day trade in Russell, and it worked. What you can do is take half the size over here and position size for the minor support into the 191 or 190, and then be ready to give a little bit more room since you're with half the stop all the way to the bottom of the pivot. But just position size for this so you could get like, your foot through the door. And then if the reversal occurs, be ready to give a little bit more room to this low right here. So that's why half the size, double the stop, and that's going to keep you safe. All right. I think I have time for one or two more. Next is SanDisk, SNDK. All right. So SanDisk, again, going to go to the quarterly. So you guys are going to be shocked. Okay, this is last quarter. This is the activity within the last 3 months minus 2 weeks. So it has had a massive gain, and it went all the way from a low of $641 to $1,996.77 for the high. So definitely this is going to be one that whether it's SanDisk or SNXX, if you don't have $2,000 per share, you could use, and we can talk about that as well. But this is so bullish above, okay? For July, for August, for September, very bullish. Very bullish for a continuation into this month and continuation for the next month. The weekly, absolutely, it had a sandwich. If you wanted to get in, this is where you needed to be in at 1850. And from the daily standpoint, it is still, you can see the little nice breakout or flag or buy setup, whatever you want to call it. And it is trading higher. And SNXX, this is the cheaper version. And I still think that you guys have a really great opportunity with this one, because look at the quarter. Da-da-da-da. Remember, last quarter, so 3 months ago, it was trading at $4.59. So $4.59 last quarter. So in March, guys, in March, and now trading at $36.44. It has a high today. I'm $36.44, trading right now $36.13. From the monthly perspective, super bullish. It's going to have the same continuation as SanDisk. It is SanDisk. It's a 2 times long SanDisk. The monthly chart is incredibly bullish. It had a trigger. So if you want to add to it, or if you want to, get in for the swing side, your opportunity was at 32.84. And from the daily perspective, yesterday was the trigger, today the continuation. So if you still want to get in. Your stop is going to be 21 bucks. And as far as targets go, let me give you guys some targets, because I'm always asked about targets. We are in a target spectrum here at $36. So we have achieved the first resistance, so we can expect a little bit of a slowdown intraday. But the next target is 40 bucks. And hang on to your seats, because the next target is going to be $50. Okay, $50. And we have another one at 56.08. So huge momentum that could still continue in SanDisk as well as SNXX. Again, this is the cheaper version. So I don't know about you guys, but I would go for the cheaper version because I could get more size, right? Size matters. Okay, when you position size. And the next stock is, and I believe is the last one, this is RXT. And this is gorgeous. Okay, it has support into 367. Volume is constant. It had really nice surge of volume into earnings. So that indicates that there is a lot of interest. Really nice breakout that is happening just above $6, $6.15. It has room to go into $7. And by the way, let me give you some targets for this one because it looks very, very good. It could run into $8.70, $10. $10, remember, is a big deal for baby stocks like this. And then it has room to about $14. This is really good. From the quarterly standpoint, look at the fabulous quarter. Could be a continuation into the end of the quarter and continuation into the next quarter. We have really good volume into it as well. We have an inside candle on the monthly, but we still have 2 weeks left. The weekly is just about to explode. I absolutely love this. If you're not in, you could get in on this one over $6.35. And by the way, this is my take, my opinion. I'm not giving any financial advice, but I absolutely love this one. Okay. And I do have it on my watch for next week. And like I said, from the daily, it has very good perspective to continue higher. All right. So I have 2 minutes left. I'm going to talk to you guys about my program. It is the Stock Swing Trader. If you guys like my analysis, we do have the Stock Swing Trader program available for you. If you don't have time to scan, if you don't have time to identify entry stops, targets, or you don't have a system in trailing, we can help you with that. We have a very active program where we call a lot of trades. Actually, last night, I think I called like 12 trades, if I'm not mistaken, because the setup was right. So if you want to maximize your earnings by trading the hottest trends in today's market and outperform the market, this is for you. We have a track record of minimum 10 years into this, actually 15 to 16 years into this program, 10 years for futures. Okay, so this is the Stock Swing Trader where you have access. This is basically a newsletter that we deliver every single Monday morning around, I don't know, 6 o'clock or 10 o'clock or by noon. You're going to get it, and you're going to get a comprehensive market analysis, stock performance, and of course, what everybody wants is the trades, right? So is the trades. You can see here that we are in SNSX at $33.60, something that we talked about in here. And these are some of the stocks that I have just added, June 10th through, and basically this week. Okay, and this is our whole performance right here. We are really massively overperforming for the year, and that's it. Thanks so much for having me, David. Hope to see you guys next time, and hope to see you in the Stock Swing Trader. And I'm just going to post a link here for you guys. If you're interested, hop in. The prices are going to go up, so take advantage of it. Thanks so much, everybody. Have a good rest of the day, and happy SpaceX Day.
Thanks, Anka. Matt is not in the room yet. Do you have another chart or two you want to look at? Well,
of course.
Well,
any other stocks you guys have? Any ticker symbols? It could be futures. It could be anything. I day trade and swing trade futures, and I swing trade stocks and invest in stocks. Hey, Bonnie. Happy you were here.
oh, there's Matt.
Okay. All right, guys. Have a great one. Thanks, David.
All right. Thanks, Anka. Yeah. Yeah, great analysis. So thank you for that. And just a reminder for everyone, I'm recording each of these sessions individually and also live streaming to YouTube. So the entire event is being archived instantly. And then, of course, the individual recordings will be available after I get them processed. And Matt, are you there?
I am, David. I am.
All right. You should be able to share your screen and get set up now.
Perfect. Let me just pull this out. There it is.
Okay, I see Hilton. Are you ready to start?
Yep, everything's ready to go. Let's see if I can pull the screen a little bit bigger, but otherwise, yeah, that worked out perfect. All right.
Okay, great. I am starting my recording again now.
All right, everyone. Hope you're having a wonderful Friday here. It's a little bit of a, interesting day here with the SpaceX IPO. Please, everyone, put your tickers in to the chat. I'm going to make sure that it's up on everyone here so I see them all come through. Um, but yeah, I mean, with the SpaceX IPO, we're seeing some pressure here, even on some of the space stocks. It's more of a, I'm going to guess, just a move. If you see SpaceX do well, you'll probably see some of these names like RKLB, ASTS, they'll start coming back. Um, the reason why I had Hilton actually up here was it was actually a name I was looking at. We're in this position, we just hit targets here. So just kind of a prime example of how you can trade markets. We were buyers here around on 518. So we actually didn't catch the anchored VWAP perfectly, but we caught it, relatively close here the next day. And then we were able to see this out up to new highs. We knew we needed a little bit. So we were in the July contracts, 310 strike. If somebody was in a position like this and you're trading it kind of on your own, a lot of the times at this level, like from a swing trader's position, you still have plenty of time. We had to do it from a target perspective, so we take it off. But you could take half off here. You're up at like 100, 2%, something like that. And you kind of have a free trade here to see how this works out. So I am seeing the first ticker in. We will get to that. I do have something closing on the backside, which is causing a little bit of a lag. So I'm hoping we don't have a problem here. All right. And we do have a little bit of an issue going on. I'm seeing it's freezing up a little bit. So if I can fix this quick, just bear with me. Sorry about it. Otherwise, I will hop on to another computer here quickly. Yep, did not expect this to happen. Should have just closed. All right. Let's just see. I don't know if you guys have traded with Thinkorswim before, but sometimes this does happen. Uh, it's not always the most updated, easiest software, and it sometimes bogs down your PC. So hopefully I'll get this. Otherwise, I'm just going to go to another one quick and hop back onto the link. Um, and that way you guys don't have to deal with this. All right. Well, I'm pretty well seized up. All right. Sorry about that. I'm going to hop on somewhere else. Can you still hear me, David?
Yeah. So,
Yeah. I'm
okay.
going to hop on and join on the laptop quick.
Okay. Okay. Well, while we're waiting for Matt to come back, got a couple things you might be interested in. There's uh price at Big Trends is going to be on later, but there's this um SPY trader ebook and also this Tesla ebook from Big Trends that you might find interesting. Check out. And and this other ebook about gold investing and metals investing. Also, I can give you that other link I just put in is the YouTube live archive for today. So it live stream there, and then the entire day is instantly being archived to YouTube at that link. So you can review the entire day at any time right there. And then I'm recording each session individually as well. And so the individual recordings with the notes will be posted as soon as I can get them ready after we're done today. So we have a great lineup scheduled for the rest of the day. Sunny Harris was scheduled to be up next, but she's actually having some internet issues. So Jim, the option professor, will be up next at 12 p.m. Eastern to do his live market analysis. And then after that, oh, hold on just a second. Okay, Matt, are you back?
I am back.
Okay. You should be able to share on your other computer now.
Perfect. I'm just going to share like this. All right.
Okay, I see your chart now.
Yep. So we'll just have to pop it up, but yep, perfect. All right, everyone. I'm back. Sorry about that. My apologies for that. It should not have locked up. It's still locked up, but hey, all right. So the first ticker was EZPW, and it's actually an interesting name. So something I haven't seen before, and it's trading about, we're gonna get this out of the way. Can you see the bottom half there, David, or no? Can you see the YouTube stuff or no? Or Zoom video stuff or no?
No, all I see is a chart.
Okay, perfect, perfect. I just wanted to make sure. All right. All right, so EZPW, we're trading around $31 right now. It's kind of the classic, potential here for this undercut of the 50-day moving average. We'll see. We need to be able to take that out around 31.50. Currently, I would say it is definitely obviously in a bull trend. We did come down. We almost tested that year-to-date anchored VWAP level. It's not a name I'm extremely familiar with here, but it does look pretty decent, right? So like, yes, 2 days ago was really your big dip opportunity there. And for now, you really kind of want to see this pivot above the 50, but you still have $32 to take out. So if we let's break this down. So if you come back here, you're going to see that around this 32 level, we have much more of, kind of a, well, why can't I get that off? All right. Much more of a pivot than you would think. So it's around 32, 32.25. And the reason for that, obviously is that breakdown level there. So let's just go back here. So you had this consolidation, then you broke down through the 50 days. So really the all clear will be that. It'll also be taking out the 20-day moving average as well. So again, not a name I'm extremely familiar with. I really don't even know what EZ Corp does, but it looks like finance, retail, leasing. Okay, interesting name. Pawn services. Huh, okay. Pawn names do typically do well too during times of a little bit of economic stress, real wages, things like that. So we are kind of seeing that here a little bit, obviously with, kind of a bifurcated economy more so, right? Like, people that are investors are doing really well. People that are on the main street that aren't investors aren't doing as well, with, inflation costs, everything like that. So, I guess the theme kind of fits as well. All right. Any other tickers here? Let's get them in. Well, otherwise, I'll start going over some ones here that I kind of had ideas on and things like that. A name that's been hot in the market, kind of pulling back, was AXTI. It's a photonics company. We're taking back that 50-day moving average. This thing literally was a darling of kind of like the end of 2025, or I should even say really just kind of the beginning of 2026, right? So it kind of started taking off here. We saw now this kind of breakdown retest, right? So you'll see this often. It'll come stretch out. It'll hit like something like I just got Bollinger Bands up today. I don't use them all the time, but you'll see that you kind of get this stretch move, 2 standard deviation, prior high, and then the retake, right? So you have the retake, and then that produces a beautiful undercut of the 50-day, kind of like that EZPW is looking like it's trying to do. So when you see moves like this is where it shakes a lot of the weak hands out. And so if you were a bull, a lot of people would be going, oh, okay, you know what? I've been in this trade here, whether they bought on this dip or they bought on this breakout, they're going to set their stop a lot of the times. Okay, we're going to set that break even around 87 or this trend line here or that 50-day breakdown. And then once it does it, you often see this move where it shakes those weak bulls out of that, and then people get right back into it. So names that we're kind of seeing here take off a little bit on this Iran news that, supposedly we have a deal. Now we've heard it, what, 39 times, 40 times that we got this deal. We see, when we see these kind of surges come back in, we're seeing them come right back into, the AI theme. So, whether you're looking at something like an AAOI, an AMD, an Intel, we're seeing this, and you're seeing this move. So Intel was actually an interesting name. I was kind of watching the other day. I didn't end up taking it for a trade, but I liked how it was coming down this round 100. It was touching this lower Bollinger Band. I was a little worried, you have this 50-day moving average that it might want to fake you out. Probably a better credit spread situation here. We do have extremely high implied volatility on a lot of these AI names right now. So they're harder to take in options. You can do different strategies around it to kind of mitigate that risk. You can sell premium, so like sell credit spreads. That would be selling, like, say, you would have been down here, you could have sold like the 95 strike put in the 90 strike and bought the 90 strike to kind of offset that. And then you could have had a really nice trade out of this. The other way is doing call verticals. That way you're selling an upside call and then buying that long call premium. And it helps mitigate some of that theta decay and that IV risk that you're going to have when you're trading names that are high vol. Another interesting thing, though, and I'll say this, and I'm not the biggest crypto guy. I used to love trading crypto because, it was purely technicals for a long time there. But now we're kind of seeing like, okay, crypto's, obviously with the AI theme, you're not seeing crypto anymore as being like that hot theme. But what's interesting is, Bitcoin kind of really started not, going down anymore, right? It hit those previous lows here in February, and we're seeing that it was kind of a consolidation. It looks like a bear flag, but a lot of times it's trying to like kind of fake people out. So the momentum is not back on our side, but I do think there's some interesting levels here. So this 60,000 level keeps getting bought up every time it gets tested. You can see it gets down there, and then start looking at even names that are kind of doggy, like MicroStrategy. Obviously, they had some negative news. We're not really getting that move yet off the lows, but we're starting to see this round out, right? And now you can kind of head back onto that maybe the top end of the range, otherwise maybe the mid pack here where you have year to date anchored view up. But still, you've been able to kind of get in this around 115, 120. You still have like 30 points up to that move there. I am seeing a little bit. Okay, we are getting some more tickers in. Perfect. MYRG. MYRG. Mirror Group. All right. So again, not a name I'm super familiar with, but all right. Engineering. Okay. All right. Engineering name. I'm gonna guess maybe with this kind of run, it obviously has an AI tie-in here. I mean, it's beautiful stock, and even if it's just, you know, an engineering company, I mean, it's definitely looking right here. Let's just kind of pull something back. All right, huge move. So we are starting to enter in more of a consolidation phase. As you can see, when my bars are red, it's kind of a proprietary indicator that I run. It just means consolidation. It doesn't necessarily mean a big drop. Obviously, a lot of the times we do get a big move lower off of it. But you know, it just really kind of means that we're going to have a consolidation phase here. All right. All right. Had to get that back. All right. So let's take a look. All right. So it did come off that 50-day. You did get like a sequential niner there. You know, I mean, we could start pushing back up. I would wait for this though to kind of clear. You are through what I would look at. It was around 438, 440 there. It's kind of like a little bit of a floor, not a clear, super clear pivot, but you can see right here when we pull it back to the 65, kind of have this pivot here between like 433, it looks like, for even a little bit wider, but really kind of 432 and this 438. So I would wait for the all clear. You break above that 20-day, you break above this 200 unit moving average on the hourly. At least then it kind of says, hey, we're entering a bullish phase. You still are going to have to take out this 460 or 455 level here. So, you know, it's not the easiest trade, but if you take out 455, you're probably going to see 475 on this. All right. Next one. QUBT. It's a name that we've played quite frequently, actually, through options last year. I don't think we've taken a trade yet this year in QBT. If we did, I know it was to the downside, so, and I'm not sure where it would have been, but it wasn't me. It was somebody else on our desk. But, you know, it's starting to show, you know, like a cup and handle type of position, right? Like you kind of get this little, you can see this little cup, got this little handle coming out. You still got, you know, kind of higher lows here. You kind of found a same low. Interesting, right? Like it does seem like it's trying to kind of pivot back a little bit. We are at a 2 standard deviation low. I don't hate it. I won't lie. I think as long as you kind of hold this level right here, and don't just, you know, use like 967. I mean, you have these prior lows here, but you know, so it's a generalization. But if as long as we kind of hold here, just use this. You break below that level because it's really close, right? Like I most of the time use zones. So I'll be drawing boxes, but it's quicker to draw lines here for you all. Let's just say 920 doesn't hold. You get a close below that. I would probably get out of the way of this. But it is really interesting. Say you pop above 1080. I mean, I do think you have upside, you know, at least that 200-day. But, you know, top of the range is, you know, $13. You can see that it does kind of like to wick through that 200-day on this trend lower, you know, but one of these times you're going to get through it. And if you do get through it, this thing's going to probably rally pretty hard. You know, the next level I would be looking for then would be 1350 would be the next level, and that's at the 2024 anchored VWAP level. So sorry about that. So you know, that kind of would be like, okay, that's the high end of the range. That's where I'd likely look to say, okay, I'm going to probably take half off of here. We have a really nice trade going, or a quarter off, right? And like just run a trailing stop at that point. So that's kind of where I would look. Stop loss below 920, above kind of 1350 is where I'd really start taking some shares off. But that way you can kind of control this, right? And if you want to get in that position today and kind of control it, you have this, but then you can start moving the position up. So say the next level, say you get a little bit of a breakout up to about $11 here. You can kind of control that if you really want to be conservative. Use something like 1025 there at that 2025 anchored VWAP level. All right, NTS and AI. Okay, there's another one. AI. I haven't traded this one in years. I do think it's a little bit more of a meme just because product wise, you're not seeing, obviously the infrastructure builds in AI have been playing a lot better, but product wise, there's been kind of some better options as well. And maybe that's just it, the dog in itself, the negative sentiment of this, right? So you can see I traded a long time ago. Those are notes. Um, whew, that's probably 2 years ago. So for me, I mean, I think the all clear for a longer term trend here is about 1158. Um, you're going to see this kind of consolidate now, is my guess around here. If you can, once you get that breakout around 1160, it's probably going to go test that 200-day moving average. You're right at another level there. So if it comes pretty quick here, that's going to just be another stopping point. So probably take some shares off there and just kind of see how it plays out. Yes, if you get above $13, I think, you obviously have a lot more, and this is probably a name that's highly shorted. I don't have the short interest data in front of me, but I'm gonna guess this thing can squeeze even if the product isn't great, because it is starting to kind of take this thematic meme mode I've seen among traders in the communities. NTSK. All right. NTSK Netscope. Interesting. Never heard of it, so thank you for putting it on my radar. Package software, uh, cloud-based security solutions. So kind of getting thrown out. It did looks like it IPO'd recently there in 2025. Kind of got thrown out with the rest of the software names here in 2026. Um, you know, it's definitely an interesting name. I've never seen it before, but how I would trade it is, you know, if you've been kind of positioning into this anywhere around $8, 9.20, if you're new to it, I don't know if I would take the trade here. I'd maybe look for a risk defined level. You could kind of look for maybe a close above $10. Otherwise, if you can kind of get another move lower here into this previous low at 775, that's kind of how I would look at this. Yes, you have the 50-day that kind of just formed recently. Here's the thing. I'm not going to use it as too much of a. I like to use significance with moving averages, not just because it's a moving average, right? So, and then you have the 2025 year-to-date anchored VWAP level there. So, it's a tougher trade, but if you're looking, maybe on a short-term basis, yeah, it takes out 950. Take this for a trade, see if you can get up to 1050. That's a nice trade. That's 10%. So if you break it down on the hourly basis here. All right. Any other tickers? We have about 5 minutes left. Otherwise, I'll put something out. All right. Here's something I was kind of just looking at earlier, just because it's interesting. PLTR, name I follow, name we trade quite often. We are starting to approach here this lower range once again. You saw it back in February, you saw it back in April, and we're right back down here again. Is it ready this second? I'm not 100% sure. For me, it'd be more of like a credit spread opportunity here. But we are approaching a level. You get one more push. I wouldn't be against going some long premium here on this lower level here. If you can kind of get a little bit more of a move down to about 126, 125 there. Maybe you get a little fake out. I'm not against it today. I just think credit spread might be a little bit better just because we haven't started seeing a little bit of a wicking action yet here. What else? We got 3 minutes. I'm not seeing any other tickers. So let's just take a look. I'll take a look at my screen that I'm usually looking at here. This is one that's just up on one of it. So Boeing, interesting. It just kind of triggered. I don't like it, kind of sloppy here. MU, obviously Micron, everybody knows that's been going off. That's giving me a signal, not one now. I'd like to give you guys AMD. Trying to find something you guys can trade, right? Not horrible, right? Like if you wanted to take a risk adjusted trade here against 503 today, to go back to highs or more, that's perfectly fine. You do have a gap. There's a chance that probably fills, so I would maybe look at it as I need to kind of be significantly higher into to close today to hold this overnight. GEV, that was getting some, I think it was put flow earlier for a put seller here. Yeah. So GEV, this is actually a beautiful spot for a name that, it's kind of been, pulling back with the rest of the AI names. It's more of an energy infrastructure complex name within that space, providing natural gas turbines. Yes, nice little level here. Retook back these prior highs that were in the spring. So if we could hold this into the close, you might have something kind of going here. You can kind of use this year-to-date anchored VWAP and this prior low here then as your stopping point. What else do I got on my screens? LRCX. Yeah, that's just breaking out to new highs. Momentum's on its side, so if you're in this, no reason to get out of it. But tough for me with a tougher tape around the June expiration to get long just on a breakout here. A lot of times we see a lot of choppy market action before we see post-June standard options expiration kind of take off with that July seasonality. And if you guys don't know, July seasonality last year overtook as the most bullish month of the year, and that's going back to like 1920s. All right, got one more minute here. UBS group, kind of interesting, giving me a trigger. Kind of a big kind of cup and handle, inverted head and shoulders, something like that. Uh, if you do break out and up here and get a close, you did have a fake out. It's kind of an interesting name. It was a name I really liked in the Iran kind of, once the Iran war was kind of playing out. I really liked it as a dip buy, but it is kind of interesting there too, because this will be a big beneficiary if the war and the conflict does stop. Just because there is a lot of risk, especially like in Dubai, due to the conflict that was ongoing. So that's why you see this nice rally back in a name like UBS. And I'll keep going, David, until you tell me if there's somebody else here. So UNP is coming up on a trigger.
Yeah, sorry, I gotta cut you off there.
All right, perfect. All right.
Thanks, Matt.
All right. Thank you. Sorry about the problems today.
Oh, no problem. It happens. So, all right. Thank you to Matt Timpain of Schaefer's Research. And you can check out their site in the link right there. Also, some breaking news for you. I am seeing live quotes now on SpaceX. So it apparently is fully live on the markets now. 162.74 is what I'm seeing. So anyway, for people who are interested in that, it is live now apparently. Jim, are you there?
I'm here and I'm unmuted.
Okay, great.
So let me share my stuff and get going, huh?
Yeah. So
And are we for 30 minutes or an hour here?
Yeah, 30 minutes.
Okay, sounds good. So I got to get going and get set up here. So let me get the charts shared. And let me get that up there. One second here. Wow. There we go. Okay, let me get this thing sharing here. Boom and boom. And we should be all set. Can you see it fine?
Yep. Yeah, looks good.
Okay, by way of introduction, guys, I'm Jim, the option professor. I've been doing this for decades and decades and decades. And so basically I specialize in options, although I'm familiar with all types of investing. And I am going to share my knowledge, expertise, and opinions today, but I'm not giving out any advice. If you have any questions about your stocks, put them up there, and let me tell you what's going on right now. Okay, first of all, on the S&P. I'm going to tell you exactly what I've been telling people in my news alert and why probably you should be getting it. Here's the deal. We had a pullback here. And again, it didn't shock me too much because when you get up here and you have RSI at, 60 in the 70s and near 70, and then you go to 55 and my lines turn down, pretty much you got to get going on the downside, right? I mean, I don't fight the tape. This is all I do is follow the tape. So this was a sell all the way. Now down here, you had an RSI of 34, and over here you have it at 46 and 50. So you got a nice divergence down here, plus the red line turns up. So above 73.40, it's a long. Now, again, it's running into trouble here. So that's why it's not so easy to go up. But the main thing I was trying to explain to people is I don't think you're going to get a massive downturn down to this area here until you get more of these lines turning over. So as long as we stay under 74.75, which we're doing, these lines will start turning over. And again, right now, all we did was fill the gap. So if we're going to break here and get these red and green and blue lines moving averages to roll over and get this RSI under 50 and maybe down towards 40 or less, then you're going to get the more severe drop. But right now, I viewed this as a buying opportunity down at 72.30, and it has been. Because you see this area here where it filled was right around 72.33 was the low, and basically that was the area where it should stop. If you look at a 5-day basis, again, you have the low over here, 23 on the RSI. You've got your low over here at 36. That means the selling's drying up. The red line turns up. You take your shot and you make some money. So that's basically what has just happened. But again, my cautiousness comes from the fact that until we really start closing above these lines, which is 74.78 and 74.60, okay, it won't let you go much higher than that. And the risk of it rolling over is still there. But if we do get above that number, then all heck could break loose because that blue line's pointing straight up. And you see all this nonsense here? That was just, what they call a false penetration, where they get everybody to sell out of their stock right before they take it through the roof. It happened down here. This should have stopped right around the yellow line. It didn't. It went through it. But once it got back above yellow and then once red turned up, was that a good deal? It was a great deal. So again, that's the setup right now. The other setup that's helping me is this, the VIX. Okay, now the VIX had a gap. You see the gap? So when we were down here, and this is where the market was at its highs, right? I could see that the RSI here was 37 and the RSI here is 38. When you can't get the RSI much under 40, you're looking at the bottom. Because if it breaks those levels and it goes to 32 or 28 or 25, you're going to accelerate to the downside. So it's one or the other in my view. Again, I'm sharing my views. So that was another good reason to take a buy. To take some off the table. Now we're up here. Again, we had the sell signal by the moving averages rolling over on the 5-day and on the 1 month, right? So that's a good deal. Then you got the VIX picking up. That's another. So you got 3 signs telling you what? That it's time to what? Get it on the sell side. Now, after it goes down, look where this gap is. So this gap is around 23.24 and the high was at 23.24. So after it goes into this gap here, and you could see it fill the gap on the S&P, that gave me an idea that we're going to get a rebound rally, which is what we're having. And where's the rebound rally going to have some trouble? Right around here. And could there be further downside coming? Well, possibly. Do you know why? Because you see when it came down here back in December of last year, and then it started to turn up on the RSI, on the VIX. Well, that was your signal that the darn thing was going to start going in a trending fashion to the downside. So here's my warning to you. If this VIX stays above the 17, 18 number, and you can get these lines to start looking like it did back here, you're going to have a down market that might surprise you, because if it ever takes out here, you're going to get a spike up here. Now, what the heck's going to make the market drop? Well, you have got a situation where there is going to be a lot of supply coming to the market. We're already getting some today. You got another IPO coming out in what? Anthropic, and another one coming out in where? In OpenAI. When they have that unlock period, which is 90 days after they come out, that would be in September. So we are now going to be in July before you know it. If July and August continues to show the VIX above 16 and 18 so that these lines can start trending up, my guess is September and October is where you might get a drop. And where could the drop take you? Where if you ever took out 24 on the VIX, here's where I think it's going to go if it has that drop. So again, right now it's rebounding, but I think it's going down towards this purple line, just like it did back here in April of last year when he was raising the tariffs to 300% on everybody. Then he backed away and boom, you got right back on the bicycle. So if we do come down here, I think that could be, and it would be coincident with this, the highs over here. Just like this low was coincident with the highs over here. You see? So sometimes it'll revert back to those highs. So I would be obviously vigilant. I'd save some money up because if you do get it down here, like some people like Tom Lee say, it's going to be the buy of a lifetime because the next 2 years could be very, very bullish. And what a nice place would be to lower to load the wagon down here. Now, talk about long-term bullish. There was a guy from, I think, Federated or somewhere. He thinks longer term, the S&P earnings could go to $4.50 or 450, right? Right now it's in the 300 and change. So if it did jump up there, the earnings jump up because of all this stuff, and you had a 20 to 1 P ratio, the longer term target in the next couple of years could be 9,000. And that would coincide with a hell of a move off of 6,000 or 6,600 if we get that. Again, right now we have what we have. But what I'm trying to say here is I don't think that's a totally unrealistic situation because the new Fed president is in there. They generally test him. The move from 7,700 or 7,600, even 7,700, if you took 20% off of it, which is kind of something that can happen after you have a new Fed guy come in, a 20% drop would take you down to 6,160. You get the idea? The math works. The math works. Okay, but right about right now, let's talk about SpaceX. SpaceX just came out. What's their story? First of all, the best guys who are making money on these things is private equity. And you ever heard of private equity is a longer term investment? Well, let me explain this one. In 2002, the SpaceX was originally seeded at $27 million. That's what it was seeded at. And today it's 1.8 trillion when they sell it. So do you think the guys who did the private equity deals, are pretty happy today? I think they're pretty happy. And when 90 days go by, do you think any of them want to either hedge or get out? I think some people may want to do that. Now, the other facts, 75 billion. Again, we have a situation where the price to sales is 90 on the initial rate, but in the market right now, it's supposed to be going up to 120 times sales, 4 times oversubscribed. All that means is that there's a lot of people who have to still buy the stock. Why is that? Because they're running index funds on the NASDAQ and they have to buy the stock to put it in the index. That's 15 days worth of stuff is what some estimates are. So after 15 days, it'll be very interesting to see if there's enough buyers afterwards to keep the thing floating. Now, a lot of people on the bullish side are saying this is the next Amazon. In late 1990s, Amazon came out with a $400 million market cap, and all they were doing was selling books. So obviously, you'd have to have a big vision to think it was going to move into what it has done. Well, it's the same thing with this SpaceX. If this guy can get all the data centers up into space, if he can get the entire planet communicating on Starlink and all the rest of the stuff, well, obviously, that's kind of a big growth, and that's what you're kind of betting on. But you better be on the Pritikin diet because you might have to live 50 years to see it happen. So that's one of the problems. So anyway, astronomical valuations tend to revert to the mean. We saw that with the ARK funds, ARKK, 10 years ago when it came out. It's about 50% under that. Now, the index that it was put in has done great. So that's where they can hide some of the overvaluations if they put it into an index. So that's why individual stocks can perform much differently than the index. And ARK is a great example of that. So again, you have to be a little bit careful here. The unlock period, the period where they're going to match it to the indexes, they're all coming up. And so, obviously that's why you'd have to be careful. One stock that was supposed to possibly benefit from this was SATS, but it's certainly not doing that. Now, again, yesterday it jumped up, or it has jumped up recently after a correction from 150 towards 110 all the way back to 130, but it's given up the goose pretty good here. So it'll be interesting to see if that is tipping us off on how the actual stock will trade, because these guys got a big hunk of it supposedly when they sold licenses to Musk. And again, Musk is a finite thing. And when you have finite things or you have scarcity, people buy it. And so there's only one Musk, and there's only really one, Google or Facebook or any of these kind of companies. And so that's why people really like it, because of the scarcity. The other thing that's very big right now is and this is a big theme, so mark this one down, the broadening out of the market. And I think this is going to be a big theme. So let me show you. This is market breadth. This is the percentage of stocks above their 200-day average. Okay. If we see this thing take off, now, as you can see, this is what happens to market breadth when you tank. This was April of last year. So if the market tanks, this thing goes down. So if we ever take out 50-45 area, which is what I told people is a very big area, and it takes out and it starts coming down here, you're going to be down in the 6,000s on the S&P. Okay, but it looks like it's trying to make a turn here. And on a 1-year basis, it's starting to break out. You see how it was kind of tanking here, but it stopped. There's a gap down here. There's also a gap up here. If this baby is going to go up and fill this gap right there, then that means the broader market is going to really be going up, correct? I think, is my opinion. All right, so what does that mean? I'll show you what it means. It means stocks like these are going to take off. Maybe stocks like this maybe start taking off. Maybe stocks like this start taking off. Healthcare, energy, banks, even the ones that have been left for dead are coming back. Fast food. Maybe they're going to make a big recovery. I mean, this is McDonald's. It used to be 340, goes down to 270. Somebody wants to take a shot. What about Home Depot? It used to be $430, went down to 290. Maybe somebody wants to take a shot. In other words, fast food again, the Starbucks starting to make a little bit of a move. And then even one like this, which was really down. I mean, look at this on my 20-year graph. It's right down to the purple line. I mean, this is the last time it hit the purple line was COVID. They got 4,000 units, 4,000 franchises. So there could be some things that are on sale that could be very interesting to pick up. And I'm a very big believer in it. Even some of the brokerage firms, look at all the different financials here. Let me show you this on the thing. Does that look like it might be taking off? So again, the financials look, and they got earnings coming up July 14th. I'm not the only guy who knows that. They're starting to front run that a little bit, I think. The other thing is some of the defensive, they starting to look a little bit at Walmart. Maybe it'll make a comeback. This other one has a big gap to fill, Dollar General. Look at that gap up there. I don't know if it's going to fill it or not, but it used to be 160, went down to 100. I've been looking at things that are on sale, companies that, and then here's another one that might be very interesting for you called Galaxy. These guys have got a data center in West Texas that is already, they say 50% leased out, and it might be the largest data center around or whatever. And they've made, this guy who runs this company, Novogratz, is no dummy. And so it's possible this thing could have a pretty bright future. So I would keep an eye on this. On bull markets, what you try to do is buy dips, buy dips, buy dips. But anyway, I would keep an eye on this because it's got a kind of a big story behind it. If you have any stocks you want me to take a look at now, be more than happy to. So let's look at them. Okay, we're going to start out with MSFT. I liked MSFT at 350. I'll show you why. Because you see down here, it was hitting my yellow line. So right here, I know that anything with that 560 that goes down to 360 may have a bounce, particularly when I look at my 1-year graph and I see there's a big gap there. But you see, when it hits my gold line, I know that it's probably going to have trouble. So anything you get down here, you got to dump up here. Now the question is it back to being a good deal? And the problem is this is a software company, and the software people are not where people want to put money, because then you're gambling that they're going to come up with some software that actually could be useful. So where are they going instead? They're going to the picks and shovels, which means your semiconductors, right? They're going to things like your manufacturers. They're going to, that type of stuff. They call it picks and shovels. Okay. So getting back to my point on Microsoft, let's take a look if I was trading it now. What does the 5-day look like? 5-day has me on a downtrend, but there's your 25, and down here you've got 30. Not much of a divergence there. Down here you've got the RSI at 23, and over here you've got it at 28. A slight divergence, but nothing to write home about. Now I go to my 1 year, and there's nothing to say there that's positive. So again, I personally would like to see it obviously hold this 360, but if I'm looking at it, I definitely want these red and green lines pointing up. I mean, holding stuff where the green, where it looks like that, that's a rough racket. So I would say 355, 360 is your floor right now. Let's see if the floor holds, and then let's get a little bit of the trend turning up before you stick your good hard-earned money in there. All right. Dollar General has extremely serious competition from Walmart. Yeah, that's why it's on sale. It wouldn't be on sale if it was all good news. And like I say, it's not one of my favorite ideas by any means. I already told you the financials were, right? Right. Okay, Home Depot fundamentals not good, will not be moving up. That's, like I say, these ones I'm talking about that are out of favor, again, they're not my favorite ideas. My favorite ideas, I say, are the banks, because July 14th is coming, and their earnings probably are good because banks tend to make money when everyone is working and everyone is spending, and retail sales are going up and that kind of thing. So, and they're bringing $1 trillion things to market. So I'm going to make a big wild guess that they're making money. So that's my number one pick, is the financials, which I already have talked about in the last month. So this movement today is not my first entree into it. I've been bullish on this thing since it had its drop. So anyway, that's it. With regards to Tree, Lending Tree. Okay, well, here you go. You got RSI over here at 25, and then you're over here at 40. So this would be a deal that would fit my idea that the selling has dried up. The key to this thing is this right here, and we're going to know this next week a lot more. Will Warsh come out and say inflation's a problem and we need to be tighter with monetary policy? And is this trend here, which I've been saying looks like it could explode to the upside? This is the yield on the 10-year note. If this yield on the 10-year note goes to 5 or 5.5, you're going to have problems. And you're definitely going to have problems with Lending Tree, because their rates are going to go up and then no one will be buying houses. So the bottom line is that now if he comes out and he says, listen, I got a new way of figuring inflation, and with the way I figure it, everything is great, that would indicate that he has no plans on hiking. He's going to try to keep rates down and maybe even create a scenario where you can cut rates. Okay, if that's the case, that'll be very good for Lending Tree. And again, Lending Tree is very similar to a couple of other things that I think are on sale here. Like I say, these things, used to be 450, it's down to 37. I understand why people are interested. It's got a lot of room to rebound, but it's still got a lot of problems here, technically. But again, I can see, and of course, I think the options are probably pretty cheap. Let's say you think this thing might go up. Let's take a look at an option here. Let's go out till October. And the stock is at 37. And 40 times they're buying here. The last trade was 237 to buy it at $50. It's kind of a home run idea. Why is it a home run idea? Because you're saying $50 it's going to take off. Now, if it did take off, obviously, the moving averages are way above it. So if it ever did break above these lines here, which comes in at 44, 40, this is a bet that it's going to break above 50 and take off. So again, I'm looking at things also like DH Horton. Again, not looking that great here, but if you go to my longer term graph, that blue line's in an uptrend and red is above green. So the most likely thing to happen here between now and the end of the year is that DH Horton might make a big move to the upside, unless you break under here. And then the other one was, yeah, well, DH Horton was one of the big home builders. And again, home builders and loans, probably a similar kind of an idea. So, and again, on the 1-year graph here, that's not a bad looking chart for something that might want to take off. So if this takes off, probably be good for Lending Tree. And of course, there's other ones that could be good in that sector as well. All right, let's see what else you got. A to RW. Not ARM, huh? All right. Well, again, looks pretty good as far as trends up. You're certainly not early. You're getting into stuff that used to be 110 at 230. God bless you. And so that's not my cup of tea because I specialize in options that go in the $200 range. That's not going to happen here. And I'm trying to get them in the $200 range that could explode. So let me show you some of the stuff that I think looks good when it looked good. Okay. So I'm just going to rattle them off here. These were all on the alert. Okay, why did I like IBM? IBM was down here with an RSI of 27. You know what the RSI over here is? 41. You know what that is? A divergence. Once it starts turning up, you know what the 245 calls went for? $290. Do you know what they went to? $9,200. Okay, that's what I'm kind of looking for. I don't find every single one of them, but that's what I'm looking for. Things that are out of favor or things that are in a range that are going to break out. You see this guy here wasn't doing much in April. You buy an option for June, and by June, you're getting some good luck there. What about ANET? This thing gave you a couple of different bites at the apple. First, it was down here, breaking out above here. Then it came down, gave you another bite at the apple here, and then you get out, and then you give it another bite of the apple here. So this has been a pretty good one if you're using my averages, which I have come up with myself, and I know how to read and interpret, so I like them very much. Other ones, you know these names. So this is what we're looking for. We're trying to find things that might break out. Once it got above purple and gold, school is let out. You take a chance. You put up a call premium. Can't lose more than that. And if it takes off, believe me, you can make some money on these things when you're right. If you're wrong, you lose the premium. It's I'd rather, my view, and then what I like personally, everyone's got their own things. I like, rather than putting up $15,000 to buy an option for $2 or $3 and see if it'll fly. Because if it doesn't, I don't want, 15 grand going in the toilet. And if you buy 10 of them, you're at 150 grand. If you buy 10 these ideas, it's 2 grand. Now, again, it's not right for everybody, and there's risk to it, and it's risk capital only. But there are people out there who have risk capital, and there are people that are suitable and have risk tolerance like that, and that's what this game is about. But it also can be used as a hedge. Somebody might have said, you know what, I'd like to buy those stocks at 160, but I don't want to buy it here, so I'll just buy the option. If it goes up to 280, you can exercise your call and put up the rest of the money. So you can use options as a lot of different ways if you know what you're doing. I've been doing this for 3 decades, 4 decades. I know what the heck that works. I've done seminars in every state in the union. So, this, I'm not the, guy who fell off the truck, used to sell used furniture like a lot of these guys you hear. Okay, so what else do we got here? Let's see. Google. Google's a good one to talk about. Again, all these stocks that have been raising money have all gotten whacked. What do I mean? I mean that Meta raised money. Boom. Oracle said they're making money, but they're raising money. Boom. Google. Boom. Amazon. Boom. Okay. But these are interesting to me now a little bit because, again, they've had their correction and filled their gaps. So if Google can close above 380, 375 to 380, then it could be back on the bicycle in a big way. And let's not kid ourselves. This company has it all cooking. They've got chips, they've got search, they've got, whatever. Okay. So again, but I'm still in the wait and see department. Let's see what it looks like on the 1 month. You see, still sloppy. Those averages aren't pointing up. So, again, anything could happen. But again, if it started getting above 380, right, then these lines would turn up and then your likelihood of winning would increase dramatically. So again, definitely it's on my radar because it's a fantastic company. I just don't know that if it's going to come down and test purple or if they're going to be able to get these lines to turn up. One day does not make a trend. If you're really aggressive, you got your low surrounded by higher lows. So you could take a shot if you'd like. On the 5-day, yeah, it turned up. Well, you got a signal here. RSI at 21, RSI at 37. There's your signal. Red line turned up. If you're short-term traders, should have got in there at 348. So you already got a signal. Now you're wondering up here after it's up $20. That's how you can lose money, buying stuff that's already moved. So that's my story on Google. Very much positive on it. Your buy signal came and went, and now you're trying to find out if this thing can hold water between 360 and 380. Because if it can, it comes back down, you're going to lose money. Let me just show you Amazon as well. That came down to an interesting level. Look at this. This thing could easily stop between 230 and 235. Or it could go into the dump and try to do what? Fill this thing. So let's take a look at what it looks like on a short-term basis. Very much in the downtrend. But what do we have here? We've got RSI in the ballpark of 32 and 26, right? And now we got RSI in the 33.42. So that's good. Getting above 240 would be very positive for this. 238 to 240 would be positive. This is another one where the RSI down here was 31, then it comes down to 27, and now we're at 34. So there could be something happening here, but I'd like a little bit more strength because, again, this is catching a falling knife, classic case. And again, another reason why it might stop here. Okay, so you got great reasons why it might stop here or go down to purple and fill those gaps. So it's either, in my view, it's either stopping here or it's stopping here. Because I don't think it's going to go into the total toilet. Not yet. Remember, I'm more of a September, October kind of guy because that's when they're going to unlock all these IPOs. And that's why, that's where if this inflation doesn't back off, Warsh might not have any choices and all types of things. This ceasefire might, they're talking about in a couple, 3 weeks, our inventories on oil could be quite low. Anyway, I only got a minute to go, so I want to invite you to join up. It's Option Professor, Options Alert. Every Sunday, you get an alert from me with ideas and reviews of the markets. You get my cell number so you can text me because it includes coaching for free. You get 8 hours of coaching in the yearly, and so you should check that out because it's a $1,600 value for free. And so again, I'm out of time here now. I would like to again invite you to either email me at optionprofessor@gmail.com and let me explain how I can help you, or what David is going to put up on the board. Click on it and get started. My rates are extremely low for what you get, in my view. So again, I hope you guys join up, and I hope to talk to you because in our one-on-one coaching sessions, maybe I could help you with your option trading. This is Jim, the Option Professor, and David, back to you.
All right. Thanks, Jim. All right. Yeah, Jim's link is in the chat, so check that out. And all right. So next up is David Gonzalez. David, are you there?
I am here. Can you hear me?
Yeah, sounds good. I turned your camera off when you logged in, but you can turn
it's
it
fine.
on now if you want to.
It's fine. I could stay incognito.
Okay. All right. I see your chart now. Looks good.
Yeah, my
Are
chart
you
pulled
ready?
up.
Yeah. Are you ready to start?
I'm ready to go.
All right. I'm starting my recording again now.
All right. Perfect. Hello, everyone. Thank you, David, for having me back. It's a pleasure. This one was the last one was a fun one. So everybody go ahead and put whatever symbols you want me to take a look at. I'm just going to say I am primarily a futures trader, intraday futures trader. But I have traded stocks I traded stocks before futures for quite a while. You can see here I have my SpaceX IPO because I'm looking at it like a hawk to see if I could pick my spots eventually. And then I'm just gonna quickly say that I am a analyst in the face of the Fivers. We're a proprietary trading firm. So you can sign up to trade our capital after you pass an evaluation. All right, so let's get into these charts. I have the oil futures pulled up because I was I was on another stream earlier today, and we were mostly talking about the SpaceX IPO, the big elephant in the room. But I there was a tweet going on, and I didn't have time to see what the crude oil futures look like. And it's funny because I was saying before the war, I have my big arrow here where Epicure started, where we had that gap up. And I keep on repeating that, I'm a technical guy. I like to look at technicals with, of course, a layer of what's going on overall in the geopolitical situation, etc. But I really trust my technicals. And I was saying that, hey, even if the war hadn't broken out, we were stair stepping and we were bound to have, higher oil prices, not considering anything else. And then again, here I'm looking at the technicals and we have a nice pennant formation. So I'm looking at two scenarios here. If this situation doesn't get resolved soon, just based on purely technicals, looking at how clean this is looking, we could have a couple of things. Let's look at, we'll call it the bearish case for the price, but I think everybody wants lower oil prices, me included, because the gas at the pump, the price of the gas at the pump has been rising. But if we could possibly get something, a failure in a continuation here, we'll find out what happens at that 200 moving average. But I would like us to go back to those, $60 prices. It would seem cheap now after we've touched, over, what was it, 119, I think is where we got to. So I think that would be nice for all of us. But keeping something in mind, we've gotten to, usually they say if you get over about 60% of the formation, the pattern fails, which I'm hoping, the pattern fails rather than continues. But if it doesn't fail, so here we have about 130 bars, so 60% would be 79 bars. So that would take us from here to about here, right? So this is where we should have had our continuation here, but that did not happen. But what oftentimes happens, and I hope it doesn't happen here, is you'll get a failure and then a reclaim and you'll continue higher. And maybe we'll get those 120, 140 plus prices on oil, which I hope, honestly, I hope not, because I'm not a bull on oil. But hopefully we don't get that. We get a failure and we come back to earth with these prices, and the situation slowly but surely gets resolved. So we'll see. But don't be shy, guys. Put your things in. Oh, I see Netflix here. All right, let's take a look at Netflix. Zoom back out, look at this on a longer time frame, wider time frame. All right. As you can see, my charts are pretty naked. I use being an intraday trader, I mostly look at things shorter term, but we're pulling back quite nicely here, and looking to tag that 200-day moving average. What I like to do is compare to the past. Of course, I don't know if the financial situation of Netflix, but just comparing to the past, because we can only look left to have a reference. Man, that was a 74% pullback. Let's compare that to here. About 44%. So that would put us right at a 50% pullback. So I would say, if we get around those $70 prices, of course, we're testing this area here, maybe for a short-term play, considering a couple of things. We've pulled back quite a bit. we are around a prior level of resistance, right? We are reaching that 200-day moving average. So that gives you about 3 checks in your favor where you might want to start nibbling in a little bit. I'm not saying go full port here. What I usually like to do is wait for the asset to find a level of support, retest a prior high, and form somewhat of a pattern like that. Now, we could argue that we've already gotten that, right? And we've found a level, and then we're retesting here. But with 2 things in mind, with the fact that we're reaching this prior, older level here, we're reaching this 200-day moving average, I would be patient and wait. And one interesting statistic that we were looking at earlier this morning is when you have a huge IPO, coming in, and I know a lot of people are dying to buy SpaceX. A lot of people tend to sell, including institutions, tend to sell, and a lot of assets tend to pull back because there's a lot of selling going on in order to be able to afford and buy the new IPO. Now, we'll see what happens. Hopefully, SpaceX doesn't behave like I had a bunch of IPOs. I looked at a bunch of them just to kind of get ready for this one. But if we look at Figma, we hope that this was highly anticipated, and look at what happened. Hopefully, this doesn't happen with SpaceX, and it behaves more like Meta, which was back in the day, 2012, highly anticipated. If we zoom back into that day, we recovered quite nicely. Now, you had to wait about 4 months, I would say, after the IPO. So from these prices all the way to here. So we're talking, what is it? 483 days because before you were able to, if you just bought here blindly, before you were able to recover. We'll see what SpaceX does. But, if there's a comparison, the closest one, in my opinion, is Meta, because that was, the biggest tech IPO at the time. I think it was either 104 or 140 billion. And yeah, we've recovered quite nicely after that. So we'll see. I, for one, think that SpaceX is going to be the new talk of the town. I think it's going to replace Nvidia in, deciding whether the market goes up and down. And we'll see. Actually, I want to see how Nvidia behaved today. I expected to see somewhat of a sell-off overall in tech. We'll see. But don't be shy, guys. Put your tickers in the chat so I could take a look at them. Fun fact, Nvidia was the opposite of SpaceX. It was a very muted IPO. It was once amongst many during the early 2000s. So, kind of went under the radar for a while here. If we take a look at this, so of course it wasn't, I think it was priced at $80 back then. And then, had a lot of ups and downs, and now you would have been significantly up had you held, of course, if you were, a long time holder, or even if you were playing it in and out. I mean, what a what a run. All right. We have FET. Let's take a look at that. Forum Energy Tech. All right, FET. $50 range. That's nice. Average volume. Okay, market cap. So 605 million. All right. So it's not a penny stock, but oh wow. Okay, on a weekly chart, we've pulled back quite a bit. This is your weeklies right there. Let's look at this. Okay, let's zoom in a little bit on the dailies to see if we can find somewhat of an interesting formation. Okay, nice accumulation up there. It had a good run this year. Let me look at, it looks like we went from bad earnings to positive. I see a lot of red quarters here, and then we've started ticking green, so that's a positive. All right, and just a few things to keep in mind here. We are, remember, prior resistance becomes, prior support becomes resistance. We are testing here. So I would prefer, if I'm looking at this, and this would be a nice setup for me longer term. If we are able to break back into this, right, and hold above this is very clear. Like I just mentioned before, if you get, somewhat of a higher low and continue and go test these highs, that would be a good setup for me. Now, you always need to have multiple scenarios in mind, right? You always have your bullish case, your bearish case, and your neutral case. Taking into account that, did we touch the 50s? Okay. Taking this into account, this prior high right there, I think we probably break back into here and then sell off again and go test lower levels, maybe the 45s, before we go and reach back in. Now, I have no idea what the financials are, but look at when the earnings are. The earnings are in what is it? End of July. So yeah, I think you probably need to wait. And I say bearish case, that would just be, a pullback so that the 200-day can reach closer to the asset. And that, I think, is the area where we always talk about premium and discount. How much is this pulled back? That's a 22% pullback, pretty healthy. But I think 30% would be the defining area where you might want to really start nibbling in. So maybe look for another push downwards, right? If you're looking at an overall trend, and I like to do that when you're stair stepping up or stair stepping down. What I could see here is we're stair stepping down. So we've had 1, 2, we probably need a third push before we revert back to the upside. So what I would be looking for is a continuation downwards, of course, if you're bullish. If you're not, you probably want to see if you could short once we retest that pocket right there. So something like this, you pull up, test this, and go down and retest this area, just like we behaved here, right? Or even here. The behavior, the personality of the asset will continue to show itself. We're stair stepping now. It's pretty clear. So what I would wait for is for us to get into this area before I start nibbling in long. And then if we want to look at somewhat of a trend, what I would be expecting, and I'm actually going to leave this here so I could see if it actually behaves like that, is somewhat of a fake out here. We move down, we go test these areas here, we wick below a little bit, and then we revert back to the upside. So I don't know what your time frame is on this, but from here to here, that's about 42 days, so about a month. And then maybe after earnings, if the earnings are somewhat what the market wants to hear, maybe we continue to the upside. So that would be my take on FET. Let me know if you have any other asset you want me to look at. Still looking at SpaceX right now. This is looking, I like, I know a lot of people are not fans of chart patterns, but this is again looking like a nice little pennant here. So maybe the shorts get squeezed if they're shorting and we get an explosion here. Let's see, how much of a move would that be? So from here, that's about $12. So 8%, 8 to 10%. Maybe we get another 5%. Because we got to remember, it is a trillion-dollar company. Can't believe I'm saying these numbers, trillions. Now we used to be talking in billions, now we're talking in trillions. All right, this is looking constructive here. As a futures trader, I'll take that trade on the NASDAQ. All right. Any other assets you guys want me to look at? Let me know. Let me know. I'm just gonna jump back in. Gonna remind everybody that At the Fivers, we fund you and you could trade our own capital. So you could head to thefivers.com. We just opened our new futures trading platforms, and you can choose your programs and come trade our capital. And then if you have fun, since the World Cup is going on, you can do your little predictions here. Put your name. We don't necessarily need your email. You enter the tournament, predict whoever's going to win, and we have some goodies for you. So you could do that. All right. We were just talking about Google earlier today, and I took a look at Google as well. And I think the pattern we're seeing here on Google, the idea I have is the same one, where I think we need to continue. Of course, you found a bottom here at around 348, call it 350. I think that bottom needs to be retested again before we continue higher. Again, we're in the middle of summer. We'll probably have that usual summer lull, and then towards September, October is where we'll see bigger and more interesting moves. But like it was mentioned earlier, Google has everything on its side. I mean, Google is deep in the AI space, deep in, basically has its hands everywhere. So definitely looking to see this continue higher. Let me look at Amazon really quickly, zoom out. Look this. I haven't looked at them Amazon in a while. All right. So again, everything pulling back. I'm wondering, did everyone have to sell a little bit just so they could buy, get their hands on the new kid on the block? Well, not so new, because everybody knows Elon, but I think that I'm looking forward to see how this asset behaves in the near future. Let me look at what Tesla did just for funsies. Sorry for all my squiggly lines here. You just zoom in. I want to see this, the weekly chart. I want to see what it did on the daily. All right. Interesting. Kind of moving sideways here. Anyways, I had the old IPOs here just to remind everyone of, here's how, and you guys have experience, how IPOs behave. But just keep in mind, this could behave like a Figma for a while and pull back significantly. But it also could be a Google, where from the day it IPO'd way back when, you were almost never underwater. So keep that in mind. Then you had the Metas of the world that gave up gains for a good amount of time before recovering and paying off hugely in the long run. So keep that in mind, whether you like Elon or not, whether you think we are going to be a spacefaring civilization in the future or not, or whether you just want to, trade the thing on and off. Keep in mind that you should have different scenarios in your mind. All right, so we're looking good here on SpaceX. I said I was probably targeting 5% on that. So let's just keep this here, see if it plays out. So right there, 5% from the highs. There we go. So we'll see if this goes to about 176, 175 on the day. I've heard call outs for $400, which is a crazy number given the size of the company. But we'll see. We'll see what happens. We will see what happens. Does anybody have any other tickers they want me to look at? I haven't looked at Robinhood in a while. This was one also that IPO'd a little bit, since IPOs are the theme. of the week. And again, a very good example of one that did not have too much hype, received a lot of hype around the, around there when we had all the GameStop thing going on, kind of move up first, pull back, was underwater for quite a while. Let's take it from here more or less to here. Was underwater for good 3 years. So you basically had 3 years to buy if you wanted to hold this long term as an investment, and then you could have recovered nicely. So let's take it for about, let's say you had an average price of $12 all the way to where we are today. That's about 650%, not too shabby, and 1,000% in October 25. So that's it's pretty nice there for Robinhood. SpaceX continuing to want to move up. This is a 5-minute chart, by the way. This is intraday. Let me see how much volume this has done. 1 million. Okay, it's trading decently. A little bit more muted than what I would have thought. But this is interesting. On an intraday basis, it's nice pennant forming. We're kind of moving up. We might do a little bit of a pullback before we continue higher. So, something like that. We'll see. As long as we hold above these levels, above these 160, call it 168, 167s, this might explode higher. So if you see me looking up, I'm just looking at my position because I took a position right before entering this webinar. So I'm looking at that's why I have SpaceX open. Target is around here. So we'll see what happens. We will see what happens. Is anybody trading SpaceX today? That would be a fun one. Actually, to prepare for this, I had looked at a recent one, which was, let's pull this up. Where was it? Was it AKTS? No, it wasn't AKTS. Where is, I can't remember the ticker, but anyways, the pattern formation was similar to that on the IPO. All right, here's the pullback we talked about. But as long as we are able to hold above these levels, I think we could probably push higher. We'll find out if the volume's there. Otherwise, it fails, and this has just been what everybody's been talking about. It's exit liquidity for the big guys that have been holding this for the longest time, and they're dumping it on the market. So let's see. Another thing we will see sometimes, and this is a tighter time frame, is you'll see the breakout. Well, let me just do it over. You'll see the breakout. As an intraday trader, I see those a lot. You'll see, the coil form. You'll see the breakout. You'll see a failure, and then you'll see a recovery. So that's another thing I'm looking at possibly today, as long as we continue to hold these levels. This is looking good on the day. So not something I'm looking to hold very long, but we'll see how this plays out. And another interesting one has been, since we're talking about IPOs, CoreWeave. I don't know if anybody traded that or held that, but look at how well this behaved after getting to the market, right? We had the first day print here opening around the 3940s, pull back a little bit. How long was that? That was about a month, 30 days, and then it was blue skies ahead. right? So considering the fact that some of the rules have been changed on the NASDAQ for SpaceX, and they have changed for, I guess, everyone else after that, or at least every significant company, I think we're going to see interesting behaviors in the market, right? Once an asset IPOs, we might see behaviors change because the lockup period is different now. And then the waiting period to be listed is different also. So I think that's going to be interesting. Let's see how it behaves. So far, it's behaving very well, honestly. This has not been crazy like I thought it might have been. It's behaving like a clean, high market cap equity, high asset. This is a very, very tiny chart. You're looking at a 1 minute chart right there, but this looks very clean so far. Let's zoom in. All right. We'll have to take a look longer term how SpaceX behaves, but at least on the day, it's acting right, right? Of course, maybe it's getting a little bit of help. Maybe it's being bid up by the powers that be, but looking good here. Looking good so far. Hopefully behaves like core weaves and moons. Well, we can't even be talking about moon anymore. We need to talk about Mars. This one's probably going to go to Mars. So we'll see how this one goes. But everything's looking good so far. Let me look at the NASDAQ again. As a futures trader, I'm always looking at the indices, day trade list, NQ. I thought we're due for a longer pullback, but it looks like we're going to hit my first target of 31,000 before we pull back. We'll see. But yeah. Anyways, guys, this is I think my time is almost up. I don't want to be stepping over anyone's time here. But check out the Fivers futures. Don't risk your own capital if you're interested, or if you just want to, try your hand at futures. You can head over there, and we will welcome you with open arms. And you can definitely give prop trading a try, right? Let me see. NASDAQ behaving pretty well. Let me zoom into the day, see what we're doing. Yep. Behaving pretty well. We put it side to side, similar pattern formation here on both the NQ and SpaceX. So I think we're gonna reach my my target here of 170, call it 175 more or less. So nice, looking very, very constructive right now.
All right. Thanks, David.
Thank you very much, David. Thanks for having me back.
Yeah, thanks for being here. Great analysis.
Awesome.
And yeah. All right.
Awesome.
Good. So let's see. Oh yeah. So David's link is in the chat again. So check out thefivers.com. And next up is Michael Filguera. Michael, are you there?
I am. Good morning.
Hi. You should be able to share your screen now.
Okay.
And just a quick reminder for everyone, I am recording each session individually, and I am also live streaming to YouTube, so the entire day is backed up instantly to the full archive on YouTube, and then I'll have the individual sessions posted as soon as I can. So, all right, Michael, are you ready to start?
I am.
All right, I am starting my recording again now.
And good morning to the West Coast, good afternoon to the Midwest and the East Coast, and good evening if you're in Europe. My name is Michael Filguera. I am with LogicalSignals.com. That is my website. And I don't know what else to say. Most people know me by now, but I'm here to talk about and analyze your choices instead of mine. I do produce every day 4 updates, 2 on the S&P 500, the ES, and 2. Oh, see there? Good choice, William. We're going to dive right into them. and 2 on the NASDAQ. I do 1 in the morning and 1 in the afternoon. And the first one out of the bag, we're going to go take a look at the spiders, which is, of course, a very interesting ETF. And let me see, I've got to take it up a little bit so that you can see. On my own personal count, it's not necessarily up in the air, but we're still kind of waiting for some proof that the market is done. And we have seen at least all the way up to a cycle 3. Now, if you don't know anything about Elliott Wave is just, it builds, if we're dealing with equities, we're progressively just building on 5-wave structures, 3-wave decline, 5-wave structures, 3-wave decline, for producing our waves. And then we have degrees. And so let me, for just a moment, I'll get right to that spider. I want to get to on the SPX, and I'm going to go out to my maximum monthly chart, and you'll see what I'm talking about. What we have is all of the degrees. This is 29. This is 1932. So I have a lot of data for the S&P 500 for the cash index. And so I can start with a grand super cycle. And actually, it wasn't me, it was R.N. Elliott himself that started at this level. And so I just picked up from there and then went to super. So the cycles are grand super cycle, cycle, primary, intermediate, minor, minute, minuet. And those are how we label the waves. And so Elliott came up with the patterns. And so it basically is that you have an impulse move. And the impulse move is going to consist of 5 waves in the direction of the trend. In this case, the trend has been up since 1949, actually. And so with this particular wave, and you can see that within it, we've had a lot of down. This was stagflation. And when the dollar was removed from gold, wasn't backed by gold anymore, so it became a fiat currency. That all took place right in there. This was the great financial collapse of 2008, 2009. Believe it or not, that's the crash of 1987. Barely noticeable in the bigger scheme of things. So when I talk about where we are now, I feel that we're finishing the cycle wave 3, which is this color, and all the way up here in 2026, it began in 1949. So this has been now we're getting to be a very extended market, and for a lot of reasons going in both directions. So going back down to the spiders, so that I can kind of bring this up to date. If I feel, here is the spider. So again, the way that it's labeled, this was the spiders into, because they didn't start trading. I think, let me just see what it was. They started trading back in 1993. So the data, of course, I can pick it up from the S&P. So here I have it in that same degree of completion. And that would be up here in this cycle 3rd wave. Now, if this cycle 3rd wave took 76 years to get where it is, then you have to consider that if we're going to go into a cycle 4 correction, it's at a minimum going to be between 9 and 13 years. So that's the top that I'm waiting to get put in place, because I believe that the market can start to decline. Now, what we're up against right now is reasons that the market continues to find to bolster and hold up the market. And for a while, up until today, and we saw a little bit of a shift in that manner, not quite as heavy as I thought. We saw that the semiconductors have just been like lit on fire. And so one day we'll come in and they're just bailing out of them. And the next day they're coming all the way back in. And so we're seeing really large moves. And what I believe is more behind them than just people changing their minds is options trading. Now, the options trading has, I don't want to say, I want quadrupled, quintupled over the years. And there are options on just about everything that is tradable has options. And so what also the whole industry, the options industry, has just exploded. And now there's been added things like now we have zero DTE, 0 days to expiration series. and those pretty big in the SPX. And then we have Monday, Wednesday, Friday expirations. We have weekly expirations. We have quarterly expirations. We have monthly expirations. So it always seems that we're always working towards one expiration or another. And so that in and of itself, we need to have an understanding of options and what is really behind those options. And so that's where, if you've studied options or you trade options, you understand that there are what we call the Greeks. Now, those are important to understand because it used to be that we felt that the stocks themselves were the ones that decided or just pushed what the price of that index was going to be. And that's changed. And a lot of people don't want to admit it, but it has changed in that it is now how the options trade. So the saying is, so go the options, so go the markets. And that, my friends, is the truth. Now, what gets put into place through all this option trading are gamma levels, volatility triggers, call walls, put walls. So you have to have an understanding of those as well. So because why I'm describing this is because that's really what goes into my analysis. I was an options market maker here on the Pacific Coast in San Francisco, but I've also on the London traded options market, on the Amsterdam European Options Exchange, in Germany, and then I came back to California. So I've watched how all these things developed. And now that we're actually, everything is quantitative, everything. Everything's an algorithm, and they are advanced algorithms. And so that's added a whole layer. So has it changed what I do when Elliott? It does, actually, because Elliott was formed because R.N. Elliott noticed that there were human emotional reactions to certain moves in the market. And so he began to put that all together, and that's how he came up with the Elliott wave principle. So looking at this, you can see that right there, March the 31st, we started this dynamic wave up. And it's really coming from, at the time, all-time highs up here, came down perfectly, formed a three-wave pattern perfectly. Now, I wouldn't say perfect because it took its time and gave a lot of head fakes on the way, but it got there. And I remember putting this into place and then telling everybody, I said, if and indeed that's the fourth wave and we're going to launch in the fifth wave, I believe it will occur very quickly. And I believe it will be very dynamic. And that's exactly what we're getting. And why would I say that? Because we, at the time, as we started to continue to rise, we were in new high territory. Never been here. Markets thin out. You're not going to, if you have, say, for example, you've got a big buyer, and they're going to come in and they need to buy the spiders, right? If you can't do it via options, you're going to come to the SPY itself to hedge. Well, you got a lot to buy. There's nothing offered. So, but the algorithm will just go and scoop everything in its way until it's filled that order. That's one big difference than when we really were operating under a specialist system where you put your order into the broker took it to the floor, said, hey, I'm bidding for 5,000, 10,000, 50,000 shares of stock. And either it was there and they could figure out the price, or he just sat there and bought it along the way. That's not how it goes anymore. An algorithm gets the order, and that's the marching orders are get it done. And they get it done. So we'll see a lot of spikes. We'll see a lot of up and down type moves. So the other thing that's really affecting our trade right now is volatility. And volatility is an important thing to understand, but I don't want to say they weaponized it, but it feels like they've weaponized volatility. And how have they done that? Well, because there's the VIX, which is not tradable. It's just an index of options and how they trade on the CBOE. Then we have the volatility on the volatility, the VVIX. And that's where the big boys come to play. And then we have all these other instruments tied to volatility. And so that's created a new plane in how we trade and what we do. So when you're trading options, implied volatility is extremely important, and everybody wants to, go with that. So when the implied volatility gets up to high, it is just like a cattle call. Because everyone can see it. If you're an options trader, you'd be looking like, oh, wow, look at that volatility. I am going to go trade there. Why? Because there's so much premium in those options that it's just like they're giving away money if you know how to do it. Having said all that, what we're getting now are these big moves in stocks like AMD, Broadcom, Intel, Marvel, Microsoft, NVIDIA, SanDisk. By the way, folks, I don't know if you checked SanDisk today. It's trading at above 2,000. Not because everybody thinks it's a great buy, but because of the options, and they expired today. That's the other important factor to toss in. So when you're trying to put your wave pattern together, it can really come under attack simply because we're moving into an expiration and things get pinned. And all of the stocks, if we're looking at the spiders, it's based on the S&P 500. There are 500 companies and they all have an expiration, along with the spiders, the ES, and the SPX all have options that expired today. So that plays a big part. And it does affect how I put up my counts. And so you have to be more flexible. You have to have more than just one. But I still believe, I've left it in, that I believe that we have reached that high for cycle 3, which tells me that the market is on the cusp of a longer term corrective pattern. And well, here's what I tell people. As long as the trading stays at the way it is, and you've decided that you want to come in and be a trader, then do it. Trade. It isn't a matter of like, well, I just want to catch the top and I'm going to buy a put and I'm going to wait for it to go down. That's not how it works anymore. It doesn't go like that anymore. So, but if you want to trade, well, I would pick it up and do it, because there's going to be plenty to do in both directions, up and down. So in this one, I think I'm going to bring it down now to, let's go to my hourly chart. Now you can see volatility, 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 volatility. And it comes out of nowhere. I have to tell you, it's like all of a sudden, either the S&P, the ES, or the NQ, or whatever you're watching or trading, suddenly will just start to drop or rise, and like it's not going to stop. And it's nothing like who's term bullish, who's term bearish. It's the size of an order that comes in, and the algorithms is going, I have to execute. I am going to do my task. So we get a lot of strange moves. I think that how I'm counting this, I'm going to go back over to the ES, because that's where I actually have it all printed out. Now, if I'm done all the way up to a cycle third wave, what's going to be one of the confirmations is that when on my hourly chart, I can count clean 5 waves down. Unfortunately, I can count 5 down, but I don't think it's been that clean, because we've had this move, we've had this move, we've had these moves, and this as a fourth wave, it's a little bit out of place when I have to compare it to this. This being a fourth wave, not too bad when I have to compare it to this. So that's a degree, same degree, that degree, and that they're the same degree. This was huge. This was a day where it's like it spiked up, finished, and then nosedive for the balance of the day. It was incredible. And if you're a trader, you're probably just wondering, well, what am I supposed to do? How do I do it? If you are out there believing that, well, we've come in and we've listened to what they have to say on the financial media, and they're telling you that semiconductors are going to go, they're going to go, they're going to keep going. So what I term all of this as, it appears that in our market, we have not only institutions, but we have a lot of traders that are chasing alpha. That's what I call it. Now, alpha is money. Now, you're chasing the ability to watch something that's going to move quicker. So you're chasing alpha. What is the alpha of that? So what's the percentage that I'm going to make money, et cetera? So it's chasing money. And traders will do that simply because they want to trade and they want the thing to be active. So you'll see them flow from one to the other, to the other, to the other. And that's what's happening now. So it's very confusing to decide. But I think what we're doing right now is an ABC up to form this degree, wave 2. And I think here are my markers. We've already gotten above this one to bring it back down. I just set it up there for myself. But if we're going to continue up, that's our next resistance level, 74.80. And then beyond that, 75.41, and beyond that, 75.85. Can the market do that? Sure. You will never hear me say no. But this whole count would become invalidated if this wave goes up and takes out that high. So there's basic rules, and you can follow that. But in this case, you can see the big expectation all week has been SpaceX today. Now, yes, it's now up at 173, came out at 135, and it's under great volume, et cetera, et cetera. You've got the chasing alpha. It's like a dog chasing a car. That's what it looks like, and that's what they're doing. They're running in, but they're doing it in the stock because there are no options yet that I'm aware of. It takes a while before they list those. So what's going to happen here? Well, I look at SanDisk and I'm like, wow, that I think it'll turn, and it'll turn hard. I think the next turn is going to be destructive because of the way they've traded it to the upside. When you have stocks like Micron, which has been today, it was down 50, then it was up, now it was down, now it's back up, and it's over $1,000 again. We've seen a lot of these stocks, AMAT, go all over the place. AMD up 28 today. I pretty much will tell you, it's like if we went over and looked at the options, you'll find them. You'll find the strike, and they get pinned. So there may have been a big short or something at that strike, in terms of, could have been, a move above it, and maybe it's a call at that strike. Well, that's going to force it to move even higher, that they go take it out. And now they have to cover. So with everything going in, it becomes a little bit more difficult. But in terms of the spiders, I feel we do have a potential statement to make that, yes, can the market go to new highs? Yes. Can the market go to 8,200, as the Bank of America analyst said? Yes, it can. And why do I say that? Because there's nothing in its way to stop it. If you turn all the algorithms on to do it, or you keep bolstering all these stocks and they keep coming in to play them. And let me understand as well, it's like when you're going in to trade this stuff, it's not with this like, well, I'm bullish on the stock. Maybe you got a tip, maybe you heard that that's something, and then it happens. So I think that if I leave it the way it is, this count will remain valid unless this particular move goes up and takes out that high. If it does, then I will make a shift like I've done in the NASDAQ, and this third comes up to here, this 4 comes over to here, and we're in that 5th wave. We're in the final wave. That's kind of the process that's been happening. The market extends another leg. It's not that the analyst is wrong. It's just that the market is extending, and there's really not any way that we could say, well, that's a good reason. Having more experience with analysis and trading, I remember thinking to myself, well, we had all the earnings, and they really weren't any outstanding earnings. All of them reported better than expected. Market rose, then dull, and then took a nosedive. So the next thing up online was SpaceX. Now, let's see what happens. If you noticed, a lot of those semiconductor stocks took a nosedive this morning and then come back. And what I think was happening is a lot of people needed to get out of positions because they were going to go put a position into SpaceX. You just got to rotate money, so I got to have it to begin with. So I think some of that took place. And now it is expiration, because it's expiration Friday. And so it's time. And I think what we're seeing is all of those high-flying stocks, the semiconductors, are likely going to get hit pretty hard. And so that will, of course, be reflected here. So again, those are my levels, and I think actually it's going to be controlled to here. I do think it can get up to here, but it'll spike and die. It's kind of my thought. All right, before I get really talking about the same thing, let me go try to do some others, because this is what I'm here to do. I'm here to do your stuff and not mine. Hims and Hers Health. I don't know anything about that, but I can tell you right now, they've only been around since May. Is that true? Yeah, it is. No, June of 2025 is when it started, and it nosedived. Well, I can tell you that it came down in 5. Wait a minute. That's 1, 2, 1, 2, 3, 4-ish. I would think it has another leg down before it will really rally hard again on this one. I know that I've seen the ads on TV, but I don't really know anything about this company. I don't know what their numbers are like. I don't know what their sales are like. Obviously it's Class A, so they got a couple of classes of stock. But the trick is to be able to really see 5 down, 3 up, and then 5, but it's a third wave and it's subdividing, because I'd have to say 1, 2, 3, all the way down to 13. Whew. That was a big drop. And then this was a launch, but it's corrective. Still a launch, a big gap, but it's corrective. Coming up, then you see they sold it off, and then it comes back up. And I think this is the start of the next leg down. And this is just in response to the market today. And I think it probably could hold below 29 or hold below 30, and then we get another leg down. And you can measure what that leg will look like, because you come down wherever this 4 finishes. If it's here, you can do something like this, because this I would say is wave 1. You go like way over here to this low, and you take it over to the top of 4, and there's your markers for the next decline down. Can't go 1.618 because that's negative, so the stock can't go negative, but it certainly can get down here. And again, I have to think in terms of what we have coming. And if you're a new company and you're not, yeah, it depends. It depends on what it looks like inside. But I think this is how we get a lot of just companies go out of business, because they get caught up in this and they didn't have enough time to really establish and to have money in the bank. For example, like Apple does and Google does, and all of our large cap stocks, they've been around for a while, or have the success that NVIDIA's had, so that they can just really build from there. I got about 5 minutes. I never have enough time. Oh, okay. Well, I did those 2. One more, if somebody has something that they want to see. Otherwise, I'll just keep talking about the indexes. Because the NASDAQ is actually, like the person before me, I trade the NASDAQ future. And it is a beast. It is a beast. And if you like volatility, if you like speed, if you like just craziness, come on in. The water is choppy, but not impossible. And in fact, I'll just kind of go look at that one, because this one, I'm running the opposite count. I'm running this one is if what it is there was the 3 and this was the 4. I need to move that out because I moved it today. And so I believe that the NASDAQ has the ability to get, as the previous guest said, 31,000. And I think I'm going to have an agreement. Well, I got a little bit higher. Mine is 32,000. Now, that's not cast in stone, and there are no guarantees. To understand what Fibonacci does, it's just using a number sequence, and we're multiplying these moves to get an estimate or a guesstimate of what the fifth wave is going to look like. How high can it get? Well, first, I'd expect the fifth wave to get to new all-time high, which now sits at 30,807. 30,801. So I expect it to get above that level. I think it's going to stall out and not get very far. But should it, the next level is 32,368. So I probably would side more with the previous guest in saying 31,000, because that's just 200 above this level, and that takes us to that new high, which is important. So I definitely would be there. Now, the big thing for me is to watch the cues. If you're following gamma levels, if you're following the options, the triple Qs trade way more options in volume than the NASDAQ, the NQ, and the NDX combined. So when I'm looking for what's going to trigger a rally or a decline, I'm looking at the Qs and I'm looking at what their levels are, what their gamma levels are. And coming in today, the Qs yesterday broke below 700 twice. And now they're trading at 722. That's just overnight and today. So that's 22 Q points. That's a lot. Those are big moves. So if you're a trader and you're trading options, or even if you're trading the future, these are big moves. But the thing is, people say, oh, the NASDAQ is $5 a tick. I want to just state very, very clearly, the NASDAQ rarely trades in ticks. It trades in dollars. And it just goes in dollars very, very quickly. So it's $20 a point per contract. And those are the minis. So you can get into something, it turns on you, and suddenly you're down $500, $600, $700, $1,000 on a one lot. And it goes that fast. So if you like that, if you want that adrenaline kick, go trade the NASDAQ. It is really something. What else? I'll just add what else I do. Again, on YouTube, I do a daily update on both the ES and the NQ. And then on the weekend, I do a weekly update, and that is going to be the cash market. So it'll be the NDX, the NQ, and I take a look at the Qs. And in the S&P, it's the SPX, the ES, and the spiders. And also on the weekend, I take and do an update on gold, silver, and platinum, which have all really been doing very well, actually. And although I still think there's still a chance in silver and in gold that we might come down one more time, maybe it won't. And I got markers, so if it goes above that level, then I know what it's doing. But I am actually pretty bullish on silver and pretty bullish on gold, actually. And David, I'm going to stop right there. David?
All right. Yeah. Thanks, Michael.
You're welcome.
Sorry, I got distracted for a second. But yeah, great analysis. So thank you for being here.
You're welcome.
All right. So thank you to Michael. And let me post your sites in there again for everyone. And all right, so we have 6 more analysts to go, and Dave Landry is up next. Dave, are you there?
I am. Can you hear me?
Yeah, sounds good.
I'll go get the video started.
And yeah, you should be able to do that again and share your charts.
Yeah, let me get that shared and we're ready to go. Okay, a couple things while we're waiting on questions to come in. And let me see, will I be able to, let me see if I can see the questions. I'll get them in one second. While we're waiting on questions, I want to point out a couple things. This is the TFM 10% system. And my theory behind this system is if a market is going to lose half of its value, it's going to lose 10% first. and there's a whipsaw filter of the moving average in here. So in order to sell, the market has to be below, and this is designed for the S&P 500. It does work in other markets, other indices, I should say. You just have to be careful because the volatility of 10% might not be enough for a more volatile market. But anyway, as long as you're within this top zone, which is I call the don't worry, be happy zone, that means you're within 5% of the 50-week closing high. Everything is okay. I know, haha, don't worry, be happy. But if you get 10% or more, close 10% or more below that level and below the 50-week moving average, which is catching up to the 10% line, and this is a weekly chart, okay, then you would exit the market. And it's a pretty good system as far as keeping you out of the market. Knock on wood, it would have kept you out of every bear market in history. You lose a little bit going into it, obviously. With any system, you do that. And occasionally you get whipsawed, like the last move that we had recently. I would consider that a whipsaw move because it got you out of the market, and then it's re-triggered a buy signal. So the signal, let's see, it'd be a little further back here. So back here was a whipsaw signal because your exit would have been here, and then your buy, which is 2 days of what I call a Landry light, lows greater than the moving average, and it has to close within 10% of the 50-week closing high. So that's anywhere above this dark pink or hot pink zone. So that would have been your last buy back here. Again, that was a whipsaw signal because it got you long again. And Greg Morris says it's the best. Whipsaws are frustrating. Bear markets are devastating. You could survive frustration. So just a real little simple system to, when the market begins to sell off, it's not so big of a deal now that we've come back quite a bit. But when the market begins to sell off, it's something that you want to pay attention to. The other thing I'm noticing lately is recently we only had one of these sectors with upside Landry light, meaning lows are greater than the moving average. And I'll show you that. Let's zoom in on this one to show you this XLK. And only one sector had this out of these 11 major S&P sectors. So that suggests that the rally wasn't that broad. The good news is we are seeing some new sectors begin to join in the fray. And we'll take a look at some sectors here if we have time throughout the presentation. But anyway, nice little pullback. This is what I call a Landry light pullback. You're simply looking for daylight, meaning lows are greater than moving average, and that is illustrated down below. I call my indicators illustrators because you also have to look at the chart. You can't just rely on an indicator, obviously, but the indicator helps to illustrate what's happening in the chart. You can see nice green here, meaning the count of the bars is very high, okay, 40-something bars, and then it comes down to touch of moving average, and that's actually a tradable pattern when it does that. And another tradable pattern, and we're seeing it now in the SMH, is what I call a trend knockout. And I did talk a lot about the trend knockout in yesterday's Dave Landry's The Week in Charts. So if you want to learn more about that, my YouTube channel is youtube.com/Dave Landry. But with that pattern, and we're just triggering into it today, you're looking for a market to have a fairly hard sell-off, and that's going to knock out some nervous Nellies, the Johnny-come-latelys, the people who buy near the highs of the market. They have the worst staying power monetarily and mentally, and they get shaken out. And if that trend returns, they have to put up or shut up and buy back in. Also, the eager shorts tend to short at the new highs, and when the market begins to sell off, they tend to pile on, and that is pent up buying. So that can help the market along. So the semiconductors, which is kind of cool because they were leading the market, and now it looks like they're going to lead the market again. So that's a great thing. So getting asked about now, and let me just switch over to my other, let's share a new chart here. NOW. Okay, so this stock it's taken off from lows, which this is a bow tie, or was a bow tie back here, but it's come all the way back into where it broke out from. So when you have sectors like quantum computing that look like this, just going straight up, there's no need to try to trade something like this that took off and then came all the way back in. So you want to find something that's trending. If you do want to trade something at lower levels, find something that's made the bow tie, but hasn't taken off and come all the way back in on the downside. And I'll show you the bow ties. Let's take a look at SNX first. SNX, oops. And then I want to show you this Landry 100 over here too. So SNX, William was asking about this one. So yeah, this looks pretty good. This is more of what you would like to see in a trade, okay? It didn't have much of a pullback here, though. I'd like to see a little bit more pullback. See, back here, you had kind of a nice pullback, and it took off again. So to me, it didn't seem like it had enough knockout type of move to knock out some players and attract some shorts. So I would definitely put this on your momentum list. Now, if we take a look at speaking of momentum, we take a look at the Landry 100 real quick, and we sort them by, this is 100 stocks that I manage, so to speak. Now, this isn't real money in these, but I will find stocks in this list that I do trade, okay? And sometimes stocks in this list become part of my trading service. I run a scan every day, which will produce upwards of 1,500 stocks or more, sometimes 2,000. And I'll look at a lot of those stocks just to get a feel for what's going on, sorted by volatility. And that tells me where the momentum is flowing. And I keep a separate momentum list from that. I also manage this Landry 100 list. I keep it to 100 stocks. If you were to just buy stocks that are making new highs, if you did that with just only a few stocks, or even if you were a breakout trader, you're going to be wrong a lot. But if you spread that risk, so to speak, out within 100 stocks, you'll occasionally catch some really, really big moves. And you can see this one here is, since we put it in, it's up 743%, 600% WDC. AXTI just was taken out to the list last week. And that one was, I think it was up over 2,000%. And by the time we took it out, it was only, I know, up 1,300%. So managing this list, and it's something I'd encourage you to do on your own. Just create your own list and follow it. It shows you where the money's flowing and flowing out of. When these things begin to weaken, they come out, okay? Lately, I've been seeing money come out of the semis, in particular stocks like AXTI, but other stocks within the semis are beginning to rise up. So it's just a little bit of churning within, and then the overall sector still looks pretty good. Now, if I see a bunch of semis get hit, then I know something's going on. For instance, recently, a bunch of all service stocks came out of this list along with a bunch of energy stocks. So it's like, aha, energy is losing steam. And energy, we'll take a look at that real quick. Take a look at like XLE. You can see that's not looking fantastic at the moment. And then all service stocks have been kind of sideways as of late too, okay? So that confirms what I'm seeing here. So I think it's a great thing to track momentum in a list like this. Also, if you follow me on Twitter, you'll notice that a lot of times I'll grab one of these big winners in here up at the top for the day, okay? And then I'll post surprises usually happen or tend to happen, tend being the key word in that sentence, tend to happen in the direction of the trend. And this is, you can see this stock's in a longer term uptrend, and now it's breaking out even higher, up 8% on the day. Let's take a look at a few areas real quick. If keep the stock picks coming, if you want me to take a look at something, I'll be happy to do that. In the meantime, let's take a look at a few things with the overall market. And of course, I guess the elephant in the room would be SpaceX. We'll take a look at that too. Some of these areas like drugs have improved a little bit as of late, but they're a little wide and loose and choppy. So I'm not too excited about drugs just yet. The good news is some of these older winners, as I just mentioned, like the semiconductors, came down here, a bit of a knockout type of move. Again, trend knockout, you want to see a big wide range bar to the downside. In this case, it's also a Landry-like pullback, meaning that it pulled back to that 30 EMA. By the way, when I do my analysis, I'm just looking at blank charts, no indicators whatsoever. You will see me do presentations with Landry Light and things like bow ties, which are the 10 simple, 20 exponential, and 30 exponential moving averages. And that's simply because it's easier to sometimes define a pattern around a moving average to make it easier to recognize and to scan for. But in reality, I use blank charts first and foremost before adding anything to it. I don't use any indicators whatsoever other than a moving average and then the Landry light, which is based on the moving average. But anyway, a lot of these sectors in here, a lot of these technology sectors, that's quantum computing. You can see nice little TKO move there. That's triggering today. That's pretty exciting. When you have that knockout move, it knocks out, again, the nervous Nellies, and then it attracts eager shorts. And think about shorting is you short the stock, but then you have to buy it back, okay? And a short squeeze can help to propel that stock higher. So that's a great thing about that particular pattern. So some of these areas like cybersecurity also doing pretty good as of late. There it is right there. You can see nice little pullback. That looks poised to make a new leg higher. A trigger would probably be about, let's say about 87 or so. If it takes out that, then it has a good chance of going back to its old high. So that would be a good thing there. Gold stocks have been looking pretty ugly as of late. You can see they've rolled over and they're well below their 200 simple moving average. By the way, the 50 and the 200 simple, I usually don't plot those. They don't matter until they matter, okay? And they are well watched. So I will occasionally put them on the chart, especially when the market gets iffy. Now, all in great in the world. Some areas like rare earths not looking so hot, pulling back a little bit toward those moving averages, but just kind of wide and loose and sideways and choppy and kind of ugly in general. Robotics and automation, they're still in an uptrend, but they've pulled back fairly deeply. So it's very important for them to take out, let's say, this high right here before getting too excited about them at this particular juncture. Cloud computing has come back a little too far. It recently took off, came back in. It still looks okay, but I don't like a market once it drops below the prior peaks. And MAGs would be a good example of that. So notice that MAGs made kind of a double top in here and a shorter term double top right here. And then it sold off fairly hard. Notice the moving averages are coming together and beginning to spread out. Let's jump back in to this other package, and I'll show you the bow tie proper order. So again, this is Landry light, you can see. And then let's put the mags in here. And Landry light's one of the simplest things you could do, and it really could help you to see what's going on with the market, okay? And Tarzan speak, green is good and red is bad, okay? And you can see we were mostly red here. We had one little kiss right there. So this just counts each bar that is below, the high is below the moving average. So you can see right here, one bar below, and right here you have one bar below. Let's see if we can make that line up a little bit. So there's your first bar there below the moving average. And notice you have a count of one there. And then this count gets bigger and bigger and bigger as the trend progresses. It pulls back to the moving average. So your count resets to 0. Okay. And then it begins to slide again. And then, of course, it went straight back up. And then now it's Landry light to the downside. So this looks like a market that has topped out. So all isn't great in the world. But I think if you focus on those strong areas, and right now I'm working on a piece from a newsletter where I talk about greater fool theory. And when you buy a stock or anything for that matter that you look to sell later at a profit, a greater fool has to come along and buy that from you. So there's two questions you need to ask yourself before you make any trade. One, are there greater fools out there? And right now there is, okay? And number two, am I the greater fool? Now, in an individual trade, make sure you have a setup that is conceptually correct and makes some sense, like the trend knockout, because you've got an established trend and you got a big bar to the downside, which is likely shaken out or knocked out, some nervous Nellies, again, not to beat the dead horse on that, and attracted some eager shorts. And the predicament of these players, if that market begins to rally again, are going to be taken out. Now, off the joke, it's often darkest before it gets more dark. And I think when Bitcoin was up around 100 and something and was sliding, I put out a bunch of tweets on that. And you could see that the trend in general has been down. It tried to rally up a little bit, but now it's down again. And just looking at the green and the red down here, and if it's oscillating between green and red back and forth, that means a choppy market. But if you look at the market itself, you can see that, right? So this is, again, an illustrator. Really simple stuff, but it can really help to keep you on the right side of the market. So let's go back to the mags just real quick. So again, green is good, red is bad, and mags has been pretty amazing in that usually a prior leader doesn't become a new leader in a market. Like oil was just leading, and then oil is no longer leading the market, okay? And oil is not going to be the next leader, likely, okay? I mean, a lot of stuff could happen. What's Greg Morris say? All predictions about the future, a lot of stuff could happen between now and then. So never say never, but usually the old leaders don't become the new leaders. I remember many years ago, I think it was 2008, was the first time that I went to Italy, and I was speaking at a conference there, and there were a bunch of guys getting up and getting their awards for ridiculous returns because oil ran to $200 or whatever it did. And, I leaned over, John Bollinger was there. I'm like, these guys won't be here next year, And then oil imploded. These guys who ran the oil sector funds just had these stupid returns and got all these awards, which is nice, good for them. But usually the prior leader doesn't become the next leader out. Now, there are exceptions to the rule, like semiconductors have been doing fairly well. Okay, RXT, let's go back to the other screen real quick. For Devendra. Okay, RXT. Now, this would look pretty good a few days ago. And like I said earlier, if you want to buy something at lower levels, make sure it has turned a corner, okay? And those bow tie moving averages can help with that. Nice uptrend and pullback, but now it's kind of chopping around in here. I would have been more excited about this one. Now, it's super volatile, and that's the reason I didn't actually trade it. But on its first pullback, that would have been the place to get in on that one. It looks okay. I'd keep an eye on it, but as far as my methodology is concerned, it's a little too crazy for me to go after that one at this junction. Oh, before I forget, let's do SpaceX real quick. So SpaceX, so far so good there, actually. I have an IPO day one rule. So let me talk about IPOs a little bit here and see if I could give you a little tips and tidbits on that. My first rule is never buy an IPO until it trades for at least a week. Now, you might come in and do a day trade on this, which I think is a little wild and crazy. But I would wait to see how this trades before you just jump in. And one of the amazing things is, again, I usually don't trade an IPO till at least the 5th day. And let me show you something real quick here as we go through these. Let's see. So a lot of times, here's a potential example. A lot of times on day one, an IPO will make its all-time highs, and that's it, okay? So look at this EROC. It's already imploding, and this is a 3.7 million shares today. So this is a thick stock, okay? Volume-wise, at least. And it's looking kind of ugly. So if all you do was don't ever buy an IPO unless it trades above its day one high, that would keep you out of a lot of trouble. And usually, I could usually come up with examples, especially like, even now on the fly, where these IPOs they never take out that day one high. Here's another example. This was all over the place, but look, it went to 30 on day one, and now it's at 17. So it's essentially halved in value. This one never did take out its day one high. So I can give you a plethora of examples. Now, I do have a pattern. I only look to get long an IPO. And look, here's another one. Look at this. All-time high there, and so far it's imploded. Now, I do have a pattern where I will buy an IPO as soon as day 5, and I call it the buy at B. And the thinking there is that it's a little bit of a breakout type of pattern. Now, I'm not a fan of breakouts in general, unless you're in an inefficient market like IPOs, and then sometimes the altcoins could work nicely with that type of reasoning, the breakout type of reasoning. But with IPOs, when they make a new closing high on day 5, there's a few caveats. It has to also close above the day one high. That's the day one rule. sometimes they could be worth going after. So let's see if we can find some. So here's what I actually bought yesterday. Now, it's not doing so well. I was doing pretty good this morning, but didn't quite hit my initial profit target. Or did it? No, it did not. Anyway, you can see the reason we wait, number one, day one rule, okay? Now, if this high was higher than this high here, then I don't worry about that. But this is, you're buying on a new closing high. So the buy would have been here. I got in a little bit earlier than that because it was strong on Friday, or when was that? Yesterday, I mean, Thursday. Anyway, you want to wait until it trades for about 5 days and then decide what to do with it. So in a case like this, 1, 2, 3, 4, 5. Okay, so you want to buy the first new closing high, which would be this high here, provided, of course, day one doesn't set the high for the week. So this is a cool little pattern, something easy to recognize, and a lot of fun to trade. I know you had a party with me. Now, there's a few caveats to all this that we don't have enough time to get into today, but there's a few things like there's a $20 rule, and now it's a $30 rule. Stocks need to be higher than $30 a share. You need to have ample range, which is something you eyeball. But as a general statement, you're buying stocks as they go up, as opposed to trying to bottom fish or whatever. So here's just another random example. Okay, day 1, day 2, day 3, day 4, day 5. Okay, so this is your closing high. So you would buy on a close above this high. Okay, so notice again, the high was set not on day 1 this time, but on the 4th day. Okay, and then the stock implodes. And there's lots and lots of reasons for this to happen. I don't know how many we can get into today, but one reason is you've got people looking to get off the hook. So SpaceX will probably encounter some selling from people looking to get paid. I know there's a lockout period for at least 5 days, depending on the person, or 15 days, I think. And there's a bunch of other things that'll happen. So who knows what's going to happen with this day one pop? This day one pop does not surprise me at all. It's what happens next that's impossible. That's important, I should say, not impossible, important, or as the kids say, important. So if we see this come back in and start making new highs again, then it might be worth considering as a potential IPO. The first deep retracement sometimes is a good pattern to trade in IPOs. So far so good in SpaceX, obviously, but we'll see what happens longer term. And remember, with an IPO, you're buying the promise of the future as opposed to the reality. And the reality is not really great at this moment with SpaceX, but maybe the promise of the future is. But most of the time, that promise doesn't materialize, and that's why I have the day one rule. Let's take a look at the P's. So we're having an okay day so far in the S&P 500. Longer term uptrend still intact. The 50 simple has hold. Lots of Landry light above that, so that's looking pretty good. NASDAQ's looking pretty good too. So far so good there. Any other stock picks you guys want to take a look at? Be happy to do that. NASDAQ's looking pretty good too. So far it's pulled back to the 50, bounced off of it, and so far so good. Speculation has run rampant lately. The SpaceX could be the fat lady singing. There's no way to know that, but it is kind of an interesting, everybody's trying to pile into that at the moment. And Linda Raskey has a saying, feed the ducks while they're quacking. And I think that's what happens a lot of times with IPOs. And that's why you see that day one high. People sell into that, especially those who've got it pre-market. IMAX. Yeah, this one's a little wide and loose and all over the place. If you take a look again, like at quantum computing, or this is quantum. Yeah, here it is. Notice that we've got this nice persistent uptrend. One of the simplest yet most valuable indicator is just drawing a line through as many bars as possible, okay? And mathematically, that's equivalent to linear regression. I just like to draw a line through the bars, okay? And notice that it tends to persist day after day after day. And notice that it trades cleanly in that it pulls back, takes off again, pulls back, and then, in this case, hopefully taking off again. But take a look at the IMAX. So if you have sectors that look like that in the semiconductors, and the market itself, oops, that's ugly. the market itself for that matter, right? We could draw a big blue arrow on the chart. That's the kind of action you want to see, where IMAX, it's kind of all over the place. I mean, it's not too far away from new all-time highs, and yeah, it could find its way into my Landry 100 if it starts making new highs with vigor. But as far as a trend you want to jump on, see how it's just wide and loose and all over the place. It's likely to keep acting like that in the future. So you want to find something that trades cleanly, as opposed to something that's kind of all over the place. And the examples I usually use are, if you look at a chart and it looks like an electrocardiogram, like this one does, that it's something that you probably want to avoid. Now, maybe if it starts making new highs and pulls back, it might be worth a shot. But as a trend guy, I'm going to look for something, again, that trades cleanly. Even the Qs themselves, look how cleanly this trades compared to that, okay? So you've got your nice knockout moves, like kind of a double knockout here, one here, and then another one there. So an entry above this high and something like the Qs would be plausible and stop out below the low. If you could stomach that, maybe you'd go with a fewer shares because of the price and everything, the volatility. But anyway, the point I'm trying to make here is, if the market is looking that clean overall, NASDAQ, S&P, et cetera, then try to find stocks that are also trading cleanly. Okay. Any more? We could try to squeeze one or two more in. Roast. Okay. Getting hungry. That sounds good. This is for William. Yeah, as far as trending, that looks pretty good. It's an apparel store. That's not too exciting, but here's the deal. We had this very narrow rally lately, okay? It was mostly and only technology. And now some of these other areas are beginning to join in the fray. So that's a really good thing, really positive thing. Now check back often. It's one day at a time, as I preach ad nauseum. But this stock definitely needs to be in your momentum list. Let me see if it's in the Landry 100. The Landry 100, I tend to kind of focus on more exciting stocks. But lately, look, here's a restaurant, okay? That's pretty good. It's going up. Okay. So I will put some of these stocks in there. So I have been finding stocks in some areas outside, like auto parts. That's outside of technology. But you can see trucking, lots of truckers are starting to come up. So yeah, put that in your watch list, but maybe not to the next pullback. So let me just show you real quick. My website is DaveLandry.com. And if you go to DaveLandry.com/newsletter, you can check me out there and join me weekly. I do a weekly webinar. Dave Landry's The Week in Charts. And love to have you there. You can come there and ask questions. Please come and ask questions. But anyway, this is my weekly newsletter. There's a lot of stuff in here to digest, my Substack and everything else. So check that out. Get to know me first before putting your capital into harm's way. You're risking getting your hard-earned capital. Thank you, Dave Cosmitter, for having me once again. I enjoy doing these immensely, as you know, and so I appreciate you inviting me. And thanks for everybody for attending. Anything unanswered, you can shoot me an email at dave@davelandry.com. Check the newsletter out, davelandry.com/newsletter. Okay, I think I'll turn it back to you. Looks like my time is up. Thank you, Dave. Appreciate it.
All right. Thanks, Dave.
Thank you.
Thank you for being here. All right. All right. Next up is Price Seedling. Price, are you there?
Hello, David. How are you today?
Good.
There we go. All right.
Good. We've been
Share my screen here.
We've been talking a lot about SpaceX today. So.
Okay. Well, I'll chime in with my 2 cents here. Let's
right.
get my screen up. You tell me if you can see it. Okay.
I see it's loading.
Just looking at trading view on the Qs here to start.
And yeah, I see it now. Looks good.
Great.
So are you ready to start?
Ready when you are.
All right. I'm starting my recording again now.
Awesome. Thanks, David. Price Headley here with BigTrends.com. Thrilled to join in on the Analyze Your Trade series of great fellow speakers and traders I look at a lot of stuff. You got to be careful, obviously, about looking at too much stuff because you don't want to distract yourself from kind of what are your core guiding principles. But I'm going to walk you through my several guiding principles so you can kind of see, like Dave was just showing on the cues. Basically one of our favorite trading vehicles. We now have a zero DTE product. It's just got us like 300% plus on our second leg yesterday on a quick pop back up there. Bottom line though is that what we're looking at is a combination of things. We got bands up here. We've got both a shorter term, like not that short term, 80 bar Bollinger Band with the black upper line there. You can see how the cues are just basically blowing through that resistance back or here as we saw the breakout about mid-April, right? So it didn't catch the low. I'm not going to ever be catching the low. In fact, my indicators were initially bearish there for a chunk of March, right? Because we've got like the ADX line, for example, wasn't that bearish because we didn't break our lower long-term 200 bar Bollinger Band here. But basically, we had that pretty good downtrend into the end of March, right? You saw the ADX, that's a green line here that's trending. It's a 14 bar DMI and ADX. When the red negative directional movement's above the blue positive, what does that mean? It means you're making more new lows and not many new highs. So that's what ADX starts to pull up. So that downtrend, which only when it started to reverse here, ADX started to flip the other way, that downtrend was a good one for March, right? You see that it started to flip the other way, positive crosses negative on the DMI lines, but then we need to see that ADX start turning. And that was right about the time, maybe a couple of bars before we got, these are dailies candles, right before we got that breakout, it confirmed there outside of the bands there about April 17th. Also, we've got the CCI, Commodity Channel Index. I like to see it above plus 100 and can keep staying above plus 100. If it retests like it did here on last Friday, a week ago, that retest low, which happened to be right back at our 200 bar upper Bollinger Band. So that should have been support. And unfortunately, it's slightly violated, closed underneath it there at 693 back here on Wednesday's close. Now, so while we've bounced back up above these support bands here, which is a net positive for the markets, we've lost a little bit of the DMIs officially having a slight violation here when they cross like that. We should have held that low last Friday. We broke it on Wednesday. So now as we bounce back up, I'm not going to be more bullish here until the DMI lines go to net positive, blue above red, and preferably get that ADX trending up. You see how ADX is coming down for the last week, right? That's corrective. That's not necessarily the end of the world, but it's saying that the strong trend phase that we had from April 17th, the bend that we had here did not break. This bend eventually did break. So basically those bends but not breaks led to that great rally from mid-April to about the beginning of June, okay? But you can see now percent R is the bottom panel here. It too should have held that retest. So everything was a key retest at the last Friday low. And we had the slight violation to say that, okay, you know what? Now it puts it back into what I would call trading range conditions. I'm not hyper bearish, not hyper bullish here. I'm saying you can expect some digestion to happen. Hopefully not too much indigestion, but bottom line is that that's kind of what we're looking for, right? So is to gauge when are the trend phases. So if we look at the other, put your stocks in, by the way, I'll look at those here momentarily. Here's a great example of how like SPY should have held that low. The retest of that upper red 200 bar Bollinger Band here. That should have held, and to say that we're in the best part of the trend. That was a DMI, what I call KISS. It's a CCI retest and a percent R retest. And you see it violated also on Wednesday. Now the bounce back up is touching up into that upper Bollinger Band from underneath. So you start to now get it's not necessarily bearish here. You can see when you touch up from underneath, you can get little pauses, then retracements, pauses up into the band, then retracements. That was still a bull market last year, right? So as we came off the tariff-inspired lows last April, we bounced all the way back up in those bands. You wouldn't want to go bearish there, but you would want to say that the verticality phase is now moving into a slower phase. It's still trended up, obviously. So that's why we look at things like DMIs. The DMIs holding those retests last year were good, right? Even this spike down October 10th, the 10-10 China tariff threat from President Trump, which of course held that low. But you see, when did it all break down? It broke down, as you can see, we were getting a test back here in January, got another one of those test points up here, a little higher low, I should say there, and that violated here as we moved into early February. So when we did bounce back up, and now the red line means net new lows are above new highs, and we've had a little breakage there. This key test point we told subscribers on our week-to-week updates on that Monday was a resistance level, February 9th. And so that was the start of that downtrend. We had another key test of that DMI line, what I call DMI KISS, on that bounce on February 25th. So you see, those were really effective. The best part of the trend, though, is when ADX, the green line, starts really trending. We like to see it crossing above the declining directional movement here. That's where we went from about March 3rd, of course, to the reversal that came off the end of March, basically called the downtrend in March. So the strong trend, right? So when you're buying options or trading option spreads or whatever you like to do, like I do, the idea here is that you want to put yourself in a position to catch a phase where the trend move is stronger than the loss of time. Okay, so the loss of time is your enemy as an options buyer or net options buyer. You could sell premium all you want, but the idea is that you want to get that directional move in your favor. So then we look at other vehicles like, say, gold. Gold was a very bullish for us last year. You can see how monstrously bullish. Everybody knows about the gold uptrend last year, right? You see the power surge in CCI last August. You see the ADX trend, the first phase up into the mid-October high, then a pause. ADX came back down, then started to trend up again December 12th, and you see it led to that blow off top into the end of January, where we got the ADX spiking. The DMIs got too stretched away from each other, and then we got that hard reversal. That was just a bend but not break, actually, on the end of January 30th, last trading day of January pullback. We did retrace back up. But you see now we've kind of lost the DMI lines, right? You see that they started to break on gold when this low broke from March the 3rd, which only undercut about a couple weeks later officially on the gap down there on March the 18th. So I believe that was a low of 459-ish, and you see we closed. Yeah, we didn't close 459 a quarter. We didn't quite break it on that March 17th St. Patrick's Day close. It was the March 18th close. Officially now, bears take the ball on March 18th on gold at 444.74 close. Okay, you see as we bounce back up, do you see the DMI test the other direction? Now the DMIs have come back to touch each other the other way from underneath. The bulls are trying to take a shot on the bounce back. And you see that that's a classic kind of island reversal. We gap up, then we gap back down. We said that high, April 17th's high. I'll notice April 17th came back again. That high, 448.70, was resistance. And so you can see gold breaking down through 400, undercutting the 200-day average, which is this blue line here. So while I like the premise of gold long term, it tells you that, hey, this is going through a corrective phase where the bears have the ball in the short term. And so, sure, you can want to talk the long-term story all you want, but the reality is if you're not careful, you can get left holding the proverbial bag. This is especially critical when you trade options. Okay, so now you start to go into like sectors, and you know that the biggest winning sector of all, it's been semiconductors, right? Chip stocks, AI, revolution. Of course, big blast off on the SMH, that's the semiconductor sector. You can see we got a retest. That, interestingly enough, that retest low last Friday for semiconductors, just a few pennies under 570, you can see we managed to hold it. Even though we spiked below it intraday on Tuesday, we closed back up at 591. We tested down, the market broke down on Wednesday's close, but it held 570.9, held it by about a point above that last Friday low, and now we're rallying the last couple of days. Guess what? Semis are still leading. We even had our DMI kind of key test point off of that spike low on Tuesday under that 555 level. So that DMI support is right there at 555. Band support also was touched. So you like to see that all your support lines are holding, and then you start to see you come out of that, and you start to see that we get an opportunity to trade semis, right? So then you start saying, well, which semi should we trade? We see NVIDIA, not so great, right? It should have held its DMI line. It kind of lost its band support. But, one that Jeff Bezos was talking about yesterday, ASML. Okay, now this is a harder one to trade because it's a $1,800 stock. But it's interesting that it was making new highs yesterday when the market's going through this indigestion, right? You want to own leaders in your portfolio. The problem is, of course, 1,800 shares. You buy 100 shares, you're coughing up 180 grand or whatever. No, most people are not doing that. So you can buy a share for a couple grand, but the idea is that you can trade options on it. And a lot of these high vol situations, I like to preferably buy something a bit in the money and then sell an at or out of the money call against that in the money call. Okay. Of course, the popular ones, MU, you see it's kind of lost its strong trend phase. It's still outside of all of its longer term bands. You see, we kind of tested that 80 bar Bollinger Band, that upper black line held that low last Friday, which was around 864. It's been bumping back up. Guess what, though? The options are expensive. So you got to remember, you got to be careful about trading these. You look at AMD, it came right down near that band. We got a DMI KISS test point here, held that low as well. Slightly violated the Friday low, though, so not quite as good as the SMH. When you see 464 should have held, we closed at 452 a couple days ago on Wednesday. So while we're bouncing back there, we're saying, okay, what about Intel? Intel, of course, very volatile. You see, came all the way back, one test under this band. We never want to see it lose that one close below low, which it didn't, 98.33. You can see that held, and we've now ripped back up to 125. Of course, there's resistance there, right? So you've got to, if you're really trying to zero these in, you can say, take it from your daily chart and then go look at an hourly chart, right? So then you can start looking at it and say, okay, ooh, we're getting close to this upper band breakout, but we're not quite there. We've got ADX trending with the move this afternoon above this morning, or that was Thursday morning's high, 119.41. We broke out above it. You can see on the pop-up right away this morning, 121.25, the first hour close there. Okay, so that's confirmed bullish on these other trend indicators. The only thing that's kind of holding in check is our upper band resistance, which is sitting around 127.73. That was right in line with the highs in the last hour. So this one's close to going. We can get on through that 128 level. You can see that it could indeed pour on some more gas. So again, semis looking for the leaders. We do like to trade options on some of the other AI stocks, not just NVIDIA, but also like a Palantir, which you see has not been as good, although we caught this quick run for a 10 bagger, believe it or not, in really short-term options here. So you see that as Palantir went from kind of quiet 131 and in a matter of a couple of days was 163, that 30-point move, again, when you start dialing it down even into the 30-minute charts here, say, how did you catch that? Well, look at the 30-minute pattern here. This is going back to the breakout that happened right off of the breakout on Thursday morning, May 28th. You see what our ADX trending up pattern looks like. You see as we break out of these bands, see everything's starting to pour on the gas here, and we're only at about, in retrospect, 138. Look at how those band breakouts will surge. Look at how ADX keeps on trending up. Look at how CCI stays broken out. %R stays in the top 20% of its readings, Larry Williams percent range indicator. So just in that little window right there, thank you very much, Palantir, right? So the key is knowing when to catch these. I've got analysts that are constantly scanning our systems. We've got a lot of different systems trading single stock tickers, whether you like to trade Tesla, of course, let's talk SpaceX because, of course, Tesla is one that we do like to trade. Of course, recently it's been a little choppy here. We look at the longer term daily chart for our Tesla options traders. And right now you can see we're underneath the 200-day. So we kind of lost that little bit of support there. It's gotten a little bit choppier on Tesla here in the short term. Let's talk SpaceX though. And you say, okay, SPCX, guess what? Don't have much data there. You got one candle, okay? You start breaking it down. Even an hour is not going to give you much because it didn't start trading until midday today, right? So you start going, well, can I do this on a 5-minute chart? You can. But you see, it's a little choppy, right? I mean, it started off as a net positive on our DMI lines. We don't even have CCR %R data yet. Well, we could get it on a 1-minute chart, but you can see it's actually breaking down a little bit here in the last 10 minutes, right? You can say, what? 10 minutes? Well, you see, there's your ADX cross. It happened right there right as I started at 2 o'clock. It was saying that's a bearish setup here. See, this last one didn't do a whole lot. It started to go down, then it started to flip, and so you would have scratched out of that for basically a break even. But this one broke down here. You can see about 172.5, and it just hit last minute 166.5. Now, guess what? SpaceX doesn't have options until Tuesday this coming week. That's really fast for them to get options out there on a brand new IPO. Obviously, with it being such a huge historic listing, we're talking about, of course, a couple $1 trillion stock valuation or whatnot. The bottom line is that, yeah, it's going to be something that's going to be popular with a lot of traders. So the bottom line is going to be, of course, then, how do you trade it from here? Obviously, interesting to see. We don't trade that right off of that first 11:46 1-minute candle there. You're just basically gambling if you do that. You're looking for structure in anything you trade, right? You can find structure through a lot of different elements here. And of course, as you break this little band here, we're saying, okay, yeah, it's still downtrending. Now, I'm not saying you should go short it here. No, got some support right at that low. I'm a big fan from a trade management perspective of even saying, you know what, if you put the trade on that ADX cross, you trade it back into a prior support level like this 168, you're probably taking some profits there at 168 on your short, maybe on take half of your profits, and then you can basically tighten up your stop to break even on on the rest. So if you catch it and you get flipped the other direction, you still make a little money. And if it keeps going, this one looks like it wants to keep going on the downside. Again, don't quote me on it. Over the next 14 minutes, anything could happen. But the idea is that you can start saying, well, do you expect it's going to trade back to this next secondary low, which is about 161, 161.10? So, and I don't try to be exact on it. I try to say, maybe you get to 161.5 and say, good enough. You don't have to catch it exactly to the penny. That waiting for the last penny can cost you a lot of profits and worse yet, greater risk. So the principle is, even as you look at the cues on that 1 minute chart, they've been strong today, but you see what's starting to happen here a little bit on the intraday. We've kind of chopped around here recently, right? And we've kind of been getting this little battle being fought right in our bands. We're into some band support, but basically we're also, kind of coming off that band resistance. That's a 1 minute chart. You're going to cause yourself a lot of whipsaws if you go that low. You can see the 5 minute chart still is a net positive. We had a DMI kiss right at this low at 721.29. And did we break it? We're on the verge of breaking it right now. Looks like if we close under that right here, we could quickly trade back to that next low, 716-ish, where I'd said take it back more like 718. That was that prior high. So, that's possible. You can see they get back into 718, and now that we're starting to undercut that 721 and change. It's just now in the 1 minute starting to break down. Okay, so basically I'm just saying, there's a lot going on, obviously, and the question is how geared up and jacked up do you want to be to have to track this stuff moment by moment? Obviously, I got a team of analysts myself that are, even when I'm talking to you, tracking all these patterns. But I advise more getting in tune with like the hourly chart as a swing trader. So you look at the hourly and you say, okay, well, the hourly on the Qs was good back here in May, but you see, where did it break down on the Qs, on the hourly? Well, that DMI kiss, that low should have held right there at the start of the day on June 3rd. That low was 741.02. You can see that it held in there until the gap down the next morning. It closed at 737.1. That is your bearish signal. The DMI lines have now gone net negative. Then you see ADX starts trending, and you see that as it really breaks down, then to start off the next morning on last Friday, of course, we went vertical down to our lower Bollinger Band. All of this is to say, just be prepared. Know how to take advantage of that. I think you'll find that you'll be a better trader. Now, let me make sure I haven't missed some questions that you might have for me as far as potential. Let's see. Okay, TSLL and FTI. Thank you for those. Okay, so TSLL, remember, I do own some of that in a long-term account in my retirement stuff. It's not doing so hot right now, but I've kind of scaled into it over time, done pretty well, buying basically the leverage 2-to-1 Tesla long. You wonder, how is Tesla going to get affected by SpaceX, right? There's been talk of a potential merger. And you can see that basically longer term, it's basically been flat, right? You can see that essentially, if you're defining it off of these the 80 bar Bollinger Bands, you can see like the last support was around 10. We got close, didn't quite get to that upper, got up to 17. Now we just came back to 12. And so bottom line is that we're bouncing up here to 13 and a third. Bottom line is that, it looks pretty choppy, right? It doesn't look like it's got a whole lot of trend pattern here. As you can see, our DMI test point here actually got a slight violation, 1254. We closed below it at 1204 back on Wednesday. So it just means that, okay, if it goes into that bearish DMI pattern, you can see you got a long wait, right? So I'm not really recommending it for shorter term trading right now. If you believe in a lawn and a merger coming, that's fine. You can believe whatever you want, but the charts are going to tell you the tale. Now, how about FTI? So really nice example of great trend strength. You can see back into October. You can see that first ADX wave there. Sure, we get a pause. DMIs come back, test. You can see that DMI kiss point, I call it. When they cross, when the negative cross the positive, that is not your sign to go bearish yet. that is a sign, or to get out of your longs. It's a sign to say, mark that low. And you see that it basically hung right into that low and then took off again. But the best trending phase, when ADX turns back up, you can see that's a little bit later. We get outside of these bands, we take off again, little bend but not break in the ADX right there. We test some higher, another bend does violate right in here. So you'd stop it out in about this area from an ADX trader perspective. If you're holding the bands, you hold it all the way until this closing low hold. That does hold, but actually this next one here you see doesn't. You stop it out in this zone here. You can see you've been choppy ever since. If you're a DMI trader, you'd actually hold it until that next day, and then the violation gets you out. So the point of it is that there's loads of different names. You know, when I was trading this past month, like a name like F-Cell, fuel cell energy, you know, that the whole trend towards, you know, how are these data centers going to get powered, right? And you can see there's just a power breakout there. You see the ADX trending. When we get this little bend, I actually bought a little bit more onto the dip there back into the 17 zone, and then it ripped again to 25, 26, 27. But then it just violated and undercut that ADX bend down right in this area, and it's kind of started to tighten it up here. Now it's kind of chop city. We've violated our band, so I'm not recommending that here. But the DMIs are close to touching, but probably going to be slow on that one now. But the point is, that reminds me, what about some of the wild and crazy ones like a Bloom Energy? A lot of people talk about another data center name, energy related name. Well, you see Bloom should have held that DMI test, should have held that band low, 252, we undercut it. We closed 234, and as we bounce here, now we're bouncing and hitting this as resistance today. So I'm not messing with that one right now. I know it looked good intraday, saying no, let's wait on that. It's something that we don't want to be heroes on, especially because of how expensive the options are. But when you catch it out of those waves here, when we really surge, you can see how powerful it is. What about quantum stocks? You look at a name like a Rocket Lab, right? When it took off, it really took off outside of these bands here. Big surge, big ADX move. You see, you're trying to catch that sweet spot of that quick pop there from about 105 up to, got to 150 plus. And then you see as it bent down here, violated that low right there. You got to have a game plan for basically how you can take some profits off the table and still let part of it run. And we're big believers in a lot of our strategies these days about taking either half off at a double, or one of the even bigger breakthroughs, like for our 0DTE QQQ product that we actually just scored that like 4-bagger on the second part of our position yesterday, that you say, okay, like the Qs yesterday, if you were looking at a 5-minute chart, which is what we look at for our 0DTE Qs product, this is yesterday going back into the morning. And you see yesterday morning, we get the initial breakout, and you can see we actually managed to catch this quick little pop to the upside. And we managed to thus get out of we needed to close about that first high there. It did right there. Caught that quick pop as it went literally just from like 700.8 up to about 706. Caught that very quick pop there. Got a 50% gain on 2/3 of our position. And then we told subscribers, just let it run till 3:30 that day. You can see if you put a stop in there, you're going to get stopped out on this retracement back to below where you got in. But when you sell 2/3 of your position at a 50% gain, you've got a risk-free position. And then we hold it, and you see by 3:30, look where it was. That was back here, I should say. Turned out to be right near the high of the day yesterday. It was out at about 718. We had a 705 strikeout for like 13 when we paid 280 for it, right? So to get the idea that, okay, you've got to have some game plans on how you're going to manage the volatility, how you're going to manage through the inevitable ups and downs, especially of options trading, especially as you get to shorter and shorter before expiration times. That's constantly what we're teaching our subscribers about. Now, let me quickly mention a special, and I'll come back for any other ones I might have missed here in a moment, but special extra bonus David and our team talked about doing for you is a freebie. If you're one of the first 100 traders to take advantage of this, I'm going to give you a free coaching series that I do on a variety of technical indicators I've used in my 37 years of stock and options trading. You can use it for futures, you can use it for Forex, you can use it for Bitcoin. Same principles of how demand and supply works in the market supply. So we teach you about how to use the %R indicator Larry Williams developed. We use something called Big Trends bands with that. Acceleration bands is how I launched BigTrends.com in '99, tapping into the internet stock accelerations of the mid to late 90s. Commodity channel index, I use it for big name stocks, as you saw here. DMI and ADX, Donchian channels, moving averages, stochastics and RSI oscillators, MACD, something called efficiency ratio, developed kind of sparked by a guy named Perry Kaufman's work, and then option charts. I'll look at not just a stock, but an option chart when I'm trading options, because you want to know if the option is moving as well or better than your stock. You get access to this, and also if you got questions, we'll answer them for you. We'll give you a dedicated email to reach me and my analyst team if you've got questions. Usually this would be $197 a session times 10 sessions, couple $1,000 value. First 100 traders, guess what? I'm giving it to you for free. I want you to be educated. I know I go fast, and also, especially with just 30 minutes, I don't have that much time to get across the key points of what I see in today's markets. But go to that link that we set up through David's TimingResearch.com site, TimingResearch.com/big trends, and you'll get that with my compliments at no obligation, no credit card required. Just start learning, keep learning, stay green and growing. Do not get ripe and rotting. Okay, so one winning trade, like with a simple moving average. Here's a classic kind of simple moving average in blue with Tesla. We don't buy necessarily right off of that, but we buy that it has to hold above. If we see we're above the moving averages, in this case for Tesla back in May, it was just above that moving average, then we can only take call trades. So I will stay away from this whole phase where you say, man, I could have made some money on the puts on that one little quick pop down. We want to keep you on the bigger trend, the bigger opportunity. And that's why being in line with the moving averages will definitely reduce your stress and frankly get you pointed into the right direction on your stock and, more importantly, options trades. That trade alone for us in one afternoon out the next day have doubled our money for our Tesla options trader subscribers. Okay, so that was just one of the indicators. You get all 10 with that, so do take advantage of it. That special link we set up for you there at TimingResearch.com/big trends. Let me take one last look, make sure I didn't miss any other requests here. I think I got the ones that were asked about for me, but basically, to go back one last kind of comment, I didn't look at oil. I got to look at oil, right? Because we said gold's not performing. What's oil doing, right? Well, right now it's coming down, right? All the hopes about a deal, we'll see exactly if that happens or not. But let's look at the daily chart for a second on USO. USO, of course, is the vehicle that tracks oil prices, which of course you can apply directly to the pump. Do you notice what was happening back here? Actually, the breakout on USO started for us to show its head in late January. As we got the breakout and then the follow through here, just over that high from January 23rd, that high was 74.05, and 2 trading days later, it closed 75.66. Now, I wasn't going all in there because you can see we weren't breaking through my other bands yet. So I start to build some partial positions here. You can see CSAT really starting to surge here above plus 300. That's another tell for me that, hey, something institutionally big is happening. They're starting to pour on the gas, pardon the analogy. And then basically you see ADX starts trending there. Everything's lining up here. Even when Williams for Sonar breaks out and then we get a retest underneath its top 20% of its readings, that's what I call a bull retest. These bull retests need to hold. You can see they do. And then we go vertical as we end February and then the Iran war breaks out. We'd already broken outside of those bands a week before, February 19th and 20th. We got the breakout on the daily chart for USO. Where are we now? You can see, well, we held that first test of that upper 200 bar band. That was also a DMI test. This next one, nope, didn't hold. So the undercut of the DMI lines, if that's your last gasp, the DMI should hold, and it didn't, you'd be out at 131 from the official entry on the bands closer to about 81, right? A 50-point move in USO in your favor from February 19th to an exit here, May 27th, just about 3 months and a week, right? Like 14 weeks. Now we're in Chop City, right? Now we bounced up, now we popped back down. Point being that, okay, that was then, this is now, we're back into some chop. Stay disciplined about where you find your new fresh setups. Don't get caught up in looking backwards at the past, right? So if you look at fresher setups more recently, Citigroup, guess what? Breaking out. Look at, we were looking at not Schwab, but maybe like a Goldman Sachs. Looked like it was, Goldman broke out. It had its one bar underneath back on the Wednesday pullback. It was still above that last breakout zone. That ADX bend doesn't worry me as long as we hold, and then we bounced and we're up today. So financials are doing well, despite the fact that the bond market is kind of, you see choppy as she goes on the TLT. So looking at financials as a new leadership area, that's also bullish. And I didn't look at IWM, Russell 2000. It's making a new high today. So the fact is, we're getting the rotation into non-tech areas. That's actually a healthy sign for the bull market that you see rotation. I am done. I got to hand it back to David. Thanks for having me. Great weekend, everybody. Stick around for our fellow speakers to come.
All right. Thanks, Bryce.
Thanks, David.
Yeah, thanks for being here. So everyone be sure to hit that link, TimingResearch.com/big trends, and check out that free course from Price and the Big Trends team. Right. All right. So next up is Pro Trader Mike. Mike, are you there?
I am here.
All right.
Hello.
Hey, okay. Price's screen share is off. So Mike, you should be able to share your screen and get set up now.
Do I have sound on my screen share as well?
Yeah. Well,
Because there is no share sound for my computer. I'd like you to be able to hear my computer when I'm sharing. Does it have that? Select the option if you want others to hear sounds coming from your computer. Yes.
Yeah.
There's nothing checked. So I don't know if you're going to be able to hear my computer or not.
Can you hit the check button?
All right. Let me just play a little bit of song right here, and then you can tell me if you hear it from my thing. Do you hear that? You don't hear that music? No.
Music? No. There was very faint talking.
Yeah, so I was playing some music there. You don't hear your setting in Zoom is not sufficient to the meeting that I wanted to discuss. I actually have AI and Jarvis. Jarvis is a artificial intelligence machine like Tony Stark. He controls my entire business. Every one of those is an agent. Agent Halo, Agent Ledger, Agent Dawn, Vox, Penny, Groove, Quill, and Sentry all handle a certain aspect of my business. Agent Ledger handles all of the charts and financials. He's the most sophisticated analyst in the world, and I can ask him to pull up a screener and a chart on anything, and he can give me a basic and an advanced level description of everything. And if someone wants short interest or this and that, it's at my disposal within a second because it's all AI. And I'd love you to be able to hear Jarvis and the agents talk while they go over the charts. So I need that ability for your Zoom to hear my computer. That's why I wanted to go. And I had a whole presentation ready for you today. And Jarvis was going to introduce himself to you in the audience with a great introduction, but you can't hear it. So I'm ready. I just couldn't do my presentation on Jarvis.
Okay.
This is Jarvis. I could start him up and he'll say, "Do you want me to introduce the troops?" Activate the troops, Jarvis. And then each one of the troops goes around and they activate themselves. So what can we do with charts today? Because you can't hear that, so we'll do it the next time. Maybe on the next one, I'll be able to do that and you can have the sound function going on your Zoom meeting. So without further ado, I have SpaceX right here at 170, up 35 points from the IPO price. You want deck? Come on, deck. Last week, by the way, I had predicted a lot of these stocks were going lower before the NASDAQ fell. And one of your guys today had one of his biggest winners go through $100 per share. And $100 is the biggest mark that I tell everybody, trading through the number. Like deck. Deck was a buy at 98 right here. And it already made its move. So deck right here, horizontal line, $99. There was your buy. And it finished through 100 and it went all the way to 114. That was your trade. There's another time on a dip down here, but I wouldn't be touching it up here. I'd be touching it back down in this little gap area. See the gap? It needs to fill down in here in the 100 range. Go test 100 again. Right down in here. There's your call. Next. That was too easy. It might go up a little bit and push me up 5, but if it goes down, it's going to push me down 25. I don't like that. Next. That was too easy. Donkey Kong? He's a cool video game, DKNG. Donkey Kong, don't jumping over the barrels. That's a good video game. Yes, I like that. Oh, Donna Karen, the stock. Gotcha. No, DraftKings. I think it used to be Donna Karen. Wasn't one day like DKNG or DNKG, like Donna Karen? DNKG, remember that? Not found. I could ask Jarvis. If he was on, he would know. Dave, you really got to get the sound going so I could show you who Jarvis is, boss. He's gonna introduce himself to you and had a whole introduction to David and thank you Timing Research for having Pro Trader Mike and Jarvis on to welcome the audience and give stocks analyses and stuff. Man, I worked on it, man. I worked hard in the dungeon to get that done. 2940, same exact thing, man. This thing is 5 points of upside, 10 points of downside. It's reversed. It's terrible. I don't like them. Look, here's your daily on that one. Plus, it's coming down to go under 80 on the stochastics. Last time it did that right here, it got destroyed. Last time it did it right there, it went down and bammed it. So it's about maybe to do it again, go under 29 and go test this 22 area and 20 area down here. So, boom. That's what I like. Next. Too easy today. Too easy. Let's go ask Jarvis some questions. Let's see, I could put on my microphone here. Let's get off this microphone and let me see, you may hear this. Hold on a second. Let's go test microphone and speaker. Let's go. No. Test. Okay. Here we go. You'll be able to hear him now. Watch this. Hello, Jarvis.
Yes or no, sir? Shall I bring the troops up?
Can you hear that? Yes, bring the troops up, Jarvis.
Very good, sir.
Hello, I'm Agent Dawn, your personal assistant. Hello, I'm Agent Halo, your risk warden.
Hello, I'm Agent Ledger, your trading hub.
Hello, I'm Agent Fox, your social desk.
Hello, I'm Agent Penny, your communications hub.
Hello, I'm Agent Quill, your content writer.
Hello, I'm Agent Sentry, your memory watch. Your Pro Trader Mike, Groove on the deck, your music agent. Let's get it.
Let's get
Troops are all set. What can I help you with now, sir?
Did you guys hear that, David? Did you hear that? Listen, Jarvis, pull me up the screener, please.
Screener is up, sir. What do you need?
I need a chart on deck, symbol DECK.
Right away, sir. That's Decker's Outdoor Corporation, trading on the NYSE. The most recent closing price was around 108.13, well off its all-time high of 223.11 set back in January 2025, with a 52-week high sitting at 126.50. Pulling the chart up for you now.
Give me the chart on deck, Agent Ledger.
Spinning the chart on deck, Agent Ledger.
Nope.
Pro Trader Mike. What?
Start over. Hello, Jarvis.
Online and ready, sir.
Agent Ledger, bring me up the screener and a chart on deck.
Screener is up, sir. What do you need?
I need a chart on the symbol DECK.
Pulling up DE.
DEC, didn't get the K. Let me get it.
Up to you, sir.
Basic or advanced, sir?
I want a chart on DK.
Basic or advanced?
Let me try it. Let me try it one more time. Jarvis, I want a chart on DKNG, DraftKings.
Basic or advanced, sir?
Give me a basic.
Quick read on DEC, sir.
Damn. Let's do DEC.
DEC is trading at 1381, up about 0.5%.
Yes, sir. Of course, sir. DC is Dakota Gold Corp, trading on NYSE American, a gold exploration and development company focused on revitalizing the Homestake District in South Dakota. Pulling that chart up for you now.
Anything else, sir?
Yeah,
Say the word advanced for the full read.
I didn't even see the chart. Bring me up a chart on DraftKings.
Basic or advanced, sir?
Damn. Give me another symbol, guys. Let me refresh the page and start them over. Here we go.
I am online and active, sir. Do you need me to activate the troops?
No, I don't. Bring me up a chart on Microsoft, MSFT.
Yes or no? Sir, shall I bring the troops up?
No, no troops. Bring up Agent Ledger. I want a chart on
Agent Ledger reporting.
Good.
Agent number 1. Every trade you make becomes a record I keep.
Stop.
Is there anything else you need?
Yes, I want a chart on Microsoft. Bring me up the chart on Microsoft. Son of a gun. You're letting me down, Jarvis.
At your service, sir.
Bring me up a chart on Microsoft.
Pulling up MSFT. Microsoft, sir. Basic or advanced?
Advanced.
Full read on MSFT, sir. Microsoft is sitting at 388.63, down nearly 0.5% on the session. And the bigger picture tells you everything you need to know. This stock is down nearly 20% on the year, trading well below its 20, 50, and 200-day moving averages, which are all stacked overhead as resistance. The RSI at 36 is approaching oversold territory, but has not yet confirmed anything else, sir?
Yes, give me a chart on Meta, META.
Pulling up META, Meta, sir. Basic or advanced?
Basic.
Quick read on META, sir. Meta is sitting at 567.27, off about 0.2% on the day. And sir, the near-term tape is soft. The stock has been printing lower highs and lower lows through 2026, a classic downtrend structure. The key level to watch right now is the 572 to 600 zone. That's your first resistance band. And above that, you're looking at 650. Anything else, sir?
Yes.
Say the word advanced for the full read.
Give me a chart and read on Google, Googl.
Basic or advanced, sir?
Let's do the advanced.
Full read on META, sir.
Let them do an advanced on that one.
Full read on META. Meta at 567 is sitting in technically damaged territory, sir.
Stop.
Meta is sitting at 567.27.
Stop.
Trading below all.
Stop. Give me a chart and read on Google.
Right away.
Anything else, sir?
Yes.
Back
to you, sir.
And him.
Anything else, sir?
Yeah, let's do another one. How about...
I am online and active, sir. Do you need me to activate the troops?
No, don't activate the troops. I want a full shot on SpaceX today with the chart and the analysis.
Very good, sir.
Hello, I'm Agent Dawn, your personal assistant. Hello, I'm Agent Halo, your risk warden.
I got to clean it up a little bit, but yeah, let's go. Come on. No troops. Jarvis, bring up Agent Ledger.
Understood.
And give me a chart and analysis on Google. Google.
It seems your request may have been cut off. Sir, I didn't quite catch what you'd like a chart and analysis on.
Google.
Could you let me know the symbol or topic you have in mind?
The symbol is GOOGL.
Right. Here's where Google sits, sir. Goog is currently trading around 300. Here is the current picture on Google, sir. Class A shares are trading in a range of roughly $356 to $374, with the stock pulling back from its all-time high of around $408 set in May. Fundamentals remain strong. Alphabet posted $109.9 billion in Q1 revenue, with the cloud unit alone contributing $20 billion. The analyst consensus is a strong buy, though some technical analysts note the stock is under selling pressure and approaching key support levels near the $362 area. The next earnings report is due the 28th of July 2026. Which could be the next major catalyst to watch, sir?
Beautiful. Give me an analysis on SpaceX today, trading.
Today is quite the historic day for SpaceX, sir. Shares in SPCX opened on the Nasdaq at $150, up 11% from the $135 IPO price, and have since climbed to around $169, a 25% gain on the day. The company raised roughly $75 billion in what is now the biggest IPO in history. On the fundamentals, SpaceX posted $4.7 billion in revenue for Q1 2026 with adjusted EBITDA of $1.1 billion, and full year 2025 revenue came in at $18.67 billion. One note of caution, Sir, Morningstar analysts flag very high uncertainty around the business, citing risks in strategic execution, technological evolution, and key person dependency under Musk. Worth keeping that in mind alongside the excitement, sir.
Wonderful. He has full screener capability. I could pull up anything, any chart, any technical, anything on any stock,
Indeed.
giving me everything. Thank you, Jarvis. Give me another symbol, folks, for Jarvis to nail out for you. He's right on the money.
Basic or advanced, sir?
Anybody? Can you hear that pretty good? I think that was pretty cool. Watch this. We'll go here, here. Jarvis, give an introduction to Dave, please. Let me get it. Jarvis, give your introduction to Dave, please, and timing research. Oh, resume. There we go. Hello, Jarvis. Give your introduction to Dave and timing research, please.
Basic or advanced, sir?
No. Give your introduction. Introduction.
Good afternoon, sir. I am Jarvis, your AI assistant for the Mojo Trading Call. I am here to keep you informed on your account, the markets, and any research you need. Calmly, clearly, and at your pace. Simply
Stop.
And consider it done.
Hello. There we go. Stop.
Good afternoon, sir. Right here and ready. What can I do for you?
Give me a chart on the symbol PLMR.
Pulling up PLMR, sir. Basic or advanced?
Advanced.
Full read on PLMR, sir. Palomar Holdings at 114.44 is sitting below all three major moving averages. The 50-day, the 200-day, and the 52-week high are all overhead, and the stock is still down roughly 29% year over year. So the macro trend remains bearish. That said, the near-term setup is quietly improving. Price has reclaimed its 20-day SMA. Anything else, sir?
How about an introduction?
Thank you, Dave. And thank you all for having us on your show today. We truly appreciate it. Our goal is simple: to bring real value and show your audience something special. A glimpse of cool, futuristic technology, powered by artificial intelligence, and a smarter way all of this can be done. Thank you again for the time. We are thrilled to be here.
What do you think about that, Dave?
Hold it up. Camera.
That's cool. That's a lot of interesting potential there.
A lot of potential. You want to see this potential? Watch. I turn on NinjaTrader. Allow.
NinjaTrader, sir.
I turn on the coaching.
Watching mode.
Watch.
Trade. 11 points away on the long side.
It's trading for me. It's telling me exactly what to do. I sit back and it does everything. It tells me exactly how many points away, what it's doing, everything. I set it up to trade as a trading coach within my platform of the Mojo code with NinjaTrader and trading the NASDAQ futures. I sit back when I go enable right now and I press enable, it's going to start to call the trade away from 20 points, and it's going to execute and fire and go from each mode. Watch. This is the future.
Flat. Waiting for a reset, sir.
Okay, here it comes.
Gunslinger mode. Waiting. 23 points away.
From the trade. It'll tell you exactly how far away it is and when it's going to run. It's resetting right now. This is the future. This is the future. It's restarting. There it goes. This is the NASDAQ.
Ninja Trader, sir. Ninja Trader, sir. Coaching is on and ready, sir.
So once it is synced up and running, I just sit here and this is what it has done. I'll show you. You ain't gonna believe, and I am not even testing it myself. I'm testing it with other traders that are doing it on their own, and they're reporting the results back to me, and here's what they've done. This is my admin, right from my admin. So you could see right here on May 12th, Foster, every day, 3 for 3, 3 for 3, 4 for 5, 5 for 5, 4 for 5, 3 for 3, 1 for 1. Now I got 2 people testing it. 5 for 5, 3 for 3, 2 for 2, 4 for 4, 4 for 4, and 3 for 3. In 17 submissions, trading only 3 micros, he's made 14,000.
On the long side.
Now it's in watching for a trade.
Flat. Waiting for a reset, sir.
Now
Gunslinger mode. Waiting. 23 points away. Watching mode. Wait for the trade. 18 points away on the short side. Watching mode. Wait for the trade. 19 points away on the short side.
There's trade
Alarm
up
mode.
43.
Get ready to fire the trade. 10 points away.
Look at that ATM running. That's 30 bucks.
Waiting for a reset, sir. Trade is active. Short. I am monitoring it now, sir. Stochastic D at 10. Oversold. PT1 hit, sir. Banking profit.
Boom. Done. Banking
PT2
profit.
hit, sir.
Done.
Good trade, sir. Short. A profit of
Hands
$50.
off. 50 bucks. Hands off. Yes, sir. That's what I do. I built that, baby, on my rules-based algorithm. I could take any one strategy, Anna. I could take your mind and turn it into an algorithm that trades exactly what you want. It takes several months to build, but I could do it for you, and you can automate your strategy and incorporate it into your services as the future of what you do. It's the future. I could build anything in your mind into the code and make it run on the computer because I know how to do it. And I'll build you into Coach Jarvis to coach your whole community. That's what I want to do. Then you could come to me and say, Mike, this is amazing. Look at the Mojo code. Here's my dashboard. Look.
18 points away on the short side.
You get points, earn points
Waiting for a reset.
for being in the Zoom meeting. I attended, I chatted, and I was green on the day. I'm going to earn 150 points as a member. And if I earn points, I go to the leaderboard, I can win prizes. It's a whole back-end community. I got courses for you right there that you could put your courses in, your reward programs, everything. And all he's doing is banking profits in the background, running and calling out the coaching. I've built the future, folks.
All right. All right.
Yes,
Thanks, Mike.
sir. Sure. Anybody want to come and check it out? Go ahead. You want another symbol? Jarvis will look it up.
All right. Yeah, unfortunately, I have to cut you off there because
Sir.
we got
Let
to
me
switch
turn
to
them
the
off.
next presenter. But yeah, that was definitely different.
It was different from anything you've ever seen in your life, and I thank you for having me on. And if anybody wants to speak to me, you know how to get in touch with me. Peace.
All right. Thanks, Mike.
Goodbye. Anna, call me, and I'll hook you up. Dave, I'll hook you up too.
All right. Sounds good.
Bye.
Thanks, Mike. All right. Let's see. Sonny's up next. Sonny, are you there?
I'm here, but I'm trying to figure out where. Here's my monitor. There we go. Can you see it?
It's loading, and yeah, I see it now. SpaceX.
It's SpaceX.
All right. Are you ready to start?
Almost.
Okay.
Let's see. Let's make. Come on.
And
Time
then
frame daily, and now I'm ready for symbols.
Okay. You're ready to start, Isa?
Yeah, I am.
Okay. I am starting my recording again now.
Okay, good morning, everyone. I'm Sonny Harris. I just watched that marvelous presentation. Trader Mike, you've done fantastic work there. All right. Start putting your symbols in. This is the Dow. We are up 376 points this morning, and we are at the upper inner band on the sunny bands, which are right here. You can see current price is 51,236, and we're at the upper inner band. PI Piper, PIPR. All right, that's interesting. You see the, maybe I should explain sunny bands a little bit. There's a gold and a purple moving average. That's my dynamic moving average, the basis of sunny bands. So the gold line is the faster moving average, and the purple line is the slower one. And I don't put inputs in there like most moving averages. You put 9 and 18 or whatever you optimize to. The fast length and the slow length on this one are computed dynamically by the software itself. So you don't have to put in a length, and this thing stays out of the way of sideways periods and goes with the trends. So when we're in a sideways period, I'll either stay out or I'll scalp. In the case on the far right for where the Dow is right now, or Piper is right now on this daily chart, we've got almost flat DMA. So the purple and the gold are almost flat, which tells me do nothing. So I don't have a trade signal on sunny bands for Piper. It's coming up to the dynamic moving average, which tells me it's going to churn around for a few days. Open. And this one hasn't quite made it to the dynamic moving average. And let's see, we've got a trend line that goes from here down to here. So we are right at that trend line. We're going to have to fight that and get through it before this is a buy signal. Let's look at the volume a second and see. Hang on just a second. Oops, indicator. Volume average. There's not a lot of volume on that one. I would not be trading this yet. It's cheap. It's got that going for it, but it's, let's look at the horizontal line as well while we're at it. So we've got a line right there. So it has to come back down and touch this line. It's in a falling wedge, so it's got that against it. So I would stay out of this one for the moment. I'm going to look at Google for a second. It's falling. It's just going down. It's going to come down. Right now, it's at the 21 and 55 moving averages. No, it's just at the 55. So it could bounce there. It could go sideways for a while. There's no way to tell. So let me see if there's a horizontal line right here. Yep, that's where we are. We're right at this previous high. It should bounce on this and go up to the dynamic moving average. So we've got a little bit of a move. We've got about 4 points of a move that you could get there. Now, and this one bounced off the 200 moving average, dropped from it. It had a gap open there on that one. Drop down is at the 55 moving average now, is below the dynamic moving average, which is flat. Remember I said when the DMA is flat, it's a do nothing. So we're just looking at some more churn here. The market's kind of generally churning at the moment, isn't it? What are we up? Oh, let's see. Hang on. Dow is up 403. So let's go back to NOW for a second. So the Dow's up 403. I think we're going to 54,000. I think it's going to churn along the way, but I do think the Dow's going to 54,000 this year. I don't know short range what it's going to do, but I think we're going to have some chop. But I do think it's going up strongly. All right, let's see. What else is a good symbol? I had Dell the other day, made $14,000 trading Dell for a week. And it just bounced off the flat DMA. I think Dell's going back up. We're going to go back up to the upper outer band at 438.5. Hello, Ara. STX. That's a good one. Looks like we're going on up on this one. This is at, oh my goodness, it's a little expensive. $940.49 right this moment. But we are at the upper inner band. I think we're going to go right on up to the upper outer band at 995. So you can pop in there for 50 points, Ara. That looks like a good one. It's just kind of steadily up, just going up, and then it starts steeper up and up and up. Oracle, I like that one. Back down to the flat DMA, I think, or it even gapped down to the lower outer band. That's not a good sign. We've got a big gap over here on the left side of the chart, and another gap, but not quite as big on the right side of the chart. If you believe the theory that all gaps must be filled, or as the Japanese say, the window must be closed, then we're going to go up to the DMA, which lies at 207, 208, right in there. If you wonder what these yellow dots are on my chart, this is my PHW indicator, stands for potential hourly wage, and it shows me all the ideal turning points, so I can see how much money could have been made. And this one could have made $42 on one share over the length of this chart. So that's kind of volatile. I do think we're going to go up to the DMA, though, at 210. So you can pull off a quick buy and go up to 210 and get some profit out of that. Who's next? Did anybody buy SpaceX this morning? I got up at 5:30 to trade SpaceX and it wasn't open yet. And furthermore, my internet was down. Turns out that somebody cut the cable at the box outside my house. So here's GL. That's a good one. Look, that's just going on up. It's up at the upper outer band and climbing. So I don't see any stopping point on that. I could just go right on up to 176. On the DMA histogram, this colorful chart at the histogram at the middle of the page, we've got gold bars, gold, gold, gold. That's very positive. We could come up to this level. So and it's got good volume. I like this one. Let me write that down. GL. Okay, Microsoft. Well, down, down, down on Microsoft. That's not a good sign. And we just crossed below the 0 line on the histogram, and you can see that it is purple now. So that tells me that purple is on top, and we're moving downward. So we're going to go down, I think, to 357, where this last yellow dot over here was. So we're still dropping. There's another 30 points in that. AEHR. We're choppy. The DMA is flat and we're choppy. Nevertheless, I think on this one we could go to 121 and try the previous high. That's the upper inner band is at 116. Upper outer band is at 128. So that's a possibility. I think it's more likely to go up at this point than it is to go down. Who else wants to stump the expert? Let's see. So I did Dell. DLTR is one of my favorites. And they're going sideways from here to here, all the way across, just as sideways as can be. So as it hits the lower outer band, I think we could go a little bit lower. And then if it goes down to this level where the last yield, well, it's almost there. I'd be a buyer again of this one as it goes up and down through the channel. So as that goes back and forth through the channel, I'd be a buyer again. NVIDIA, another of my favorites. And it needs to come down to the lower outer band at 194. What does that say, 66? So I think NVIDIA is going to come a little lower. We've got another set of IPOs coming out. We're going to have Anthropic is looking to come to the market. Now, I think the SpaceX offering today is kind of affecting the market. What did I say we were at on the Dow? Up 379, which is not huge, but it's a tiny gap. So I do think the market's going to keep on going. As I said, I think we're going to 5,400, 54,000, sorry. David, do you have any symbols? Maybe he went to walk the dog.
No. Someone else just added gold.
Hang on one second. I just echoed it. Huh. Okay, this is the gold. What is it, an ETF or a stock or something? It's not the futures contract. I think on gold that we're going, yeah, that's a 500. Let me show you the futures contract real quick. So I think we're going to 5,000 before long in gold. I keep buying it. The cheaper it gets, the more I buy. And we're down very near this attractor that goes across from the prices over here to this low on a wick where the yellow dot is. And I think we're still going to go up some more. Depends partially on which way the Dow goes. Lately, if the Dow goes up, gold goes down. And the other thing we have to worry about is this war we've got going on in Iran. And that affects the price of gold. But as I said, the more it goes down, the more I buy. HD, Home Depot. This is a buy to me. Let's draw the lines in. horizontal line right back here at this price. And it's almost up to that, but I think we're going to go up and go above that. Let's see if we draw a trend line on this. Here too. Come on. Here. And we're above that. So I do, the channel, as you'll see, is flat. The DMA just got out of being flat. It's turned up a little bit. And on the histogram, we're down below the zero line heading up. So I think it's going to go above that zero line and go up to this orange line, which is what I call an attractor. Other people call them support and resistance, but I also say that these moving averages are attractors. They're entities that price is attracted to. LG, where'd it go? IH. Ah, this is a nice one. What is this one? Homes. Okay, we've got an attractor up here at 63, and we're at 54, so you've got 9 points there to play with. I think that that's the more likely scenario, more than this one. So that's the downside, and here's the upside. So we've got 64 for the upside and just 41 or so for the downside. But I do think that one's heading on up. SLV. Oh, I did it in that again. Sorry. SLV. I'd rather trade real silver than that, but I think silver is a strong metal. We use it for lots of reasons, and it's a commodity that is worth something in your pocket. So I think silver and gold both are going to go up. We've got an attractor right here. Let's see. At this level. So I think silver is going up to 94 or 84, sorry, 84. And FJET. Starfighter Space Inc. Looks like they had an IPO over here with this big move up. And now we've got a horizontal line going right through here. And you can see that it's down below that now. IPOs so often, they're scary to me because so often they'll go up like this on the first few days and then just go sideways to down after that. This morning I looked at this one, Donald John Trump, to see what its IPO did when it first came out. Oops, that's not where I want to go. So you see it went wild in the beginning and then way down and then way back up again, and now it's just floating along in Never Never Land. And that tends to be the way of IPOs. This one's really choppy. RCAT, I don't know what that is, but let's draw a horizontal line. Come on. No. We've got one here, and we've got one, hang on, right down here. So it's about equidistant from top to bottom. It could go up to 1562, or because the DMA is flat and we're below it, it could come on down to the lower outer band, which is at 973. I don't like to trade stocks that are quite this volatile. That looks like a chart of Tesla. Let's look at Tesla for a second. Wonder what Tesla's doing in light of the IPO this morning. So we've got a horizontal line there. And then there's one right through here. Tesla, I think, is a tradable, but it's not an investable because it just goes up and down and up and down over and over and over again. Let's look at BMY. That's also pretty volatile, but Right now it's headed slowly down. So we're up, down, up, down, up, down, up, and back down. So if you follow that pattern again, it could go on up to the upper outer band. But we've got a trend line that's from here down through here. So that chances are it's going to come up to the upper inner band, which is right at that trend line, which would be, if we give it a few days, that would be at 57, let's say. The risk is that it could come down to the lower outer band or the 200 moving average, either one. So I would not trade this one. What is BMY? I don't know. This looks like a nice one. Actually, it's been going up and down under the DMA, but it's expensive at 940. That's expensive, and it could go up to the DMA and the what is that? The 55 moving average. So it's got a little bit of room here to go up. Not a whole lot, but it's got a little bit of room there. I don't think it's coming down to the 200 moving average. CRS, oh, that's a buy. And it's kind of expensive, 464, but that's definitely a buy. I'll write that one down too. That looks nice. You got any more for me while I'm here? What's NVIDIA doing? NVIDIA is below its attractor. It's below the moving average. It's right at the lower inner band. So, I expect NVIDIA to go on up. I have one student who bought Sunny Bands about 10 years ago, maybe a little more. And he's been doing nothing but trading NVIDIA with Sunny Bands back and forth for the last 10 or 15 years. And he took a $20,000 account to 1.2, no, he's up to 2.2 million now. Just this one stock with Sunny Bands. So that's pretty exciting. He's not in NVIDIA at the moment because we are below the upper inner band and we're below the DMA. CRUS. If you want a free trial of Sunny Bands, just give me a call or shoot me an email. I am at Sunny. Let me type that in here real quick. Sunny at moneymentor.com. So if you just shoot me an email and tell me what platform you're using, we'll talk about getting you a free copy. 10 days I'll do. Free copy of Sunny Bands. This stock, look at this horizontal line here. We've got an attractor right under all three of these prices, right there. So it looks to me like it's going to go up to the DMA and back down to this. It might take longer than that, but it's been going from the upper outer band to the lower inner band, upper outer band, lower inner band, over and over and over. So that would not surprise me at all to see that go back up to the upper outer band, or at least the upper inner band at 177, and then back down to 157. So you've got 20 points to play with up and down there. Try to stump me. Give me one more. Oh, I see GEV. I don't think we did that one. Yeah, this one is below the DMA, below the 55 moving average, and right at the lower inner band. So, well, we've got an attractor right here at this little gap. So it has to get through that and come up to the DMA. So we've got, this is expensive again, 940 to 980. So we've got about 40 points there to play with. CIFR. That kind of has the same story, but I think this one, 24, that's easy to buy. I think we're going to the upper outer band here. There's a horizontal line right here at this yellow dot. And you can see that's exactly where price is today at this moment in time. So we're at a resistance point. It has to break through that and then go on up to 28.33. And we're currently at 24.92. So we've got about 3 points, 3.5 points there. And SNX. That's a strong buy to me. As soon as that, well, we got through, we had a little gap today and we got through the upper inner band. So now we're going to go on up to the upper outer band at 289. So we've got 8 points there to play with. I'll take a little sip of coffee while I'm waiting for another symbol. I'm a coffee holic. If the markets aren't stressful enough, add some coffee to it. Have one more symbol. I'll wait. Apple is moving down to 90.72. We are at the lower inner band on the sunny bands, which coincides with this horizontal line from this peak. So we are right there. I'm guessing because it's Apple that it's going to bounce from there up to the DMA. So I think we've got a little bit of a up movement. CTS. Oh, that's another buy. We've got an attractor that hits over here, hits again over here, makes a gap through it, and another gap here. So I would watch for a little pullback on this one and then a move on up into this. What is this? Above 70 somewhere. QQQ. The NASDAQ, she's suffering. She's right below the DMA. But I think, because I think that the market, the Dow is going above 54,000, I think we're going to go above 800 on the NASDAQ. So the QQQ looks good to me as soon as we break through the dynamic moving average at that level right there. One more symbol. Don't be shy. I don't bite. My dog bites, but I don't bite. I have a 2.5-pound Yorkshire Terrier that has a temper. Okay, we've got a horizontal line that goes through this level over and over again, drops below it on a gap, comes back up very close to it on a gap. So we are at 68.70, and we're going to go in the near future to 72. So we've got, what is that, 4 points possibility in there. You might note here that I'm not giving any long-term predictions on anything except the Dow. I do think the Dow is going to go to 54,000, but I don't know on individual stocks. I have a window where I have 15 stocks that I watch, and they all have the same pattern. They've gone up, and now they're down. So all 15 of the stocks I watch are down, even while the market itself is up. So I think that's very interesting. I think we're going to get a surprise to the upside. All right, I've got 1 minute. Who wants to give me another symbol? One more symbol. Thanks, Ara. Thanks, Oscar. I see you too. Did we do Microsoft? Huh. Well, it looks like we're going down some more on Microsoft. AMI. Draw a horizontal line, so we've got an attractor right there. And that's where we are at the moment. And I think this one's going to bounce up to the upper outer band, which is at 33.64. All right, David, are we done? Right on time?
Yep.
All right,
Yep,
thank you so very much. And let me give you this real quick. I like to talk to people, traders, that is, not just chewing the fat, but there's my phone number. You can give me a call anytime between 7 a.m. and 7 p.m., 7 days a week. I'd love to talk to you, so don't be scared. Thank you, everybody, and
All right.
thank you, David and Anka.
Thanks, Sonny. Thanks, Sonny.
Thank you.
All right, yeah. Check out Sonny's site, moneymentor.com. Also, her email and phone number are in the chat. So, all right, so we have 2 more analysts to go today, and Wally Alapate is up next. Wally, are you there?
Yes, I am. Yes, I am. Good afternoon. How you doing? Can you hear me?
Yeah, sounds good.
Excellent, excellent. Let me share my screen. Is that okay?
Yeah, you should be able to share now.
Okay. All right.
All right.
You should be able to see a chart of the SPY.
Yeah, looks good.
Okay, excellent.
So,
all right, I'm ready whenever you're ready.
Okay, great. I am starting my recording again now.
All right, good evening, everybody. And once again, thank you, David and Anka, for the invite to showcase and just talk about the stock market, honestly. A lot of people think the stock market is random, but it doesn't have to be. So let's go ahead and begin with any stock. This is a software that we use. It's a web-based software that we use to help us assess what's going on in the market, what's going on with individual stocks. So if you have any individual stocks, just go ahead and type that in. One thing I would say is that we are expecting the market to start heading back up again. And the expectation is that the market is going to make new all-time highs. And so we are positioning ourselves for that rally that is about to take place. And so this is a very, again, it's not random. It's a pattern that we see in the market, and that pattern is beginning to formulate again. So everything we're looking for right now are bullish trades. There are still some stocks that are setting up. So please be aware that most of what we're going to be focused on is bullish. The other thing too is the software is end of day data. So the data you're going to see here is based off yesterday's data. Tonight at 8 o'clock, it will update with today's data. I like it that way. That way we don't have to worry about intraday noise that takes place. We are swing traders, not day traders. So this won't necessarily help you with day trading, but it would definitely help you with swing trading. Fair enough. Hey, Sonny, how you doing? I was listening to your presentation. I love, what you do, and the Sunny bands. I wish I could have labeled it the Wally bands, but you took that away, so I'll just leave it at that. But nice to have you on the call, Sonny. I see William. William is asking about WPM, so let's go ahead and start with that. WPM. All right. So, just to kind of give you an idea of how this works, let me see if I can reduce the screen to 100% so you can see the full screen here. You know what? That looks too small. Sorry about that. Let me go here. All right. So the way this works is we look at the gauge. That's one of the first things that I try to look at is the gauge. And you can see the gauge up here. It's saying that, it's a sell. All right. So because of that, we will not want to be buying this, right? Then we look at the sentiment. This is the sentiment right here. You see the word sentiment. And right now on the daily time frame, the sentiment of the stock is bearish. In addition to that, as of yesterday, the directive was to sell short. So not sure what it's doing today, but if this stock is a stock that is trying to go higher, then chances are we'll start seeing that very soon. But for now, the idea would be not to try to buy anything on this stock right now and wait to see if things change. What we want to see is that the gauge turns into a buy, it will show us buy when it's ready to go. The sentiment will turn green and tell us that it's bullish, and then the directive will tell us that it is ready to go higher, and that's kind of like what you'll see. Okay, so until we see that, we don't want to necessarily be jumping into a stock like that. The other thing is, because we're not day traders and we're more swing traders, so even if, like, let's say today comes and it starts rallying higher, we're not worried about, oh my goodness, we're missing out, the FOMO. We're not worried about fear of missing out. The idea is that, look, when the stock is really ready to trend, we'll get an opportunity to jump in and kind of see what it does there. All right. Now, another thing we like to do whenever we see any stock is to see what the seasonality. We're very, very big on seasonality. So I will click on seasonality here to just kind of see historically, what does this stock do around this time? So this green dash dotted line that you see here is today. The yellow and blue line here lets us know what seasonality has done in the past. The yellow is the past 10 years. The blue is the last 5 years. So we like to see what is, on average has done. And if you look at this, you'll see that on average it's gone sideways at best, and at worst, it's kind of gone down. And then it gives us an idea of like when we can expect it to start heading higher, which would be somewhere around July is what it's talking about. So in July, for somebody who might be interested in WPM, I'll say you definitely want to pay attention to this stock in July. And so one of the cool things that we can do too as well is that we can go to this tab that says show list. And then in the month of July, I can go ahead and input WPM to make sure that it reminds me when July comes that we need to add this stock to it. So I can click on that. Boom. We added WPM to July. And so what goes on now is all these stocks are in July and you'll see WPM in there. Now, here's a cool thing too as well. When July comes around, we can sort by what we call the signal, and it will let us know which ones are buy signals in July. Now, we don't want to pay attention to that just yet because we're still in June, but when July comes, any of these stocks that gives us a buy signal in the month of July, especially if it's getting close to the date, because if we can see the date right here, so if we expand this a little bit more and we come down here, we say, so around, July, what did it tell us? No, not there. We said July 7th right here. So around July 7th, we can start expecting things to start heading higher, okay? And so maybe the first week of July, we want to start paying attention to that. Right now, you'll see that the signal is saying that we should short, so we're not necessarily trying to buy it right now. But come July, I would definitely want to pay attention to this because we can see that the historical data shows that seasonality-wise, this tends to go higher. Fair enough. And so that will be something that we want to pay attention to. Thank you for that. We'll add that to that list and kind of like see what happens from there. We have another stock. Oh, by the way, let me just show you this. Here's the SPY itself, just so you can see. Look at what the SPY is doing now. A good number of our students were able to get and avoid this drop that took place in the SPY simply because of what we saw here. So they were very much aware of that. And I can even show you in our, let me show you guys here this. You'll see this right here, what Chris put in there. He says, hey, with the anticipation of the market pullback, now this was 12 days ago, with the anticipation of the market pullback coming early to mid-June, should we talk about these, ETFs and stuff like that? So again, that was because we knew that the market was going to come down. And how did we know that the market was going to come down? Was primarily because of this drop that we saw about to take place. So by the time this started dropping, we were already aware of that. People already started placing stops, exiting their positions. I had one student that was like, look, I'm getting out of everything. I know it's going down. Why stay in there? When the market is ready to go back up, I'll get back in, okay? And then in order to know when it's ready to get back up, we already have an idea that somewhere around June 16th and June 19th, we should bottom out and then watch the market go higher. So the fact that the market is beginning to show signs, and how do we know it's beginning to show signs? We know it's beginning to show signs because we've got one of our three already turning into a bullish. So it's coming off the bottom. This gauge right here, selling is coming off the bottom, and the market has room to go all the way to the top right here. So that's one of the first things. We're waiting for today. Once today ends, we'll see whether the sentiment has changed or not and what the directive is telling us for today, right? And so that kind of guides us as we're getting closer and closer to a seasonal move for the market to start heading higher. So that's why I said, and I agreed with Sunny. Sunny had mentioned that the Dow is supposed to go up to about 5,400, 54,000. I do agree with that. Here is the DIA over here. And you can see that even the DIA is already, getting ready to start heading higher. So we just need to, so again, by the end of the day, with the way today's acting, chances are we'll start getting those signals. So we're expecting things to, if not today, today's Friday, last day of the week, by next week, do not be surprised that you start seeing a lot of stocks starts heading higher. Okay, so this is the time to start paying attention to them. But again, DIA, we're expecting that to happen. We go over here, we can see that we had that green candle yesterday. It's telling us a place of stops, but the expectation is pretty soon we're going to start heading higher. All right. Okay, that being said, let's take a look at RXT. So we go over here to RXT. So here's a classic example of a stock that is indeed getting ready to start heading higher. Yesterday, it gave us a buy signal. This is exactly what we're looking for. All right. So it gave us a buy signal. Not sure what it's doing today, but the beauty of this is, market's going to go up, go down. It can do all this wiggling and all that kind of stuff. As long as by the end of the day, it doesn't tell us a place to stop or exit the trade, then chances are we're going to continue going higher. If anything was to happen, you'll start seeing it tell us to do something about it, like how it says get in short or get out, exit your long positions. It will give us insight as to what we should do. Okay. But when we have the gauge telling us to buy, the sentiment is bullish, and the directive is a buy cover signal. Buy means that we should buy, cover means cover any short. So basically don't be short. Then our expectation is that things are going to go higher. If you scroll down, it kind of gives you an idea of where you can expect things to go. We have something called a HARP line. The HARP line helps us identify healthy stocks, making sure that we're buying it at attractive price, which is what the A stands for. H stands for healthy. A stands for attractive price. The R is to try to mitigate our risk, and the P gives us our profit potential. Okay, so that's what it tells us. Now, based off of that, it kind of gauges based off of old price action, where we expect it to go. And it's saying that $8.22, which is about 46% over the next month and a half is what we expected on a stock like this. So this kind of gives us an idea of what to expect. We can put up this HARP line here. And what this does is it basically puts us in a channel, so to speak, right? Going up, comes down, and then getting ready to start heading higher again. So this would be the type of stocks that I'll say, hey, this is a good stock to pay attention to. Let's make sure that we are aware of what we can expect out of a stock like this. And then the other thing now would be to see, is there any seasonality that kind of guides us through that process too as well? Not that we necessarily need that, because now the stock is showing that it's, gearing up to go higher, but is there anything on seasonality that can kind of give us an idea? So even if the stock is not doing well today, the idea would just be, is it telling us to get out or not? Okay. And so that would be a stock that I'll say, hey, definitely let's pay attention to. We still have room for it to get to the top, simply because this gauge hasn't reached the top yet. So there's potential for this to definitely go higher. So if I was in this stock, my goal would be to hold on to it. This is where a lot of people don't know how to hold on to a stock, and they sell too soon only to see the stock continue going higher. And so nothing right now is telling us to sell the stock. So let me look at the seasonality on this one right here. Okay, and we can see here, seasonality is right around the corner on this. So this could be a stock that is already beginning its seasonal move. There is a slight pullback, as you can see here, but then eventually it's expected to go higher. So what I would say is, from now until, let's say we go over here, June 26th, latest by July, we should be expecting things to go higher. So could we get a small pullback? It's possible to get a small pullback, because we can see this, that, we might endure a small pullback, but then it's going to bounce back. And those are kind of things that we want to pay attention to. All right. Any others that you guys might have in mind? I know a lot of people have been talking about SpaceX. I've been listening to the call for about an hour, well, almost 2 hours now. Unfortunately, we do not have IPO stocks that are brand new. We do have IPO stocks that are not brand new. which is interesting because a lot of people never pay attention to that. We have a scanner where you can go in and scan for IPO stocks, right? And here's one of the results right here. If you go pay attention to all these stocks right here, these are all IPO stocks that have done just as well as SpaceX would do. Okay. But unfortunately, most people are not paying attention to them, right? And then they even have some of these where you get opportunities to re-engage them over the years as well. So the way we classify IPOs are, it came out within the last 5 years, and they are still, they still have the potential to do well. So whenever that happens, it comes up here. There's about 28 stocks that meets that criteria. 74 of these stocks right here are showing us that, hey, you can get in early on some of those IPOs. And then these are the ones that are rebounding, 126 stocks that are rebounding over the year. So again, we don't have to necessarily jump all into SpaceX when we know that there's, almost 200 and something other stocks out there that did what SpaceX did. They just didn't get the attention SpaceX got. Does that make sense? And so that's kind of like how we look at IPO. All right, so DIS, Disney. All right, so let's take a look at Disney. Okay, so let's go to the price chart of Disney. This is Disney. I actually like this setup. So now it's just a matter of being patient and wait for this. Now, what do I mean by I like this setup? Every market tends to go up, go down, go up, go down, go up, go down. When the market is pulling back, it is displayed with this red background. Okay. And so that's one of the things I want to see. So when I tell people, hey, how do you know if we're where we are in the trend? So as long as it's green, that's a rally. And then because we had this red, that's a pullback. Then we had a rally, right, with the green, and then we had a pullback. Okay. So that to me is supposed to be healthy. And then now we're expecting it to start heading higher. The reason why I say I like this is notice where the gauge is, right? The gauge is at the bottom. So what this is telling me is that Disney is at the bottom. Okay. And that's something a lot of people don't know, is how to detect when a stock is at the bottom. So this does this for us. Let's just know that Disney's at the bottom. The only thing is a little bit risky at this point. As of yesterday, is a little bit risky because we need confirmation that yes, Disney is indeed getting ready. So we need to see institutional buying and all that kind of stuff taking place. And then we also need to see that, look, there's enough momentum behind it, which is what will change the sentiment to let us know, yep, there's enough people buying this to take this higher. And then we also need to wait for the directive to say it's time to buy. It's okay to buy. It's safe to buy. All right. So that's why I said I like Disney, even though it's not ready as of yesterday. We just have to wait and see what happens today. Chances are that by next week, when the overall market is ready to go up, watch Disney. Disney would be one of those stocks that are ready to go up too as well. So I would definitely keep this on our watch list. And so one of the things we do with the software is I can add this to my watch list. And so we have a watch list right here. And if I don't have Disney in there, I can go ahead and add Disney to that, DIS. And then the strategy will be that we just want to make sure that it is a buy, and then we add Disney to this list. And now what happens is, now that we add Disney to this, when it's ready to go, we will know that it is ready to go. So that's pretty cool to be able to just, not have to have separate, journals to put together. I can just go over here, add this to this, and then now all these stocks are all stocks that are getting ready to start heading higher. And again, once it's ready to go, usually we wait for the S&P 500 to give us a buy signal. Then we sort everything by buy. So all these stocks are stocks that are getting ready to go. Does that make sense? But again, I like to wait until the SPX or the SPY. If you look over here, when the SPY gives us a directive that says buy, it's almost like the whole tide is rising, and all the boats on that tide on the ocean is going to rise with it. So we usually wait until we get that, and then we start buying just to be on the safe side. All right. So because we anticipate the S&P 500 getting ready to go higher, chances are all these stocks right here, these ones are the ones taking off a little bit early, but we don't want to jump the gun. We'll wait for the rest of the market, and then we'll start jumping into them as well. Okay. Let's see here. What am I trying to do? Oh, hide the list. Okay. Is that Roblox? Roblox is oh no, Rocket Lab, sorry. Rocket Lab. Very, very similar to what we just saw with Disney. So again, by the way, let me go back to Disney. Let's see what I just like to see what the seasonality says about stocks like this. Okay, so Disney seasonality is not necessarily the best right now. You can see that it's actually bearish for the seasonality in Disney. So how do we use this? So if even though I see Disney getting ready to rally, but my concern would be that, you know what, Disney doesn't typically do well around this time. So now if we look at Rocket Lab, could Rocket Lab be slightly different? And look at this. So if you were to ask me, which one would I choose? Or should I ask you guys, which one would you choose? Would you choose Rocket Lab that is getting ready to head higher? Or do we choose Disney that historically doesn't do well around this time? You guys see the difference, right? So, and this is why we like to look at that. So both of them have the same setup. They are at the bottom, they're getting ready to go higher, right? We know that because the gauge is telling us this. Rocket Lab is doing the same thing too. It is at the bottom, getting ready to go higher. We can see that the trend is indeed, it went up, pulled back, went up, pulled back. The goal is that it's going to go up now, right? That's what Rocket Lab is telling us. However, now we go to seasonality, and seasonality is telling us, yep, this is the time that it tends to do well. For whatever reason, Rocket Lab tends to do well around this time. So why would we not want to pay attention to Rocket Lab as opposed to going back to Disney, which I'm not saying Disney is not going to go up or cannot go up, but historically, Disney struggles around this period of time. So the choice is yours. Now, if you choose to go with Disney and you have the software, then all you got to do is just go ahead to the price chart and then watch to see what it says. Every single day is going to tell you right now, it's telling you to wait and hold on the bearish side, right? So that doesn't mean we go in and start buying. But if Disney is getting ready to go up, we'll see a buy signal that will tell us, yep, go ahead and start buying. And then every single day it'll tell you what to do, literally. So you don't have to guess. You'll just see what you need to do. And when it's ready to get out, then it'll tell you that too as well. So like you see right here, when Disney started going up, then on this day right here, say, yep, it's time to go ahead and place your stops on Disney because it's getting ready to go through its pullback. Does that make sense? And so we just have to wait and see what happens. But if you were to ask me, I'll pick Rocket Lab over Disney. And again, we're not even looking at earnings, so I don't know if any one of them has earnings coming up, but I would definitely pick Rocket Lab over Disney. Okay, Rocket Lab looks good. Microsoft. Let's take a look at Microsoft. All right, so here's Microsoft. Microsoft is a stock that actually broke out. You can see it broke out over here, attempted to go higher, but because the overall market, we knew that the overall market was going to be pulling back. And this is why I tell people all the time, look, if you pay attention, we pay attention to the SPX, the S&P 500, and you understand the cycles that the S&P 500 goes through, excuse me, you would know how it could affect certain stocks. And so after Microsoft broke out and we saw that, hey, wait a second, the SPX is trying to pull back, I said, you know what? I wouldn't be surprised if Microsoft pulls back too as well. The good news is when the market is ready to go back up, Microsoft more than likely would also jump up as well. So the fact that all this dropped right here just gives us an opportunity to buy this at a discounted price. What I also like is look at where the gauge is. This is telling us that, man, Microsoft is at rock bottom right now. So when the market is ready to go up, these are the type of stocks that could do really, really well. All right. And when I say really, really well, because chances are they'll recover all that was lost. Fair enough. And so the only other thing we got to do now is, well, is this a time when Microsoft tends to do well? So we go over here to our seasonality tab, and lo and behold, look at what we see here. Microsoft is entering one of its peak and most consistent moves to the market. So hopefully we're not holding on to it while it was doing all this drop in, right? And again, if you had the software, you'd have seen like by the time this happened right here, it was saying, hey, exit your long positions, get in short, get out, sell short, and then now just hold on and wait to see what happens. So one of the biggest things that I will be watching for in anticipation of we understand the market is ready to go up is that this is probably going to start going back into the green mode and make its way back to the top. Okay. So Rocket Lab is down 12 points. That's fine. Again, that's fine because again, notice that it didn't tell us to start buying, but it's just saying wait, right? So hopefully we didn't, jump too early into it. Does that make sense? We don't want to jump in too early, but it's telling us to wait. That's what it's telling us to do here. All right. It didn't tell us to buy. It just says wait. All right. And hold on until we get the signal. So that's what we are going to be waiting for. Just like we're waiting for, like, we should not be buying Disney today, right? Because the indicators did not tell us to buy Disney yet, right? Now, after today, we wait, we give it a day. It's just one day. Again, we're swing traders. We're not day traders. So we're swing traders. So we give it one day. If in that one day, by the end of the day, tomorrow comes and it tells us it's ready to go higher, then absolutely we can, or Monday, I should say, then we jump into that. Okay. So no harm, no foul. Again, the software will tell us when to get in and when to get out. All right. So here's Tesla. So again, very similar to a lot of the other ones. And again, you can see how, where most people might be thinking, oh, is it going to continue going down? The fact that these gauges are at the bottom tells us that we're getting ready for a reversal back to the upside. So please be aware of that. Chances are, and I was telling our students on Monday, I said either by Friday, no later than next week, Wednesday, we'll probably start seeing markets start heading back up again. Okay. Google is another example of why we wait until the market is ready to do something. Because Google on this day with this green candle was telling us to wait and hold. We knew that Google was at the bottom. It looked like it had a very good day that day, but I said, you know what? Simply because one, we didn't get a directive saying we should buy. Two, the sentiment was still bearish because of the red. And three, the overall S&P 500 was looking like it's ready to go down. I said, let's hold off on getting onto Google because what would typically happen is a lot of stocks will struggle to go higher until the market is ready to go higher, right? And then what happened is it's stalling, and that's okay. But notice that Google didn't drop as ferociously as some of the other stocks are dropping. And that's because it's just waiting. They are waiting until the market is getting ready to go higher. So again, another stock that looks extremely well set, is setting up very, very well for the potential for it to go higher. So now, come next week, when we anticipate the market to start heading higher, should we come over here and see that we are now going from this bottom, now we have, instead of risky up here, it's telling us to buy, the sentiment turns to bullish, and the directive is to tell us to start buying, and watch how this will start heading higher. So this is where I tell people, get ready. Like I was literally telling people, look, move money over to your trading account. If you need to move money over to your trading account, this is the time to be doing it. And if you do this well, and what we teach with, some of our options trade now, you can literally get into some of these options that would double in price. And, most people are not aware of this, but if you take $1,000 and double it 10 times, you get to $1 million. And so this is why we focus on quality setups, times when we know the market is really, really ready to go. You do that, and we're talking about over a period of 2 to 3 weeks, swing trading, doubling your money, with these options trade. We look at the seasonality, we see that, hey, all these gives us ways on how to figure out what to do, when to do with them, and then we just position ourselves for it, let it double once, put that money aside, wait for the next good setup, do that again, wait for the next setup, do that again. You do this 10 times, even if you start with $1,000, you can be very, very close, if not already past $1 million, right? So needless to say, that's kind of like what we have here. I'm going to close out by saying, if you want to know, and hey, look, here's a scan that we did on all these stocks, these are all stocks that are ready to go. Seasonality wise, every single one of these, they give us June 19th for Southwest Airlines, Alaska Airlines, June 19th, ready to take off. Zion, June 29th, right? United Pacific, June 29th. All these stocks are getting ready to head higher. And so you just have to pick the right one. It gives you an idea of what percentage to expect. So now when you're trading options on these, it's not too hard to get double, if not close to double, okay? So I'm gonna do this because I know my time is up. If you want to do this, go to rightside trading.io/pricing. This is where we are offering discounts on our software. Okay, so thanks for that, David. But it's let me put this in here. Yes, there you go. Thank you. rightsitetrading.io/price. And if you go over here, you get the essentials. The premium is what I'll suggest you guys jump into to get the full access of what we have to offer. Thank you for that. The bell has already gone off. That's my time. Let me go ahead and turn it over to David, and Harry is going to be our next speaker.
Yeah. Okay. I think I'm unmuted. Okay. Thanks, Wally.
You're welcome. Thank you.
All right. All right. Yeah. So be sure to check out Wally's site there. And all right. So to close out the day for us is Harry Boxer. Harry, are you there?
I am indeed. Can you hear me?
Yeah. Sounds good.
Okay.
All right. Wally, I'm going to turn your screen share off. And Harry, you should be able to get set up now.
Okay, hang on. And you're seeing a stock called SpaceX?
Yes. Looks good.
Okay.
All right. All right. Are you ready to start?
Sure. I mean, are there any, let's see, any questions up front for people who want to me to analyze their trade?
Yeah, hopefully, yeah, people will start putting in symbols, but yeah, if you have anything you want to talk about to start us off,
Okay.
go for it.
Well, folks, hello again. It's Harry Boxer from the Tactical Trader. The TechTrader.com is a day trade and swing trade site. Been around since 2001. One of the first trading rooms on the internet, I've been told, and certainly one of the first few. We trade intraday patterns, 1 minute charts. I'm a big pattern recognition guy. I've been doing it for over half a century. I hate to say that, but that's the truth. And I think I got it right. I wrote a book called Profitable Day in Swing Trading, where you, in layman's terms, can get an idea of what my trading style is like. But up front, I'm going to just say, if you want to come into my site, just go to thetechtrader.com. Let me share this screen real quickly. Where, second, okay. Okay, you should see my site there with my face on it. And is it up?
Yeah, it is.
Okay.
It's there.
Okay. So, folks, when you go to join for free, I mean for free, no credit card necessary, 2-week trial. Just come in and enjoy the ride and make some money. Probably pay for most of your first years of subscription based on a couple weeks of profitable trading. I've been around, as I said, I've been around a long time. I have hundreds of people in the room with me. We have a very active room of some very seasoned traders who have been with me 10, 15, and some 20 years. Some very strong technical analyst type traders, and that's what we do. We're technical analysts. We trade technicals, not fundamentals. Although, in the morning when I come in every morning, I look for the 3 things you got to do every day when you come in. You have to be, number one, prepared, and preparation is part of doing your research in the morning before the opening in pre-market, because I will give you pre-market trades, and a lot of them work very, very well. I'll also give you some after the market opens, but usually it's anywhere between 8 to 12 times stocks a day where you'll see stocks that are breaking out, running and trending, et cetera, et cetera. I hope to be able to give you my opinion on any stock that you are interested in today. I've been doing technical analysis work for, as I said, over half a century. And so I think you can get a pretty good readout on whatever stocks you want. So go ahead and post, and we'll start going. I see a couple there already. And we'll start off with Google. Now, my take on Google is that it was one of the strongest stocks on the Mag 7s. Okay, but and it still is.
Oh, hey Harry, we're still.
Oh
seeing your
yeah.
website.
Well, let me share that chart just a sec. Alrighty, just a moment. Coming up. You should be seeing my chart on Google right now.
Yes. Yeah, I see Google now.
Okay, good. Now, in the long-term chart on Google, obviously, it's a stellar chart. Anything that went from 91 to 400 and change over the last few years is a winner, to say the least. Recently, after peaking out over 410 or so, it's in a very orderly downtrend. In the last 4 weeks, it dropped back from 410 to the low yesterday of 346. Not terrible, considering what some of these other tech stocks have done. Of course, this is a much bigger large cap stock. You take a look at, and I draw these lines in there for a reason. The prior high back in February, and this congestion range and breakout point, and the gap fill, and the moving average, the 50-period moving average, all in conjunction in this zone. This is an area where you want to hold. Now, if you buy Google here, or if you're in it, you want to stop under 345.46. I don't want underneath that because it's vulnerable down into the, for 30, 40 points to the downside. Now, what you really want to look for, and always best to look at it on an hourly basis, because you can see the trend clearly. What we really want to take a look for is to make sure that if your Google is going to reverse, it's going to come back above this triple top, first break the downtrend line, break the moving averages, and as they should be curling up. If you take a close look, you'll see it moves up to the moving averages and it's consolidating right at the moving averages and just below the trend channel. So we're going to watch for a move, number one, over 366.5, and then over 373. You get a breakout above both of those, you're probably on your way to much higher levels. On the other side of the coin, if it breaks this little pullback low here at 355, I'm going to probably, the way I trade is if I stop half my position immediately and I put the rest of it stop under that low, and hopefully if you're stopped out, you'll have an average of about 353 versus 360. So you'll have anywhere between a 5 to 7 point loss, but you're well protected for a much bigger loss. On the upside, once you get above the declining tops line and you make a run at resistance, which is very much apparent at 373, then you have a really decent shot at 393, or 20-point move from there. That's my take on Google short term. On a long-term basis, obviously, this is key support, and you don't want to go below that because then you're much more vulnerable to what could be a pullback to this trend. As I said, down towards as much as 323 from 360. So be very careful here. This is either going to reverse quickly or it's going to extend to the downside. Next stock is AMPX, which happens to be a tech trader, or was a tech trader swing of mine. I love this chart in particular, Amperis. Some of you remember this. It used to be Ampex years ago. In any case, this is a long 1, 2, 3, 4, and the fifth wave looks choppy. And it did make a new all-time high, I believe all-time high. Not quite, but it got up to the all-time high and backed off. Well, you can see the platform of support at AMPX, 14.5, 14.25. Put your stop under 14, and it should be good for this. It should be protected. The next probable support level is somewhere around 10.5, so you want to be out on the 14 or something like that. And the upside would be a re-challenge of 20, 23, even as high as the spike high recently, back up towards 24.25. There's additional upside resistance at 27. So my targets are 24 and 27, the downside support, and I would implore you to put a stop under 14, 14.25. You don't want this to roll over. Look how much it's come up. Any stock, by the way, that's had this much of a run in the last year and a half, taking it from 61 cents to $24, like 40 times your money, is very vulnerable to profit taking, particularly if we have any kind of bear phase. I'm warning anybody who has a stock that's been up this much in this short a period of time, make sure you have stops in place. You cannot trade without stops and jeopardize your portfolio and or your capital. And you got to live to trade another day, as they say. Next stock is ENVA. And feel free, folks, to post any symbols, and I'll be glad to give you my take technically. ENVA going back. We've got in a fantastic uptrend. Credit services company. Let's just go back to 23. Enjoy your. It's incredible, folks. Just incredible how many stocks, most stocks, will run up in parallel trend lines, trend channels. This is a beauty. And actually made a new high today, all time, I believe. Indeed, it did. So when I scroll in on this thing here, looking at an hourly chart, see a much better perspective. What I see is a V bottom on a right-hand extension and inverse head and shoulders, or whatever you want to call it. But the bottom line is a breakthrough, a triple top, and on its way to 228.30. That would be my minimum target at this point. So if you're in this stock, you're in good shape. Don't be upset if you see it pull back, but you don't want to be. Look. Put it this way: 175 and 158, 57. Key support levels for the stock. Once you break that, look, usually when a stock breaks out of a double or triple top, if it comes down to test it, that's a key support level, because when resistance is broken, it becomes support technically. Anybody who knows anything about technical analysis will tell you that. So expect that the pullback should have support about 176. If it does that. If it doesn't, right now momentum is to the upside. And I'm not going to be shocked to see this get to about 205, maybe as much as 225 over the next few weeks and months should the market cooperate. If you get a bear phase, and you want to know where your stops are, and that would be, again, under 175.6 and then under 156.7 in that area. That's my take on ENVA. That's the best one I've seen so far today. It's a good looking chart. William, that's a good one. William also wants to know about the IWM. Obviously, small caps is the Russell 2000 index. Have been a phenomenal trend. Take a look at, but I do want to show you something else. Small caps have been fantastic for years now, and on a short-term basis. Since the April low, it's gone from 175-ish, about almost 300. That's a huge move for an index. So small caps have had a nice long 1, 2, 3, 4, and this is the fifth wave. I'd love to see this thing spike up towards 308 and maybe even 330, 35. But those are potential targets based on the long-term angles of ascent. Doesn't mean we get there, but you do want to know where support lies. See this pullback low? 277 is a stop for me. Half of my position. The other half at 270. I want to make a point here. It's amazing to me psychologically, human nature, if someone makes a decision to sell something, they sell it all. You don't have to buy it all at the same time. You don't have to sell it all. Sell or buy in tranches or levels. If you see this break this level, you can sell half. If it breaks this level, you want to be out of it because it's probably testing the trend line all the way down to 59.60 range. So if you're trading IWM, you're looking for a breakout above this channel. This is usually a channel. It'll go over. It'll go like this and then spike up. This looks like to me a long 1, 2, 3, 4, and the fifth wave is underway, which could very well get up there. If we get some kind of upside blow off in the market, beyond where most people think, because everybody's bearish here. Okay, you name it, they're bearish. I've talked to a lot of real smart technical analysts that think the market goes down. I'm neutral. Do I think the market can go down? Absolutely. Is it poised to go down? Yeah. But the market is stubborn and will always go further than you think it's going to go. And every time the market dips and everybody panics and shorts, this is what you get. That kind of stuff, especially most small caps right now. If you look at this compared to the S&P, NDX, or even the transportation index, they look different. We have a symbol here, NWPX, also from William, who's a very active boy. NWPX infrastructure, metal fabrication. There's one, I thought I heard of every stock. I never heard of this stock. Is it extended and overbought? You betcha. Take a look at this run. from June of last year, when it was traded at 35, it's gone up to 135, 133. So it's up 100 points in a year. Is it? And I would be awfully careful. You want to stick with it and raise your stop. That's fine. It was in a. Looks like my mouse just went out of me. Okay, well that's great. Hang on a sec. So it looks to me like. Well, I'm having a problem with even my cursor. This is really something else. So let me just put it this way. I don't know what the heck just happened here. Stay with me a second, folks. The finger cursor not to work is really bizarre. Yeah, usually I have to shut down. I'm not going to do that. Let's just suffice it to say on NWPX, that last pullback low at around 104 is where I would stop it. But quite frankly, I don't want it under 110. If it gets under 110, I would stop half. I would stop about 102, 104. I would definitely stop the rest of it. But let this one run because it's in a really bullish configuration. It looks good. Okay, up next is I don't have anything up next. I can see. Hang on a sec. David, I'm having technical problems. I'm not sure why.
Oh, okay.
I'm having my screen keeps flashing on me, and for some reason my cursor is not working either. So it's going to be difficult. I can't even bring up the symbols. But I don't. Do you have any other symbols that you see right now? Because what comes after NWPX?
SLNH.
Wow, my screen for your service. My Zoom screen just went out. Oh, there it is again. SLNH. Yeah, there's a real problem here, and I don't know what it is. I may have to cut this short. I'm sorry, David.
Yeah, we could just stop if you wanted to, or I could share my chart and you could just talk about what you see.
Yeah, you can go ahead and do that.
Okay, hold on just a second.
Something I haven't seen before.
Okay, are you seeing my chart now?
No, that's the problem, David. I for some reason I lost the zoom, which is part of your screen. I mean, in other words, your screen's in.
Do you have a lot of windows open?
Let me just call it a day. I can't.
Okay.
Not much. I have windows open, but I can't access them because my cursor's not able to. Wait a second. Let me see something. You are sharing stuff. Yeah. I can't. I just can't get to it. That's the problem.
Okay. Yeah, we can just end there. But
yeah, and my apologies, folks. And feel free to email me at harry@thetechtrader.com or support would be better. Support@thetechtrader.com with any questions you have. I'll give you free advice and analyze your trade personally and send the email back to you or send a note to you, give you my take on whatever stocks you may have in mind. And again, my apologies for technical problems we're having.
Okay. Yeah. No problem. Yeah, it happens. We've had a few technical issues today, so.
You have? Boy. Okay.
Oh, yeah. Just random things.
Yep.
But
all right. Well, thanks for being here, everybody, and go to thetechtrader.com and check out. Just join for free, no credit card necessary, and be part of our team.
All right. Sounds good.
Thanks, Harry. Right. Bye-bye.
All right. Yeah, so that's it for today. Yeah, a lot of great analysis today. So let me give you the YouTube link. And we did live stream the whole day to YouTube. So everything is archived instantly. You can go back and watch any part of today's event at any time. And then also I did record each session individually, and I'll have the individual recordings with notes up and available within a few hours, or very early tomorrow morning at the latest. And let's see here. Let me give you the other link too. All right, if you want to bookmark this last link, that will become the full archive page for this event as soon as I can get that processed. So, all right, so that's it for today. If you have any questions or feedback or other comments or anything about today, you can simply reply to any Timing Research email that comes directly to me, or go to the contact page on TimingResearch.com. Also, mark your calendars. Mark your calendars, or add the Timing Research calendar to your Google Calendar with that link I just posted. Our next big event, big 3-day event, is coming up in just under a month. That will be our favorite indicators event, and that will be July 7th, 8th, and 9th. And we'll have up to 30 presentations over 3 days, all about favorite indicators for trading. So that's always exciting. We do that one every year, and yeah, that's always a good event. So, and then I can also go ahead and tell you the days for the other 2 big events for the rest of the year. So our annual Fibonacci and Elliott Wave event will be September 8th, 9th, and 10th this year. And then our big end of the year Friendsgiving event will be the week before Thanksgiving. So that'll be November 17th, 18th, and 19th. So you can hit that link and add the official public Timing Research calendar to your Google Calendar and get updates on all these events. Or if you want to just write these down again, favorite indicators will be July 7th, 8th, and 9th. Fibonacci and Elliott Wave will be September 8th, 9th, and 10th. And then Friendsgiving will be November 17th, 18th, and 19th. So, all right, that's it for today. Thanks, everyone.